driver going forward is user growth. As a result, he has taken down his estimates that could be dragging on these other internet shares. But something else that could be at play, since oil is the big story today, that big rally in oil that you just were talking about. We go into the Bloomberg and we take a look at BTV 5201. We may be looking at a bit of a sector rotation, basically out of technology and into energy. Our team did reach out to Ari Waldover at Oppenheimer, and he agrees there is a sector rotation, and we see the energy sector doing very well there in orange. He thinks there is a sector rotation into energy. In white is the tech sector. We do see a little bit of a decline, but where Ari Wald really thinks money is coming out of are the defensive shares, the utility shares there in blue. So pretty interesting there. As for some of the top energy stocks, one part of the energy complex today that's just outperforming in a huge way are some of the U.S. shale producers, including Continental Resources and Oasis Petroleum. Now, Mike Kelly over at Seaport Global earlier told us these are two of his favorite names. He really likes Continental Resources for the fact that the company is not hedged in 2017. So if oil does rise, it'll clearly flow right through to the bottom line for the company. As for Oasis Petroleum, he did meet with management recently, and out of those meetings, he believes that they could report in their next quarterly report that their wells are 20% better than what investors are thinking right now. So perhaps some upside to numbers there for Oasis Petroleum, Scarlett.
A reassessing of prospects. Abigail Doolittle, thank you so much.
What'd you miss? President-elect Donald Trump said today he plans to nominate former Goldman Sachs partner Steven Mnuchin as the next U.S. Treasury Secretary. Mnuchin has said his main focus will be tax reform. Financial markets have been optimistic since Trump's election, thanks to hopes of business-friendly tax reform. But our next guest says some of those reforms could hit investors in unexpected ways. Connor Sen is a Bloomberg View columnist and a portfolio manager at New River Investments. He joins us now from Atlanta. Connor, since the election, it's just been a party in U.S. financial markets. Everyone's thinking growth, tax cuts, regulatory rollbacks, all good, finance is back. What might they be missing?
Well, I think to your point about tax reform, one of the big things people have been talking about is the potential of repatriating overseas cash and what a windfall that could be for stock markets. But one way to think about that is any money that comes over immediately gets taxed. So you might see an immediately $50 or $100 billion tax bill to corporate America. And if you just think of it that way, it could be a big liquidity drain on markets in 2017.
Do we have any historical examples to point to? I mean, under George W. Bush, there was a tax repatriation as well, overseas cash repatriation, I should say. Did that result in what you're forecasting?
I don't know exactly when that happened. It was 2004. We had a lot of volatility, but I have seen that it wasn't that meaningful of an impact on markets at the time.
What about the bigger picture? Obviously, Trump making a big deal, the carrier plant. Part of the reason that Trump won is because he did shockingly well in these Rust Belt states, which Republicans haven't done well in a while. He's making a big deal about this carrier plant, which is going to keep some jobs in Indiana. Is there any prospect in your view that he could change the trajectory of the economy in those states?
Well, I think everyone's been so focused on, when it talks about trade, China and Mexico and overseas places where these jobs have moved. But the American South has been a big winner as well. And, even if we build a wall with Mexico, we still have I-65 that you can drive from Indianapolis to Nashville, and nothing's preventing carrier from moving production a few states south.
So the bigger issue really is the demographics, the aging of the workforce in places like the Rust Belt, whether it's Wisconsin or Ohio, and less about globalization, China, Mexico stealing some of the jobs.
Right. If you're an employer in these places thinking about your employment needs 5, 10, 20 years down the road, and you see a shrinking population, you've got to get worried. And so you have to figure out where to do your production, where you can find a workforce to staff up, and that's just not in the rural and mid-sized cities in the Midwest.
So do you think there's any hope for a Rust Belt revival, or should the government not even think about that and say, you know what, the future of America is in the South, it's in the big cities, it's in the warmer areas, and we just try to mitigate the pain as much as possible as a state like Wisconsin or Minnesota, Indiana bleeds jobs?
Well, I think looking at the carrier deal, it looks like sort of a very traditional tax giveaway to keep production in the state. And so that can work for a while. The question is just from the standpoint of Trump's Republican Party, will Georgia and Florida and Texas and these southern Republican states be happy if Trumpism turns into giveaways to Midwest states, potentially starving these southern states of new talent and new production? So maybe you'll see a North versus South production war.
There's a role that the universities could play here. University of Wisconsin, Ohio State, they educate a lot of the young people in those states, but the graduates who are successful end up leaving those states to go elsewhere, whether it's the West Coast, whether it's the East Coast, whether it's the burgeoning South, rather than building up some of their expertise in their home state.
Right, and within these Midwest states, you saw that the urban areas and the college campuses as well were very, very Democrat, while the mid-sized sort of post-industrial cities and the rural areas were very Republican. So you see that urban-rural divide even within the state, and the question is, even if Madison can thrive and West Lafayette in Indiana, what does that mean for the rest of the state? And it just doesn't seem like we can do anything there.
You know, speaking of the South, obviously one of the fascinating trends in U.S. politics is that Hillary Clinton did decent in Georgia, your state. She did decent in Texas, though obviously she couldn't flip her over those states, and then did obviously very poorly in the upper Midwest. Democrats banking on the fact that maybe the South could turn blue in a few cycles. What are the key drivers of that trend? You have a great perspective on that. How much is changing in the racial composition? How much is the professionalization, more of these sort of new companies building in the South? Like, what are the different factors going on here?
Well, something I was talking about a couple years ago is that if you look at what happened between 2004 and 2012, you had in these sort of border states, whether it's West Virginia, Missouri, Indiana, places like that, the rural whites started voting like Southern whites. And so you sort of saw this sort of Southern white voting pattern moving north. And so the thing that I thought would eventually happen, not this year, but in the future, was that you would eventually get what Trump did in the rural Midwest, and he turned rural Wisconsin and rural Minnesota and rural Michigan into rural Georgia. And so the question for the Democratic Party going forward is who will be that candidate who can get suburban Atlanta, suburban Houston, suburban Phoenix to vote like suburban Chicago and suburban Boston and suburban Philadelphia. And so I do think that will happen. The question is just how will that happen?
Your Atlanta is doing well. Georgia's doing better. What can states like Ohio, Wisconsin learn? What are the best practices from a place like Atlanta they could pick up and implement in Ohio, in Wisconsin, outside of the big cities?
Well, ironically, what sort of got the South on the new South going was sort of this recruitment sort of mentality and trying to bring in people from the North. Actually, one of the things that started that off was big college bowls. So like the Orange Bowl in Florida and the Rose Bowl in California were ways to get well-educated Midwesterners to take vacations in the winter. So, you know, ironically, Trump has turned to sort of putting up walls and restricting trade and immigration and sort of recruitment. And the Midwest really needs to take on this openness and inclusiveness attitude to get people to appreciate it for what it has to offer. It's legacy institutions, like you said, with colleges, with its low cost of living, with plentiful water. So it really needs to sort of adopt a lot of the practices that the South did 50 or 60 years ago.
Well, these cycles take a long time, but it'll be interesting to watch them play out. Connor Sen, Bloomberg View columnist and portfolio manager at New River Investments. Thanks for joining us.
Thanks for having me.
Coming up, Steve Mnuchin said today Fannie Mae and Freddie Mac should leave government control. Next up, we have a feisty debate on what to do next with these two mortgage financiers. This is Bloomberg. What'd you miss? Mortgage giants Fannie Mae and Freddie Mac were put under federal control during the global financial crisis. But President-elect Donald Trump's Treasury Secretary pick, Steven Mnuchin, wants to set them free. The stocks have been on a tear since Donald Trump's victory. And you can see here in Bloomberg chart G#BTV 5078. This is a normalized chart of Fannie and Freddie, and so it starts at 100. But, Joe, if you go back to the start of the year, you can see that they dipped and lost about 50% of their value by mid-January before recovering. And really, the leg higher was right after the election, and then the leg higher today was on Steven Mnuchin being Donald Trump's pick.
And, of course, the bet is that if they could be fully privatized and that profits could go back to their shareholders, that those stocks, I mean, it's like a call option that could surge massively in that event.
And, of course, John Paulson, who is a Donald Trump advisor and supporter, has a big bet on Fannie and Freddie, a big long bet.
Absolutely. So is Fannie and Freddie Mac, are they better off privatized, and what would that mean for the overall economy? Josh Rosner, managing partner at Graham Fisher, and Chris Whalen, the head of research at Kroll Bond Agency, weighed in earlier today on Bloomberg TV.
Frankly, what I heard was a very different tone. We've had Fannie and Freddie in government conservatorship since 2008. We've seen some, frankly, somewhat radical, ideologically driven proposals put forward in Washington for the past 8 years. None of them really have focused on protecting the taxpayer. Frankly, the government still controlling them in the way they do leaves the taxpayer fully exposed, especially since they have no real capital. So what I heard was someone who actually lived on the mortgage desk in his past and has a great understanding for deals under a president who is a believer in making things happen in deals and not letting the perfect be the enemy of the good, saying, you know what, time to let go of ideology, move towards pragmatism. There is a deal to be done for the benefit of the taxpayer. Let's get it done.
What would that deal be, though, John?
Well, I mean, I think that deal is, obviously, we don't know what that deal is. I think it's either one of two things, which is fully private enterprises, which I don't think is realistic. I think that's what we saw Jeb Hensarling propose. It's got problems for a whole host of reasons. Social problems in terms of consumer access to credit in the secondary mortgage market, but it also has other problems. So I think we're leaning towards, or I've been expecting for a long time, that the rational outcome is some form of a utility, where you take...
Yeah, but Josh, this has never gained any traction, right? That's not going to be supported.
No. So if you think about it, your electric, your water, your gas, your sewer companies...
we're not saying it's not a good idea.
No. They are private companies. They are not government-controlled.
But they can go into bankruptcy, Josh. What you're saying is there would be a government backstop.
No, what I'm saying is that you'd have adequate capital, which, in my calculations, is about 4.5 times what has ever been taken in a crisis, so that the markets understand that there is no need for and there is no government support.
So would they be able to fail?
So, of course, they would be able to fail, and that's part of the other issue.
So there would be no government rescues in the future?
Well, if you're overcapitalized to the tune of 4 times the worst historic rate,
well,
are you going to get there?
Never say never.
No, of course you can. And you can't plan for never. You can plan for doing the best you can to protect the taxpayer, which is not what's been happening.
Right.
And you can do what you can to make sure that there is a market that functions, a secondary mortgage market. And so a utility model is the model. And so then comes the question, this is the complexity. What do you do about the forward market, the to-be-announced market, the TBA market? But if you've got enough capital that you don't really have to worry about it, that's actually more of a messaging thing. So you need a very small government line that's funded, it's paid for, it's not supported by the government, that is behind, multiples of this.
Let's agree that this is a good idea. What lawmaker has ever said that they will support this idea or fight for this idea?
Well, so that comes to the next thing, which is, again, we've had ideology driving both the extremes of the Corker-Warner, Hensarling perspectives. I think ideology is out the window. I think this is a guy who, frankly, would say you're fired to both of them for failed attempts over the past 6 years, 8 years. And I think we are going to see a pragmatic approach. Now, do we think that Hensarling, Corker, Warner, Crapo, Johnson, well, not Johnson, he's not there anymore, really want to pick a fight with the new incoming president when they've got much higher priority issues? Dodd-Frank, financial regulation.
Yeah, but Josh, come on, be serious. This is one of the most problematic discussions on Capitol Hill. Housing draws an enormous crowd, and when you already can see declining volumes next year, messing around with the GSEs.
Actually, it's the other way around.
No, excuse me. It's a recipe for having everyone in the housing complex come out of the woodwork.
Functionally, the GSEs, what I'm suggesting is going to happen, will operate much the same way they do today. The rest of the market has failed to operate at all.
That was Chris Whalen of Kroll Bond Rating Agency and Josh Rosner of Graham Fisher & Company.
It is time now for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. A victory for President-elect Donald Trump, who campaigned on the promise to bring back factory jobs to America. Carrier has agreed to keep about 1,000 jobs at an Indiana factory that had been set to move to Mexico. Brazil's third biggest brokerage is prepping to go public. That is according to two people with direct knowledge of the matter who also say that XP Investimentos could file by the second half of next year. XP is backed by private equity firm General Atlantic, which could sell a stake through the offering. XP is said to be expanding in New York, Miami, and Geneva to cater to high net worth investors. $20 billion, that's how much Satya Nadella says Microsoft expects to have an annualized revenue from its corporate cloud business in 2018. The company's CEO spoke today at their shareholders meeting, saying revenue from the business already hit $13 billion last quarter. Microsoft has been investing in new data centers. Nadella also touted the levels of artificial intelligence built into new machines. Twitter is taking its streaming content ambitions into a galaxy far, far away. The social media site has joined forces with Disney and People magazine in an exclusive live stream of the upcoming feature film Rogue One, a Star Wars story. The live stream, hosted by People magazine, is slated for Friday at 1 p.m. New York time at rogue1.twitter.com. The movie hits U.S. theaters on December 16th. And that is your Business Flash update. Alex Steele is going to be so excited for that.
I know. Up next, take a look at this. Harold Hamm, the wealthiest energy billionaire in the U.S., became $3 billion richer today when shares of his continental resources rallied as much as 22%. Hamm, an energy advisor to President-elect Donald Trump, is the world's 66th richest person on the Bloomberg Billionaires Index with a net worth of $13.8 billion. And we'll have more interesting charts next. This is Bloomberg.
what'd you miss? Parallels between the U.S. equity market following the election of Donald Trump with the heightened expectations in Japan following the election of Shinzo Abe in Japan in December of 2012. This was an observation made by David Kostin of Goldman Sachs. Now, Dan Curtis, our producer here, put together this chart. The yellow line is Japan's Topix index. And what happened back in December of 2012 is that the Topix rallied about 6% in the 10 days following Abe's election and before he took office. It then surged more than 50% within 5 months. Then you look at this white line in the bottom here. Matt, if you could come back to this line over here, this white line shows the S&P 500 right now since Donald Trump's election. And what's interesting there, of course, is that the gains have been more modest. David Kostin says that he doesn't actually see U.S. equities performing as well as the Topix. He's calling for the S&P 500 to rally to 2,400. Wow. That's just 9% over the next 4 months. So you can see a slight upswing there. But then it kind of stalls out. And the S&P 500, according to David Kostin of Goldman Sachs, will end 2017 at around 2,300. So all in all, it's not a huge gain. The reasons for this, a couple of them, less than expected tax cuts. Remember, a lot of talk about tax cuts, but we don't know the details yet. And higher inflation and interest rates that will limit upward revisions in earnings per share and also PE multiples expansion. So a lot to dig through here as we look at what can happen from optimism fueled by an election.
Yeah, some interesting parallels and differences, because another thing, of course, after Abe is we saw significant weakening of the yen.
Yes.
Just the opposite of what we've seen so far, where the dollar is incredibly strong. Also, we know that Abe wanted looser monetary policy to boost inflation. We don't really know if that's Trump's stance. In fact, arguably, some of his people want tighter policy. But I like the comparison. I want to look at also the sort of effective rates that Trump has had. And I'm looking at Treasury yields, which have had their worst month in a long time. In fact, if you look here, we see the last time that yields on U.S. Treasuries jumped this hard. That was in 2013. Of course, that was the taper tantrum when the Fed first started giving hints that it would wind down its expansion of the balance sheet. We've seen the biggest jump. If we now go to the end there, this is the biggest jump in 10-year yields since then. The Trumper tantrum, sort of the equivalent this time.
You just made that up, didn't you?
I made it up. I don't know. I probably didn't even make it up. But it's sort of interesting. And if Treasuries overall having their worst month since 2009. So the question is, are we seeing a major regime shift that will see significantly higher yields? Does this really change the calculation on monetary policy and fiscal policy and trade and tax policy? Is this really going to, because of course yields have been going down for a few decades now, or is this just like the taper tantrum, a brief blip on a sort of ongoing descent? But it's kind of like the big question right now, and you kind of think that the people who make a lot of money in the future are the people who get this question right, because in addition to treasuries, a lot of other asset classes, whether it's EM or commodities, currencies, all take their cues from this question. Yep. So you better get it right.
The other thing that's interesting, of course, is that yields seem to have topped out for now. And, even with the big move up, we're just all the way back to the levels seen in 2016.
Yes, exactly. We're not even at levels, levels that we've seen a year ago. So It's not huge, but the severity of the move has people wondering whether there's a big change.
Rate of change. All right, the market close is next. Take a look at the major averages with less than 4 minutes to go before the close. The S&P now negative, down 2 points. The Dow Jones Industrial Average adding another 37 points. The Nasdaq also under pressure, off by 0.9%. This is Bloomberg. We're moments away from the closing bell. What'd you miss? U.S. stocks are mixed, but crude jumping to one-month highs as OPEC ministers forged a deal to cut production, sparking a rally in global energy stocks. I'm Scarlett Fu.
And I'm Joe Weisenthal. I want to welcome the viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. U.S. stocks closing mixed, with the S&P 500 closing in the red, just barely, off by 5 points right now after the OPEC decision. Energy was the best performer in the S&P 500, though, on crude oil's jump. Brent, for instance, best day since February.
Yeah, pretty remarkable split. Once again, we saw those bond proxies doing pretty well. Oil, though, just really the story of the day. Massive surge, which we'll be talking about.
And let's take a look at the sector breakdown today. If you look at IMAP Go on the Bloomberg, you have energy stocks, you have financial stocks, and then you have basically everyone else. Energy stocks up by 4.8% on the day. If we drill into it, you could see all green here. And again, looking further into energy, the only sector that had a loss was the refining and marketing. They don't do as well with oil prices rising because they lose some of their margin. But other than that, it's green pretty much across the board. Energy equipment, 100% in terms of the members of that group gaining. So a big, big day for these energy names. And if you look at the best performers in the S&P 500, energy companies dominate. And these are a couple of the big names here. Marathon Oil putting on 21%, Transocean. Wow. 17% gain. Murphy Oil up 15%. Ditto for Newfield Exploration. It was a blockbuster day for these energy names.
That is some huge moves. Let's take a quick look at the government bond market, starting with the 2- and 10-year yields. Yields up across the board. 10-year yield at 2.38. We just talked about 10-year yields around the highest level in a year. 2-year yields higher. Got more good data today. The economy seems to be, we got ADP, which is very strong ahead of Friday's jobs report. It really feels like everything's coming together for higher rates, so you definitely want to keep your eyes out on that. And a quick look at a one-month chart of 10-year yields. You can see how they've really just taken off since that election earlier in the month. They were at 1.78 start of the month, so pretty impressive month for
pretty
rates.
Remarkable. And of course, along with that, you've got the move up in the dollar. There's very little standing in the way of a stronger dollar right now. This is the Bloomberg Dollar Index. It's drifting higher yet again. Just before Thanksgiving, it surpassed the high we saw back in January, back when the Fed was predicting, 4 rate increases for 2016. We've now come full circle because, of course, investors are pricing in a faster pace of tightening in 2017. The OPEC production cut, meantime, is boosting some oil-linked currencies. Here we're talking about the Colombian peso, the Russian ruble, the Norwegian krone, and the Canadian dollar. In fact, the krone and the CAD were the only G10 currencies to gain versus the dollar. Traders actually said that today's gains in these currencies are actually being held back. They're being restrained by the underlying strength in the dollar. So they would have gained even more if it weren't for the stronger dollar.
And let's look at commodities. And, of course, it's all about oil. NYMEX WTI crude gaining over nearly 9%. I mean, that's kind of all you need to see right there. I mean, that is just a gigantic move. One of the moves like this happened only a few times in the last 10 years. There's a mammoth move on oil on this OPEC deal. And let's look at a one-month chart of WTI, because you could see all the different swings in the middle of the month that looked like, oil had gotten down to 43. It looked like there wasn't going to be anything. Then some optimism had arisen. Then just a couple of days ago it was down below 46. And then today's surge. So it's been a real back and forth.
All right, those are today's market minutes.
All right, we've gotten reaction all day here on Bloomberg about the OPEC deal. Here's just 2 voices that we've heard from today regarding what happened.
Our view was we expected a deal. And one of the key reasons is that the economics, not the politics, but the economics of a deal were incredibly compelling. They had a rebalanced market in the line of sight. So what they had to do was to actually cut production and pull forward an already balanced market. Now, why do they want to do that? The main reason is inventory normalization, not price.
For us who are long-term investors, we tend to look at the group of people who are gathering in Vienna and say they're fighting against history. Unfortunately, history has kind of spoken, and that is in technology. The cost of producing crude, largely due to fracking technology, has dramatically changed the marginal economics of oil. And it's not going back to where it was.
All All right, I want to take a look at OPEC supply versus prices. Come inside the Bloomberg here. This is a chart, G#BTV3305. The yellow line is OPEC output. The blue line is WTI crude, which is the U.S. benchmark. The purple line is Brent crude, which is the international benchmark. And for the most part, OPEC production and prices move together. There's the ramp up before the financial crisis and then the plunge in early 2009. There's the China-fueled commodity boom and then bust, of course. And then what happened since then? November 2014, Saudi Arabia shifted its strategy unexpectedly. It says, basically, we'll keep pumping for oil. We're going to go after market share as opposed to price. And the goal was to protect share and drive U.S. shale producers out of business.
That's a great chart, and that gap is massive, and you just don't see it anywhere else.
No, you don't.
Years.
All right, for more on OPEC's historic deal, I want to bring in Bloomberg's David Marino, who covers oil, and Philip Verlager, president of PK Verlager, on the phone. So, David, let me start with you here, because when we say that the deal has gotten done, there still are a couple of hiccups that have to be ironed out, aren't there?
Sure. I mean, well, the first hiccup is, are they actually going to comply with the quotas? And there's been a history of some questionable fudging and cheating on quotas.
They don't have the best track record.
No. And if you look at Russia, there's been a long history of promising or suggesting that they would also cut and encouraging OPEC to cut and then not themselves cutting. So the question is, will it actually happen?
Philip, I want to bring in you. I mean, let's say it does happen, assuming this agreement actually is put in place. One of the tensions is that the different countries within OPEC all have different interests. Saudi's interests are different from Iran's interests. How do you think that's going to play out forward? Are they going to cheat more? Will there be a period where they can actually sort of keep it together and find a strategy on which they're all aligned?
Well, I'll start by saying David Hunt of Prudential was right on where he said history was against them. But Saudi Minister Ali Al-Fallah has to be called a $56 billion man, because he has essentially, at annual rates, added $56 billion to Saudi income by talking. It was clear, and it has been clear for a long time, that Saudi shouldn't agree to do anything unless they got others to cut 3 barrels or 4 barrels for every barrel they cut in production, and that's what they did. At the same time, what everybody misses is they talk about production. And Saudi Arabia is sitting on 300 million barrels of oil inventories and has just said that it's made more oil available to Asian customers. And they may actually boost sales because they're in a battle for market share with Russia. So if Russia complies and doesn't try to push up market share, then Saudi Arabia will comply, and the prices will stay high for a while. But again, history is ultimately against them. And, to think about other countries, this is every man for himself. It has been for a long time. And, as an economist, I've studied these sort of cartels, and they don't work.
I like the way you put that, every man for himself. David, when Saudi Arabia went ahead with its market share first strategy, basically that was a pump at will policy. Has that been abandoned, or has it just been temporarily suspended, do you think?
It's really hard to tell. I mean, until we see the data on what is actually being produced, what's being exported, the proof is in the pudding.
How about, this is another way of asking the same question. Did it work? When Saudi Arabia pursued that strategy, did it get what it wanted?
You can say it got part of the way there. A number of companies went bankrupt. U.S. production did fall, but not to the extent that it cleaned up or stopped a global glut of supply. I mean, that didn't keep the price higher. That didn't eventually lead to a jump in production. There's still a cap, you could say, on how high prices can go before more production comes online.
So, Philip, what do you see as the prospects for U.S. oil right now and the broader non-OPEC supply picture?
Well, U.S. oil has just gotten an early Christmas present. And this is a permanent Christmas present if President Trump follows through with his tax policies, which are going to essentially impose a fee of 20% on imported prices. And so it will ensure that U.S. producers can keep cranking ahead, and they've brought costs down. Given the increased reserves, the U.S. will just keep increasing at a faster and faster rate. It was already starting to recover. It's going to recover even more. Other non-OPEC countries, such as Canada and so on, will suffer. Canada especially, because they, with the border tax adjustment that Trump and the Republicans are going to propose, they'll face a 20% fee bringing their oil in here. So Canada will suffer. As far as the other OPEC countries, it's going to depend really on what happens to the global economy. And you talked earlier when you were coming in about the strength of the dollar and why petro currencies weren't up so much versus the dollar. A lot of the emerging market countries are going to suffer the way they did in 1989, 1999, or 1998 with the Asian debt crisis. So it is not at all clear that in the long run it's going to work out well for anybody except for the American producers.
And with this U.S. production increase that we can expect, won't that hurt OPEC in the end? I mean, OPEC is making sure prices go up. That allows these U.S. producers to continue drilling and pumping. Doesn't OPEC shoot itself in the foot by basically bringing in more U.S. producers?
Absolutely, Scarlett. I mean, Abe Lincoln had the best line of all. You can fool all the people some of the time, some of the people all the time. And some of the people have been fooled. But with higher prices, what they've done and set in motion is ultimately going to lead to their own demise.
All right, fascinating conversation. Thank you both, David Marino of Bloomberg News and Philip Verliger.
It was another busy day at Trump Tower as the president-elect is busy assembling his cabinet. We're going to dig into how his new team may be shaping up and affecting the future of U.S. economic policy. This is Bloomberg.
Courtney Collins. Let's get to Bloomberg's First Word News. First up, President-elect Donald Trump says he's leaving his business empire so he can fully focus on the White House. In a tweet, Trump said he'll hold a news conference with his children on December 15th. U.S. Senator Richard Blumenthal tells Bloomberg Television that he wants a special counsel for Trump's business conflicts.
He needs to sell or divest, and he needs to do it to an independent, disinterested party, not to his children. Because so long as he has an interest, and we all know as parents, if our children have assets, we have an interest.
Critics say Trump should put his business interests in a blind trust. Planned Parenthood and its allies filed lawsuits today in North Carolina, Missouri, and Alaska, taking on laws they view as unconstitutional. Limits on abortions, the restrictions being challenged in Missouri, are similar to those the Supreme Court recently struck down in Texas. They require abortion clinics to meet standards for surgical centers and mandate that doctors have admitting privileges to nearby hospitals. A Saudi prince is issuing a public call for women to be allowed to drive in the conservative kingdom. Prince Al-Walid bin Talal tweeted in Arabic and English, "Stop the debate. Time for women to drive." Saudi Arabia is the only country in the world that doesn't allow women to drive. And Fidel Castro's ashes have begun a 4-day journey across the island nation to their final resting place in the eastern city of Santiago. Crowds waved Cuban flags and chanted Fidel as the convoy passed by. The route traces in reverse the victory tour Castro took after seizing power in 1959. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg. Scarlett?
Thanks, Courtney. What'd you miss? Wall Street wins again as President-elect Donald Trump chooses more bankers and billionaires to fill his cabinet. The president-elect tapped former Goldman Sachs executive Steven Mnuchin to be his Treasury Secretary and billionaire investor Wilbur Ross to lead the Commerce Department. Trump even met with Goldman Sachs president and COO Gary Cohn inside Trump Tower. Joining us now from D.C. are Bloomberg's Saleha Mohsin, who covers economic policy and U.S. Treasury, and, of course, Alex Wayne, who covers the White House for Bloomberg Intelligence, or Bloomberg News, I should say. Saleha, let's start with you, because if personnel is policy, what do Trump's picks tell us about his policy?
Well, so far it's telling us that he is not actually draining the swamp. We have Anthony Scaramucci and Gary Cohn rumored to be somewhere possibly in the Trump administration, and we have firm picks in the cabinet. Wilbur Ross and Steven Mnuchin announced yesterday. We also have a lot of other Goldman Sachs alumnus. In addition to Mnuchin, there's also Steve Bannon, who is in there. So we're seeing loyalists, and we're seeing Wall Street.
Alex, explain some of these decisions from a political perspective. I mean, it doesn't look like that great for him politically.
You would think that his supporters who elected him on out of this populist fury against the government would be a little concerned about a bunch of Wall Street insiders showing up in Washington to run things. I think he's going to get a leash on this stuff, though, actually. I think the policies are going to matter more than the people he puts in positions of power. Wilbur Ross and Anthony Scaramucci and Gary Cohn and Steve Mnuchin are going to have to execute Trump's policies, not their own. And so if Trump sticks to the populist policies he campaigned on, he will probably get a pass from his supporters over his appointments.
I'm glad you bring that up, because that was my next question, Saleha. How firmly formed are President-elect Donald Trump's policies on how to get the economy growing 3 to 4%, for instance? I mean, is it going to be a case of Steven Mnuchin having a lot of free rein to get to that 3 to 4%, or really is it he's going to follow prescription already laid out by Donald Trump?
From what we heard from Steven Mnuchin this morning on his media tour, he is pretty much echoing what Donald Trump said as a candidate. He wants to see and really thinks that he will be able to bring GDP to 3 to 4% annualized. He sees jobs increasing. He sees infrastructure investments and tax reform helping this agenda. So he is echoing what Trump had said on the campaign trail when it comes to these points.
Alex, you say that, you think Trump will get a pass if he delivers on the populist policies. But it does seem like a lot of the appeal of Trump was the populist aesthetic and the fact that he was going to grind the elite's face in the dirt and humiliate them and just win, and that he would represent. I mean, I feel like
that's quite the image.
Yeah, but I feel like that's also part of what it was. Not necessarily a set of policy proposals, but the idea that he's not on the side of Wall Street. He is against them.
It just reminds me that Linda McMahon was actually at Trump Tower today, meeting with him, World Wrestling Association. This carrier thing is a good example of where Trump is delivering for his supporters. I mean, politically, this win over carrier is gold for him, and he's doing exactly what you've described. He's really taking carrier's face and their executives and rubbing them in the dirt. I mean, he campaigned to keep this plant open. And he's not even president yet, and he's managed to do it. Now, I think there's lots of criticism we could talk about as to whether this is sound economic policy to go around the country arguing with individual plant owners to try to save jobs. But he's already checked off one of his campaign promises, and he's not even in office yet.
Right, and of course he's going to take a victory lap tomorrow as well. He's supposed to go to Indianapolis with Indiana governor and his vice president-elect Mike Pence to tout what he has accomplished there. Saleha, my question to you on Steven Mnuchin and Wilbur Ross, for that matter, is will they go through the confirmation process quickly, as smoothly? Are there going to be any obstacles or hurdles to them being approved?
There are definitely going to be obstacles, at least when it comes to Steven Mnuchin. If you see the frosty response that we've gotten from Democrats, and, you know, there is a majority in Congress, but it's a slim majority in the Senate for Republicans, so they can't really afford to lose too many Republicans, and the Democrats do get to have their say. The number one issue that they'll be looking at is probably going to be Mr. Mnuchin's stewardship, purchase, and sale of IndyMac, which he renamed One West, a failed mortgage lender in California that essentially allowed him to profit from the subprime mortgage crisis in 2008 and 2009. There will be a lot of questions around that.
So, Saleha, and then I guess to both of you, obviously we're talking about today, some of these nominations seem good for Wall Street, don't necessarily seem populist. But what about on the trade side? From these picks, what do we know about how they would pursue trade deals, Wilbur Ross in particular? Saleha, what's your take on that?
You know, so far it sounds like they want to work together, Commerce and Treasury, both departments. They came on to a lot of shows together. The announcement for their nominations came together. They were talking as if they have probably cobbled together a few ideas on how to negotiate trade agreements. Mnuchin specifically said that when it comes to China and whether or not they're going to label them a currency manipulator or not, first of all, it depends on whether they are doing that or not, if it's warranted. But he also specified that he will work closely with the Commerce Department, with Wilbur Ross, on that issue.
Alex?
It'll be real interesting to see who Trump appoints as U.S. trade representative. There aren't a lot of Republicans that subscribe to his protectionist trade theories. So here is where he could potentially reach across the aisle, I think, and put in a protectionist Democrat. He said he will negotiate bilateral trade deals with all of the countries who were part of the Trans-Pacific Partnership, for example, which he, of course, is not going to allow to go into effect.
Or maybe that's a position for Mitt Romney.
Oh, that would be good.
All right, Alex Wayne, thank you so much. And of course, Bloomberg's Saleha Mohsen, we appreciate your joining us from Washington, D.C. Coming up next, investors just can't seem to get enough of the greenback these days. We'll look at what's going on in the bond market and why that makes it clear the dollar has more room to go. This is Bloomberg.
In San Francisco.
Fu, what'd you miss? U.S. Treasury is offering the highest yields relative to the rest of the world since 2007. Let's take a deep dive into the Bloomberg. A reminder that you can find the charts using the function at the bottom of the screen. So post-election, the big predominant themes have been a stronger dollar and a sell-off in Treasuries. Everything is being repriced off of that. The dollar is the white line. It's a Bloomberg dollar index. It keeps strengthening. And the blue line is the spread between U.S. Treasury yields and global yields. And you can see that the yield for U.S. Treasuries is the highest relative to the rest of the world since 2007. You got to go all the way back to 2007 for the blue line to be higher. The Bloomberg Dollar Index, the white line, currently at the highest level since 2004. It goes as far back as our data goes. The two pretty much reinforce each other.
Yeah.
It's kind of hard to see what's going to break this relationship in the near term.
Yeah, it's hard to know anything. I mean, in theory, you could imagine that like a really large spending boom or really easy money could weaken the dollar, perhaps if the Fed doesn't tighten as fast, because then you could still have that long end, which is more based on inflation and stuff. But as long as, if it looks like the Fed is going to tighten, and probably that's good.
And
for
as
the
long as we
dollar.
don't get any details on the spending by the Trump administration, which probably won't be forthcoming until first quarter of 2017, according to Goldman Sachs, you're going to see this trade continue.
And the details and timing, because even if we get a lot of spending, I mean, as you know, it's hard to get hard to get that money out the door sometimes.
Good point.
I'm looking at some good economic data. This came out yesterday, but it's pretty important. It's from the Conference Board Consumer Sentiment. And the white line here is called the labor differential, and that is basically the gap between people who see the job market, jobs being plentiful and jobs being hard to get. And the higher the white line goes, that means more people see jobs being plentiful. The view is that the job market is pretty good compared to where it's been. It's tied for its highest level since the financial crisis. And as you can see, the blue line is the perfect mirror virtually of that. That's the unemployment rate. So that's been going down. And with the labor differential line at its highest level since the crisis, that would suggest there's more room for the unemployment rate to drop. I mean, you know, we're at 4.9%. Economists think that that might be what they would characterize as full employment, but maybe it could go lower. Maybe it could go to 4.5 or 4%. Who knows?
Yeah, but you already see that in 2016, the blue line, the unemployment rate, has stalled out. I mean, it's plateaued. Right?
Yeah, the second half of this 2016, it really has stalled out, but maybe it's coming back.
All right. Meantime, we want to have another chart to show you, because with political upheaval from Brexit to the U.S. elections buffeting emerging markets, the world's most volatile currency has been the South African rand, and it's actually been a haven when you look at it as part of the carry trade. The dollar rand carry trade, that is the white line, has done better than emerging market carry trades, which is the blue line, or the MSCI Emerging Market Stock Index, the purple line, or the EM Local Sovereign Debt Index, which is the purple line. That's been a negative return there for the period. We're going to talk more about emerging markets coming up, specifically debt, with Bloomberg, I should say BlackRock's Pablo Goldberg. This is Bloomberg.
Courtney Collins. Let's get to Bloomberg's First Word News. Former vice presidential candidate Sarah Palin is under consideration for the position of Secretary of Veteran Affairs. That's according to a report from ABC News citing a close Palin aide and a top Trump transition official. Palin has reportedly been in talks with Trump's team. Congresswoman Nancy Pelosi survived a challenge from Representative Tim Ryan of Ohio to remain the top Democrat in the U.S. House. An aide says the vote was 134 to 63. Ryan had challenged whether Pelosi, who has led the Democrats since 2003, is still the right person to energize and convey an economic message for the party. The Green Party's Jill Stein is requesting a full-hand recount of Michigan's presidential vote. She's already requested recounts in Pennsylvania and Wisconsin. Donald Trump narrowly won all three states, and it's highly unlikely the outcomes will be reversed. The pilot of a chartered plane with 77 people aboard, including a Brazilian soccer team, told air traffic controllers he'd run out of fuel moments before crashing into the Andes near Medellin, Colombia. A recording from the air traffic tower leaked to W Radio reveals the pilot repeatedly requested permission to land due to a total electric failure and lack of fuel. Only 6 people survived. And the UN Security Council has voted to tighten sanctions on North Korea in response to its 5th and largest nuclear test in September. The Council unanimously approved the sanctions resolution today, with diplomats calling it a significant step forward. The new sanctions target North Korea's hard currency revenues by placing a cap on coal exports, cutting them by at least 62%. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg. Scarlett?
Thank you so much, Courtney. Let's get a recap of today's market action. We saw the S&P 500 dipping into the red by the close. The Dow, little changed, up just barely 2 points at 19,123. Tech was a laggard here, pulling on the Nasdaq, down by 1.1%. The big winners, Joe, of course, were those energy producers after OPEC agreed to a production cut for the first time in 8 years.
Energy and finance had a huge day in addition to the tech sell-off, which slammed the Nasdaq. All those bond proxies continuing to get hit, real estate, healthcare, utilities, anything that is safety, yield play, not doing well in this environment.
Not doing well, whether it's equities or treasuries for that matter. And a quick look at one stock that's moving in late trading. These are shares of Guess, tumbling by better than 12.5%. The retailer missing revenue and earnings estimates, also cutting its earnings forecast for its fiscal year 2017. Guess's CEO says the retail environment in the Americas remains, quote, challenging.
What do you miss? The rout in emerging market debt has all the marks of a defensive move, but it continues. It might easily turn into more of a panic. EM debt has suffered its biggest monthly loss since the so-called taper tantrum of 2013. But our next guest says despite all this, emerging market external balances are much healthier now. Joining us is Pablo Goldberg, senior strategist for BlackRock's emerging market debt team. Pablo, thank you so much for coming on. As the intro noted, worst month for EM since the taper tantrum, so those higher rates making EM less appealing. How much of the story is about simply what's going on in U.S. rates, and then how much are other factors, say the perceptions about trade, and how would you weight these different things?
Well, I think both things are coming into play. Obviously, there's been a duration shock that affects all fixed income assets. This is not a question about emerging market. It happens, across the fixed income space. But then we have this policy uncertainty that particularly generates some money back into the U.S., right? Adding a little bit, you were talking before about the dollar strength. So that is a little bit away from EM and back into the U.S. So you get the two effects actually playing at the same time.
Is there any way in which a stronger dollar might be positive for EM? I know that everyone's repricing to the stronger dollar world, this new reality, but could it end up being a positive for EM in any way?
I think what can be positive for EM is what may bring this stronger dollar. If the stronger dollar is brought by, let's say, infrastructure spending in the U.S., then you might see a pickup in commodity prices on the back of that, and that could end up being good for EM. If a stronger dollar, it is because the U.S. economy becomes more protectionist, well, that is not going to be very good for EM. So you need to see what is behind that strong dollar.
How challenging is it for EM, emerging market, people who owe money in emerging markets in dollars, with these stronger dollar debt? How much tension will there be, and do they have the balances to withstand that?
Yeah. I think that the question you're asking is, what is the right asset allocation between local currency, hard currency in this environment?
Was a better question.
In this environment, but I think that you were getting into that, no problem. And I think the answer is that you have seen actually emerging market currencies getting a little bit of a head in this environment, but you also have seen duration affecting spreads and yield across hard and local currency. I mean, going forward, you really need to make a call on the dollar, and
so that's really what it's all about. This call, it's about making a call on the dollar.
It's a call on the dollar and it's still a call on duration. Okay. I mean, where are we in the correction on duration? We think that part of the story of duration was a repricing of inflation expectations in the U.S. That were ridiculously low. Looks like the U.S. election has, in a way, coordinating a repricing of inflation expectation. That is probably 85–90% done. That move is done. Now, the question is about term premium here. And when you think about term premium, you really need to think about what's going to happen also away from the U.S. What's going to happen with the ECB? What's going to happen with the BOJ? Or they will continue to have these QE programs in place. So I think that is the next stop for this duration story, looking in Europe.
So all strategists around the world, whether they're looking at, or all investors around the world, whether they're looking at EM, anything else, they really just have to make a call right now on sort of the long end of the U.S. rates, and it's kind of the big story. It's kind of the game
that is a good part of the story. But then the other call for emerging market is the dispersion story in the emerging markets. I mean, you look at the U.S. potential policy mix, and then we're trying to figure out, are we going to have a playbook that is like the campaign statements, or is it going to be quite different? And there's a lot of questions about how much of the campaign will be actually applied, because that gives you a little bit of a different picture between commodity exporters, exporting manufacturers, what's going to happen with Mexico, what's going to happen with China. So it's the dispersion where you start to make a call. So when you think about emerging market debt, a good amount of the rally that we had this year was a beta call, was the comeback of emerging market. You could buy anything and you would have made money.
Right.
Going forward, we think that part of the story is gone. Now you need to manage selection, right? You need to be way more active in which countries you're going to overweight or underweight, or your currencies you're going to go long or currencies you're going to go short. And at the same time, you need to be managing your duration more actively, because those that were still long duration since even prior to the election, post-election, were having this carry eaten away by the duration story.
So before you could be passive about how you approach emerging markets, because they were all going up, a rising tide lifts all boats. Now you've got to be much more selective, looking for winners and losers. Given that so many people look at emerging markets and invest in emerging markets through ETFs, what kind of factors then should people be placing the importance on?
When you were looking at active managers in emerging market debt versus ETFs, you will see that in the last 3 years in the hard currency space, only 25% of managers beat the passive products. It was exactly the opposite in the local space. I would argue that going forward, actually active managers probably will do better than passive strategies, because duration will be eating returns on the index. So you're going to have to be moving your credits around, doing your relative value, doing your bottom-up analysis to really add to benchmarks, right? So being way more selective, being more active, and maybe having an active hedge on duration will be the way to make returns in 2017.
Do you see any signs of that, I mean, in the post-election environment, of a sort of dispersion, or are we still just in the phase where everything's getting flushed out?
We have seen some, actually, dispersion, particularly if you look today, what's happened post-OPEC meeting with oil credits has been positive. Now, a lot of money came into ETFs to emerging markets post-Brexit, pre-election. So that money left, to some extent, not all, just a chunk of that. That, when was leaving, was buying in the same, was selling in the same indiscriminate manner that bought going into the election. So I think that the story is going to change a little bit, and it's going to be way more what we call alpha, making returns and relative value than actually the direction of the market.
All right, Pablo Goldberg, senior strategist for BlackRock's emerging market debt team. You are staying with us. Up next, Brazil cutting rates for its second straight meeting. We're going to dig deeper into the political noise in the country. This is Bloomberg. What you missed, Brazil maintaining the pace of monetary easing today by cutting its benchmark rate to 13.75%. Now, this comes as domestic politics and fiscal reforms generate uncertainty in the country. We're back now with Pablo Goldberg, senior strategist for BlackRock's emerging market debt team. And of course, President Michel Temer had been doing what he could to get the country back on track. Now you have the uncertainty generated by the U.S. election. Does it throw him off course completely?
I don't think at all. I mean, in fact, I think that Brazil is one of the most idiosyncratic stories that you see in emerging markets. It's a very much domestically driven turnaround. I mean, you had a significant amount of issues with the politics earlier this year and last year. This appears to be a little bit resolved in the sense that Congress is functioning again with the executive to try to tackle some of the problems that Brazil is having. Fiscal reforms are advancing through Congress. I mean, this is a very important thing that investors were looking or expecting. We have a bill approved in Senate to try to cap the increase of spending. That starts to shape the story better. Now, central bank cutting rates. 2 cuts so far this year, 25 and 25. Very moderate, very cautious. I think the central bank is really trying to get inflation expectation going lower. Now, nobody's focusing on the central bank domestically. Nobody's pushing them to cut rates. They're using this opportunity to finally rein on inflation.
What do you need to see in Brazil going forward to suggest that they're still on the path? That the path of reform, whether it's fiscal, whether it's about getting rid of corruption or trying to at least reduce it, what do you need to see to know that they're not stalled out?
First stop is getting the fiscal reform totally out of Congress. It goes through several rounds because it's a complicated political system. We need to get that. And then is Social Security reform. That is the second thing that investors will be looking to see advancing in Congress. That's probably something more for first quarter 2017. But those two things can be, important paradigm changes in Brazil.
I have a question when you talk about these reforms. How significant are the actual economic effects of these reforms, and how important is the signaling that the ability to get these reforms done is a signal of operating government? Which is the more important
I think
aspect?
First we needed to see an operating government, because what we saw before was basically not really working in terms of Congress and the executive passing things through. Now we have something, people working together, cross parties. That is very important. But now the true effect, once this gets approved, are very important. The spending cap has more of an immediate effect. Social Security reform has more of a long-term effect. But the fiscal path that Brazil was taking was one where the debt to GDP, the debt dynamics were explosive. We needed to have that in control. That brings lower spread, more confidence, investment in the economy, and then you get the economy going, right? And that is something that has, maybe at the beginning is just based on signals, that brings some more market confidence, but then you need to see the proof, right? You need to see, show me the money, as they say.
And of course, so much of Brazil's fate rests on China because China is such a big trading partner of the country. I want to switch gears now to China. If you come inside the Bloomberg here, the big concern with China is the capital outflows, right? And those are the red bars here. You can see the outflows have been consistent going all the way back to mid-2014. The white line is dollar yuan, but we inverted it. So when the line goes down, as it has been, that is the yuan weakening. To what extent does the currency manipulation allegations, accusations from the Trump administration mean that this trend is only going to continue?
I don't think that for the outflows, any sort of labeling of currency manipulator potential in the future will have anything to do. I think what happens with the outflows in China is that we have significant amount of liquidity still being created domestically. And like in any other emerging market, investors want to have some of their assets abroad. So you're seeing that's part of the story. The other part of the story was the unwinding of the carry trade. Corporations in China that borrow abroad now repaying those liabilities. A good amount of that outflows have already taken care of the stock of liabilities. So you don't have that much corporate debt.
How much, 80%, 90%?
I would say probably 75%, 80% is already taken care of. So that was a structured outflow that is winding down. The other part of the story is, with the currency, is that Chinese exports are not, being very vibrant as of late. And that brings a little bit also of a sense of weakness in the economy that could lead into outflows. Last point, interest rate differentials, right? You were showing a chart earlier before about interest rate differentials between the U.S. and the rest of the world. But the U.S. and China is important for Chinese savers. So you're going to have this ongoing filtering out of money. How has the Chinese responded? Tighten capital controls, right? And we're going to continue to see that part of the story being there. This tight capital controls will continue.
All right, we can't talk about EM in the post-election world, obviously, without talking about Mexico. People hammered the peso in the run-up to the election, and then it got hammered some more after the election. Now that the dust has kind of settled a little bit, what are the prospects for Mexico right now?
Well, the problem when you look at the peso is that how you value the peso, how you call fair value of the peso today, if you don't know whether NAFTA is going to be there, 12 months from here, which are the kind of tariffs that are going to be imposed into Mexico? Will FDI into Mexico continue? Will the flow of remittances out of the U.S. back to Mexico be there and untouched, or is going to be sand on the wheels? We need to know what we're working with. So the policy uncertainty is something that's keeping investors at least on the sidelines.
Yeah.
If you look at where the Mexico is value compared to, the Mexican peso is value compared to prior to the election, if you do, we look at our models, 15-20% undervalued. But is that the economy that we're going to have going forward? We don't know. So until that really doesn't get clear, it's going to be very difficult to see.
But won't it be too late by the time it's already clear? I mean, if there's an opportunity, if it's significantly undervalued, can you afford to wait until all of the policies are so clarified?
Well, so what do we need to get? Let's look at nominations. What are the early indications? Well, today nomination for Commerce Secretary is not necessarily a person that is pro-free trade. So that is an early indication that the uncertainty is going to linger for a little bit more. I mean, you're right. With all the news are out there, investors will react. So we are working with all these uncertainties. We're still some months away from the inauguration.
Right.
What we're getting is nominations, and we're taking it from there.
All right, Pablo Goldberg, Senior Strategist for BlackRock's Emerging Market Debt Team. Thank you very much.
My pleasure.
And coming up, Kroger's stock has fallen more than 20% this year. Next, we examine how food deflation has played a role in the decline. This is Bloomberg.
So what'd you miss? Kroger is set to release earnings on Thursday in the face of stiff competition and falling food prices. Shares of the grocer jumped in early November after management confirmed its full-year earnings guidance. Let's look closer at the company in today's The Numbers Don't Lie. So we start with Kroger's stock, and you can see the pop in price. That's the blue line in early November. Longer term, though, Kroger has clearly trailed the broader market, which is the white line, as well as its peers in the North American Food Retail Index, and that is the orange line. Certainly been a drag on that. What's been driving this underperformance? Slowing sales growth. Food deflation. It may be a boon to consumers, but it pressures the grocery industry to offer heavy discounts that weigh on margins and weigh on sales. Even so, throughout all this, Kroger has managed to post 51 straight quarters of positive sales growth, even as it's decelerated. Looking closer, though, at food deflation, U.S. food prices have fallen for 11 straight months. This actually marks the longest streak since 1960, which had a 14-month streak. And this slide in food prices is really hitting Kroger harder than others because the company is America's second biggest seller of groceries after Walmart. Now, you're looking here at the top 5 grocers based on 2015 figures. Kroger far behind Walmart, but notably ahead of Albertsons, Costco, and Sam's Club. Kroger may get larger. At the latest investor meeting, Kroger executives said that there is $100 billion in potential revenue from companies that are characterized as turnaround projects. The company has been adding debt the last couple of years to fund recent acquisitions. You can see that there, including services that pick up online orders at stores and deliver them to customers. Kroger has actually spent more than $3.5 billion in this area since 2013. M&A bargains could be part of the recipe for Kroger to reaccelerate sales and stabilize its stock price. We will be listening for all these themes when Kroger releases results on Thursday in the U.S. Joe?
And for more on Kroger and food deflation's effect on the groceries, let's bring in Craig Gimona, who covers the industry for Bloomberg. How are they dealing with it? So obviously we've seen food at home prices drop a lot. Do the grocery stores have any particular strategy for trying to counteract this?
It's really tricky. I mean, this is really a staggering streak of food deflation. You know, for a while there, it was longest streak since 2009, which that's the financial crisis. You sort of understand that. But people are saying this is unprecedented outside of a recession. Longest streak now since 1960. What it's done is really prompted a price war. Walmart is sort of finding its stride again in groceries. And I mean, they are the big elephant in the room. When they move in a certain direction, it affects everybody else. So what they're doing is cutting prices dramatically, taking advantage of deflation, getting people in the stores, and they buy other things at a higher margin. That's weighing on Kroger because Kroger then has to respond.
When you say Walmart is finding its stride again on food, was there a period where they had stumbled? Because, I mean, you know, you think of them over the last several years, they've just become this huge player in the category.
That's right. And they have gotten bigger and bigger and bigger. I think that for a while there, the stores were criticized. The produce wasn't very nice. They lagged on organic and natural stuff, but they all sort of watched Whole Foods and their success in that, and Kroger and Walmart have really caught up. Now you can get plenty of organic stuff at Walmart. You can also get your Coke, your Doritos, other things. So that's kind of the situation. And with Walmart using prices to get people in the door, that puts incredible pressure on Kroger to respond, leads to a price war, and that's why you're seeing those declining sales.
Going back to what Joe was saying about strategies, I wonder if Kroger can offer anything else that's higher margin rather than ingredients for dinners. I mean, are we talking about prepared foods, organic? Are we talking about deliveries, like add-on value-added services?
Right. So the big thing for Kroger is click and collect, so-called click and collect. What that is, you go on the web or your phone, make the order. It's ready for you at the store, so you drive in, you pick it up. In a lot of America, people tell me that that's more convenient. People are out at soccer practice on Saturday. They're out in their car. So that works even better than a delivery where you have to wait for a couple hours at home for the pickup. So they have invested heavily in that. You know, they have fuel at a lot of their stores. So, you know, Kroger is a big giant in this category, too. They've done pretty well, all things considered, but the deflation has put a lot of pressure on them.
All right, Craig Gimona, thank you so much. Craig Gimona has been writing about food deflation, certainly a theme that's been hanging around for a couple months now. And in some other breaking news, Rockwell Collins is under pressure from activist fund Starboard Value to reconsider its $6.4 billion purchase of BE Aerospace and instead explore alternative options, including selling itself. This is according to people familiar with the matter. You can see their shares of Rockwell Collins gaining in late trading, up by 4% in the after hours. This is Bloomberg. Looking ahead to tomorrow, don't miss this. China's official manufacturing and non-manufacturing PMI coming out tonight.
Going to be waiting up for that. And then tomorrow, I'll be looking at U.S. weekly jobless claims out at 8:30, as well as the ISM manufacturing report.
It is PMI day tomorrow, isn't it?
PMI day, the second best day of the month.
And don't miss this. Automakers report U.S. vehicle sales for the month of November. That'll take place all day tomorrow. That does it for What You Missed. Thanks for watching, everyone.
We'll see you back here tomorrow. Have a great evening. This is Bloomberg.
I'm John Heilman.
And I'm Mark Halpern. And with all due respect to Steven Mnuchin, your name ID needs a little work.
Today, Trump is expected to pick Steven Mnuchin. Steven Mnuchin.
Former Goldman Sachs executive Steve Mnuchin.
Former Goldman Sachs executive Steve Mnuchin.
Steven Mnuchin.
Former Goldman Sachs executive Steven Mnuchin.
Mnuchin led Trump's finance operations during the presidential campaign.
Among them, Steven Mnuchin as Treasury Secretary.
We have got much munchin' to talk about tonight. It was not long ago that Donald Trump released a campaign television ad that counted the current CEO of Goldman Sachs among establishment elites who have, quote, robbed our working class. So, naturally, when it came time to pick nominees for top financial government agency jobs, Trump has turned to two East Coast educated billionaire buddies, one of whom cut his teeth at, you guessed it, Goldman Sachs. The great wide world is still trying to make sense of Trump's choices of Steve Mnuchin as Treasury Secretary and Wilbur Ross as Commerce Secretary. Both were early Trump campaign lobbyists. They're both friends of his, to be sure, but their resumes are causing some cognitive dissonance up against the populist economic message that Trump preached out on the trail. Take, for instance, Mnuchin, the man Trump has trapped for Treasury. He was Trump's campaign national finance chair. Not a ton, though, on the old CV that is likely to ingratiate him to Trump's working class supporters. He's a Yale man, Goldman Sachs partner. He founded his own hedge fund and once headed a mortgage lender that foreclosed on tens of thousands of homeowners while his institution was still receiving government support. He's also financed some big Hollywood blockbusters, including Avatar, X-Men, and about dozens of other movies over the last few years.
And then there's Wilbur Ross, a Yale and Harvard man who became a billionaire investor and bet bigly on struggling American industries like steel, coal, and textiles. But he did help restructure one of Trump's struggling casinos in the 1990s when Trump has been criticized for leaving average workers high and dry. And his work to rehabilitate and resell companies to overseas investors has benefited from the very free trade policies that Trump has promised to rein in. This morning, Mnuchin and Ross went on TV to talk about what they wanted to accomplish in the Trump administration.
Our number one priority is tax reform. This will be the largest tax change since Reagan. We think by cutting corporate taxes, we'll create huge economic growth and we'll have huge personal income. So the revenues will be offset on the other side.
Everybody talks about tariffs as the first thing. Tariffs are the last thing. Tariffs are part of the negotiation. The real trick is going to be increase American exports. Get rid of some of the tariff and non-tariff barriers to American exports.
So, Mark, look at these picks, Mr. Ross, Mr. Munchkin, a.k.a. Mnuchin, and their resumes. Is it fair to ask the question at this point, what ever happened to populist Don Trump?
Oh, very fair. I mean, look, he could have gone a different way and made Bernie Sanders Treasury Secretary. To me, this stuff is symbolically almost ridiculous. But what's going to matter is the policies. And these two guys, they're not creatures of government. They're not long in Washington. If they end up helping formulate economic policies that help create middle-class, working-class jobs, no one's going to care about these items on their resume. But it is going to make for some interesting confirmation hearings. And it does put even more onus on Trump to recognize that biography is not necessarily destiny, but it influences things. He's going to have to come up with some populist thinking in his economic team, because I don't think it's going to come from these guys.
We talked yesterday about the fact that Trump has put on a lot of Congress-friendly people into the administration so far and is considering putting in a lot more. So there's that. Then there's these Goldman Sachs, Harvard, Yale guys. We'll talk about a little bit more about Mr. Mnuchin in a second, but just in general, I mean, I can't imagine anything that looks like draining the swamp or being a populist or being an outsider than the series of picks that Trump has made. And I think there's a lot of political peril ahead for Donald Trump if the people who elected him, because of their ire and anger at Washington, D.C., at business as usual, at the financial elite, at Wall Street, suddenly start to think that Donald Trump is turning into another crony capitalist. And that is what a lot of these appointments look like. Again, I have more to say about Mnuchin, which is problematic, but just alone, I think Trump is courting real danger here politically by thumbing his nose at the populist outrage that put him in office.
And yet, as best I can sample opinion in social media, talk radio, cable news, there's so much more outrage about Mitt Romney than there is about this. Well, I do think if you're giving Trump the benefit of the doubt that he's playing some grand strategic game in assembling his government, I do think that it is important, whether you're a Republican or Democrat, but particularly if you're an outsider, to send reassuring signals to Wall Street. Now, I don't really have a good sense of whether these two guys actually are going to reassure Wall Street like a Bob Rubin. Just because you got Goldman Sachs on your resume doesn't necessarily mean you'll be reassuring. But if that was the goal of picking them, and if he's going to pursue policies that create jobs, then I think it's a short-term hit, but it might be worth it, because any president is going to want Wall Street to feel comfortable with the new administration. It's just a reality of how power works in America.
Right. Well, anyone's going to want the financial markets to be reassured by the person who's running the Treasury Department, but that's different from Wall Street in some ways. I know people conflate them. This guy, I think if you got Bob Rubin and Larry Summers and any of the past Treasury secretaries over the course of the past 20 years and asked them whether they knew Steve Mnuchin, thought that he was a reassuring signal, thought he knew anything about monetary policy, I'm pretty sure all of them would say no, because we had these discussions back when Mnuchin became the head of his finance committee, and he didn't reassure anybody then because no one on Wall Street really knew the guy.
One of the weaknesses Mitt Romney had when he ran for president is he never explained how he felt personally about what happened to people who lost their jobs or were hurt financially by the activities of Bain Capital. I really hope both these guys are pressed by both parties when they're up for confirmation, because both of them are involved in things that hurt consumers, hurt workers.
Yes.
Even if other times they were creating jobs.
I know the bell went off a long time ago, but we just got to say, just on Mnuchin, just focus. Some people need to focus on One West, on this bank out in California that the man owned. He's accused of having improperly foreclosed on homeowners, of redlining, a lot of bad stuff. We got to look into this more carefully as this nomination goes forward.
Congress does during the confirmation. He needs to explain how he feels about what happened.
The press does too.
All right. Donald Trump is doing a victory lap right now and into tomorrow over a deal that he and the Vice President-elect Mike Pence struck with Carrier Corporation. That's the air conditioning behemoth that was planning to start shipping a couple thousand jobs to Mexico next year. The company now says they're going to keep about 1,000 of those positions in Indiana, which is, of course, where Pence is still the governor. We don't know all the details of the deal yet. Trump and Pence are going to travel to Indianapolis tomorrow, and we'll probably talk at least about some additional terms of how exactly they were able to convince Carrier to stay. But it is the case that the deal includes some sort of pledge to work on what the Trump administration planned to work on, less federal regulation and an overhaul of the corporate tax code. But there are clearly some other, at least state inducements involved. The move, though, of course, is not without its detractors, particularly those who think of it as corporate government policy interference. So, John, clearly there's a big win for Donald Trump, even his detractors say so, for the most part. Is this a win for America?
Well, look, it's a drop in the bucket in terms of manufacturing jobs in this country and the kind of transformation that Donald Trump has promised. I think if Barack Obama had done something like this in the course of his 8 years, Republicans would be howling about picking winners, about industrial policy, about the intervention of government in the free market. And now Donald Trump is going to be hailed for having saved these jobs. I think it's bad economic policy. And I think it's incredibly hypocritical for Republicans to cheer this on when they would trash any Democrat who tried to do the same thing.
Governors do stuff like this all the time. I do think that part of what Trump has promised is for people to feel good about the country again, good about jobs not going overseas. I do think that industrial policy is dangerous. Trump's basic claim is going to be, I can do industrial policy because I'll do it better. I'll do it in a way that's better for the market. We'll see. I think that the country needs to feel the possibility of job creation. So in short term, I think it's fine. But I agree with you. Long term, this is the kind of industrial policy that's just not sensible. It's going to have every company in the country threatening to move to Mexico.
Correct. Exactly right. All right. Mark your calendars for the 15th of December. That is the day that Donald Trump says that he and his family will finally make a big and long-anticipated announcement about how the president-elect will, maybe, just maybe, extricate himself from his business empire amid vast concerns about conflicts of interest once he moves into the Oval Office. This morning, Trump logged onto his favorite press release phone app and posted this series of teaser tweets. Quote, I'll be holding a major news conference in New York City with my children on December 15th to discuss the fact that I'll be leaving my great business in order to fully focus on running the country to make America great again. While I am not mandated to do this under the law, I feel it is visually important as president to in no way have a conflict of interest with my various businesses. Hence, I love it when Trump uses the word hence. Hence, legal documents are being crafted which take me completely out of business operations. The presidency is a far more important task. That's the end of that tweet storm. So, Mark, having read that tweet storm, what are, in your view, I know there have got to be some, what are the most important unanswered questions that remain about how Trump is going to deal with this business about his business?
Exactly how far away from the business is he getting? Is he getting even close to creating something that people would look at as a blind trust? Will his family still have a role in the business and in government? Based on the tweets at face value, I think he's basically going to say he's no longer running the company, but still benefiting from the company, still knowing what assets there are. I think that unless we're pleasantly surprised, this is headed into a place that is not going to be acceptable. And I think a lot of Republicans in Congress are going to agree that it's not acceptable if it's headed in that direction.
The key phrase that a lot of government ethics experts are focusing on in those tweets is business operations, which I think is what you're referring to. You know, that he will no longer be actively managing his businesses. Big deal. If he continues to have a personal financial stake in those businesses and his kids are running them and there's nothing that remotely resembles a blind trust, or let alone the liquidation of the assets, the conflict of interest problems will remain. And they'll be just as great as they were if he were actually actively running the company. But him not actively running the company is like the minimum step, far from the maximum step, and far from enough to get us away from the problems that have been raised here.
It's so important for the country that he do this right. My one hope is, the one glimmer of hope I see is he's announced he's going to announce this over 2 weeks in advance. There's still more time, I think, for people to try to influence this decision. And for him, the question they haven't answered is, whose ethical judgment is he using on this? They say he'll go every step he needs to, blah, blah, blah. They need to put forward someone whose ethical judgment on this stuff is pristine, who says this is how far you need to go to make this actually workable for the American people, even if it means giving up what has been your personal and professional identity for decades, your attachment to your business.
Let's be clear. The top ethics lawyer in the Obama administration and the top ethics lawyer in the Bush administration have come together in a bipartisan fashion and said what's required here, which is liquidation and a blind trust. The Wall Street Journal's editorial page agrees. That's the standard I'm using.
Yep. All right. I agree. Nothing short of that will work. We'll talk about the leadership election that House Democrats held today with an unsurprising result after these words from our sponsors.
Last week on this particular television program, Ohio Congressman Tim Ryan told us that he had decided to challenge Nancy Pelosi for the job of House Democratic leader because his party doesn't win anymore. Well, the vote was this morning, and the winner is Nancy Pelosi. The House Minority Leader kept her post by pulling in 134 votes, but 63 Democrats, about a third of her caucus, cast secret ballots for Ryan. Mark, this vote comes in a moment when the Democratic Party has just suffered another Election Day drubbing and are in a state of ideological disarray. So I ask you, what does the decision to stick with Nancy Pelosi say about how seriously the Democrats are taking their moment of reckoning?
I mean, look, had they toppled Pelosi, there would have been more disarray. And while Tim Ryan is a guy with some strengths, I don't think he was going to lead them back to the promised land. You know, a lot of Democrats who even in the House, they're so consumed with the presidential and the problems there. The soul searching within the party should have begun a long time ago because, of course, during the last 8 years, they've lost the House and the Senate. They've lost a lot of governorships, a ton of state legislative seats. And so I think today's result, on balance, because of the alternative, was probably better for the party because they need some stability now. And Pelosi has a lot of fundraising and other strengths. But, man, they need some change, and today did not bring it.
Right. I got to say, I have a lot of sympathy for Tim Ryan. I think he is making a lot of important arguments that the party needs to focus on kind of places that he hails from, Youngstown, Ohio. I'm very sympathetic to his cause. On the other hand, I do agree with the arguments you just made, and I'll say that in the end, the legislative leader from the minority in the House is not the defining political or ideological figure in the party. It is someone who needs to be able to really work the legislative levers to maximize what limited leverage Democrats have in the House of Representatives, and there's no one better at that than Nancy Pelosi. She is a huge ideological albatross in some ways around the party, and it sends a terrible message that they're sticking with her. But she's probably the best person at actually running a floor fight, which is what the Democrats are going to be in a lot of if they're going to try to restrain Donald Trump and the Republicans over the next at least 2 years.
Yeah, I mean, the question is, where do stars come from? Where do people with big ideas, star power, the ability to transform a party in whatever direction it needs to go, where do they come from? History suggests a lot of them come from the governors, maybe from a senator. Rarely does anybody come to that level from the House. It happens,
right,
but
Paul
rarely.
Ryan. Paul Ryan's the rare exception.
Paul Ryan, Newt Gingrich.
Right.
But the party right now needs ideas.
Yes.
And they need ideas and show that they work. And as you suggested, somebody in the minority in the House is not going to be able to put forward ideas and say, yeah, these are great ideas. Here's how they're changing the real lives of real people.
Right.
It's just not going to happen. So it's the least important battleground of places where they need to start advancing young leaders. I mean, the Senate's important, governors, statewide office holders in other big states.
I was struck when Ryan was on the show by both the arguments he was making were impressive, but they seemed to me better suited to a man who was running for the DNC chair rather than running for the minority leader in the House. All right.
I kept forgetting that's what he was running for.
Yeah,
I kept thinking he was running for DNC.
I know. We felt the same way. All right. We'll be right back with the man of steel. That would be former Republican Party Chairman Michael Steele, who joins us after this quick break.
Our next guest regularly steals the spotlight. I'm referring, of course, to Michael Steele, the former chairman of the Republican National Committee, and a man who likes to be seen whenever possible. Chairman, welcome.
What's up, man? How you doing?
You've been in public elective office in Maryland. You've been the state National Party chair. You also, as some establishment ties, but you've got a great feel for the grassroots. Explain to me the mystery. Why is the grassroots of the party, the populist wing, not rebelling at the notion of all these billionaires in economic policy positions?
Well, there's a little bit of a quiet rebellion going along right now. There are folks who are not happy. Some of that has been articulated by Kellyanne Conway, and we've seen how that's kind of played itself out in a broader sense. But there is some concern that folks, though, want to have a wait and see. They trust Donald Trump on a lot of this. They think that there's a method to his madness, if you will, in regards to bringing in people who some would perceive to be as part of making the swamp, and using them instead to help clean the swamp. So we'll see how that first 100 days goes, how those policies roll out, sort of backing off on certain things. People are kind of raising their eyebrows a little bit. But I think by and large, Donald Trump himself is getting a greater pass on this than I think any other Republican in his position would at this point.
Yeah, I mean, look, you've got, take the, they're selling access at the convention. You give $1 million. I mean, at the inauguration, give $1 million, you get access. This is the swamp personified. When the phrase "drain the swamp" was chanted at those Trump rallies in the Midwest, in Iowa, in Wisconsin, and Michigan, what do you think people thought that meant?
Good question. Well, from what I understand and what I myself thought it meant was we're not going to play in that swamp anymore. In fact, we're going to drain it, meaning we're not going to rely on the establishment types to get the job done. We're not going to rely on those who are at the teat of the government to help us get the job done. We're going to bring in new voices, new faces, men and women who are outside of this complex, if you will, and have them come in with this idea, the core idea of making America great again across the board. Now, you can argue that bringing in a lot of these folks, particularly those who've never had government service under their belt, is a form of doing that. They just happen to be billionaires. He didn't say that he wouldn't use billionaires to help drain the swamp. In fact, he quite along the way said that there were a lot of these guys like Icahn and others that he wanted to bring into the table because they had a real-world experience that Washington was missing. And I think that, Mark, is where folks are beginning really kind of trust him more on his instincts about what these individuals can do relevant to this idea of making America great again and cleaning the swamp at the same time.
Billionaires are good drainers. Apparently.
Well, apparently.
So, Michael, I'm looking at your incredible Argyle sweater, though. It's very strong. I have a Christmas gift, early Christmas gift for you here. I got a T-shirt right here. I'm showing it on television. It's my Team Bigley T-shirt. I'm going to give this to you next time I see you at Christmas. I'm going to give you your own Team Bigley T-shirt because you could be one of the co-captains of Team Bigley. So here's the question. Here's the question I want to ask you. So, look, you've got the Goldman Sachs, you got the billionaires, right? You got a bunch of members of Congress who've been appointed already and a bunch of others who are being considered. You've got Trump backing away from repealing Obamacare on day one. You've got Mnuchin and Wilbur Ross on television today saying, well, maybe actual tariffs against China isn't really what we want to do. We don't want to actually slap big import duties against foreign companies, against foreign governments. What is the place where all of this to me signifies political peril for Trump, right? These are all places, there's a whole variety of things. So what's the thing that Trump could do, you think, that could actually turn his voters, his supporters away from him? What's the red line that he can't cross?
You know, that's another good question. I don't think there's a singular red line. I think that it's a combination, a culmination, if you will, of everything you're saying. Look, if the backing down off of Obamacare combined with the a softer approach to immigration, where the wall isn't 10 feet, it's actually a foot and a half. Those types of things in combination, I think, will do a lot of damage. Because, look, there was a lot of buy-in to this idea that you're going to come in and shake this system, that you're going to turn it out. The voters said for the first time, and you guys have talked about this and reported on this, that they controlled this. We got this, not the establishment, not the people who kind of pull the levers from behind the scenes, but we, the people, have this. And that's why they stuck with Trump when the Never Trump stuff started, when Romney was out there doing his thing, when all these folks were piling on. They stayed true and gave him 14 million more votes than anybody had ever received as a Republican nominee. So Trump cannot lose sight of that. Okay. And I think that if he starts in combination of looking like old Washington, he's going to have a real rough time of it.
So let me ask you a question, ask you to pretend like you're a Democrat for a moment. I know you're familiar with a lot of Democrats in your state in Maryland, so you know, you've run a party. So if you were running the Democratic Party right now, would you advise the Democrats to have the approach to Trump that Republicans had to Obama, which is say oppose him on absolutely everything, or would you advise Democrats to kind of lay back and let Trumpism potentially collapse under the weight of its own contradictions?
I think more of the latter. I think you engage on policy-specific issues. You cannot approach this with a broad brush, because what will happen is when Trump pushes back, you wind up sweeping too much off the table. What I did when I was chairman, walking in the same shoes that the new party chairman for the DNC is going to walk into, party on the rebound, just lost a bruising election to a guy that you're sitting there scratching your head going, well, how the hell did this happen? And what I did was figured out where the targets were, number one, what were the subject matters that was going to drive my base. And once you're able to identify those, you bring the base into that and you start from there. But if you do something too big, I think it winds up to bite you.
Mr. Chairman, we've got a million more questions for you, but the time gods are saying we got to go. So, Michael Steele, thank you so much. We're going to talk more about the Democrats and what the House caucus vote today means right after this.
Nancy Pelosi was reelected today as the head of the House Democrats amid calls from some in her party for new leadership in Congress. Joining us now from the home of Congress, that would be Capitol Hill, to talk about that vote and its implications, the great, magnificent, fantastic, wunderbar. All right, Casey Hunt. Casey, good to have you.
Fine.
So Nancy Pelosi wins. She wins easily, and yet a third of the caucus votes against her. So among friends, we're going to have one on in a moment, and supporters of Congresswoman Pelosi, are they like freaked out a little bit by the fact that a third of the caucus was against her, or do they feel confident like this was a real mandate for her?
I think that there is some frustration, and there was certainly some surprise at the number of people who picked or who backed Congressman Tim Ryan. I think it showed you that had somebody else been willing to step up against Pelosi, say Joe Crowley, for example, the congressman from New York, they might have actually beaten Pelosi in this. So it does show that there's some legitimate problems there for her. I do think that they feel like at the end of the day, this was still a demonstration that Pelosi's style of politics is what the Democrats need in the House right now. They need somebody who basically has that iron will that she's become known for. In an age of Trump, that the House Democrats are essentially going to serve more as at least an attempt to stand in his way, to force Republicans to make difficult decisions on, say, the debt ceiling, some of these other issues. She has been there in the trenches. She knows how to do it. And I think her allies feel like that's what they need right now. On the flip side, it also means that they're not going to have any new faces. The average leadership age on the Democratic side in the House is 76 years old. It's under 50 years old on the Republican side, which is an entire generation. And I think that's the frustration that you saw expressed today from those 63 members who refused to back her.
So, Casey, now Nancy Pelosi is going to be in charge again. If all goes as planned for her, if they get every break, if they execute perfectly, what's like her scenario for 2017 that's like a good year for the House Democrats?
Well, it's tricky as always. I mean, they sort of have been bleeding ever since Nancy Pelosi, ended her speakership. I think one of the key areas of real frustration for the people who opposed her is the chairmanship of the campaign committee charged with reelecting Democrats. I think there's a real feeling that the focus and the strategy that Pelosi has brought to that involves a lot of fundraising. It involves messaging that really appeals to people on the coasts of the country, but that is missing out on the middle. And so I think the challenge for Pelosi going into the next election cycle is to figure out, okay, how do we balance, the main message of the Democratic Party, what it's become, the people who actually, voted in larger numbers for Hillary Clinton than for Donald Trump in the popular vote, while still expanding the number of seats that they have. That is a very tricky line to walk, and it's not clear to me yet how they plan on doing it.
Casey, on a different topic, we talked a little bit earlier in the show about Trump's kind of placeholder about trying to deal with his business, his family business, and the potential conflicts of interest. Setting this thing December 15th, he's going to come out. My sense is that a lot of Republican members of Congress are really concerned about this right now. What's your sense about the temperature among, again, Republicans on the Hill related to this issue?
Right now, when I've talked to Republicans up here about it, they have essentially said, let's give Donald Trump half a minute to deal with this. But they are saying, in saying that, they're saying he does need to deal with it. And I think that there has been some pressure, because the reality is the difficulty day to day for the members up here is having to answer for every single one of these things that Trump says or does, or, in this case, his conflicts of interest. I think the fact that he has come out and said, hey, I'm going to make a statement, will mollify some of them for now. I think they're probably going to expect to see some action. I think that this kind of general way of interacting is going to be something that drives a lot of what we talk about for the next year or so, this tension. I think you're already seeing it play out in the cabinet picks, for example. I had one Republican say to me, does Trump really want to make us vote for a David Petraeus or a Rudy Giuliani for Secretary of State? That would put us in a very difficult position. So I think you're already seeing those pressures ramp up across the board. That issue that you raised is one good example.
All right, Casey Hunt, magnificent to see you. Thank you for your service.
Lovely to see you, gentlemen. I appreciate you having me.
We're now going to turn to a supporter of the California Congresswoman and fellow member of the Golden State delegation, Democratic Congressman Eric Swalwell. Congressman, let me ask you this. Your woman won, Nancy Pelosi, going to lead your party again in the House, but she lost a third of the caucus. So what do you think she should take as the message from that large block of dissenters from having her lead the caucus again going forward?
Yeah, thank you, John. Thank you, Mark. First time on. And our leader won. She earned the trust of 68% of her colleagues. She said that she had 66%, so she came in a little bit higher than she expected. It shows that she can still count and she can still lead us forward. So I think a good day for Democrats, and now unifying and going forward to defend the progress we've made on the Affordable Care Act, climate change, and Wall Street reform, and also craft a message that can connect with all Americans going forward.
Congressman, I appreciate that answer, but didn't answer my question, which was what Nancy Pelosi should take from the fact that a third of the caucus voted against her.
Well, I look at it as over two-thirds voted for her, and I think this was a healthy exercise for the caucus, and she still has overwhelming support from the party. And I hope the people that voted against her, and I believe they will step up and help us in an all-hands-on-deck effort to shape what's next.
Congressman, thanks for being on. Can you think of any issues on which Leader Pelosi is more liberal than working-class voters typically are in places like Wisconsin, Ohio, Michigan?
Working-class voters want an economy that's going to work for all of us. So I think the work that she did, especially around Wall Street reform, really matters to working-class people. They just want a fair shot. And right now you're seeing Donald Trump putting out a plan to unravel Dodd-Frank. Instead of draining the swamp, he's refilling it with recycled water by putting Wall Street executives and D.C. insiders in his cabinet. And so I think our message is going to connect with those voters.
Right. Again, I'll just say, are there any issues you can name just one, where you think she might be to the left of the voters who helped Donald Trump get elected in those states?
Yeah, and I think the voters, they're electing representatives in their own community. And this is not about one person, representing every part of the Democratic Party. I think she's going to rely on different people in our party to go across the country and carry that unifying message of an opportunity for all of us. So I reject the idea that this is on one person's shoulders. She has given opportunities to people like me. Look, I was first in my family to go to college. I came to Congress with $100,000 in student loan debt, and she said, go talk to all the millennials about issues from people who have the same issues and take other young members and do it. We created a group called Future Forum. We went to 31 cities, and we have legislation to help lift 40 million people out of student loan debt. So she's trusting other members in our caucus to not just have her be the leader, but for all of us to play a role.
So, Congressman, let me ask you this question that I asked Michael Steele, which is it your view that the way Democrats should approach Donald Trump and his agenda is the way that Republicans in Congress approached Barack Obama and his agenda, which is to say, cooperate with nothing, oppose at every quarter? Or do you think you should try to make common cause with Trump where you can find areas of agreement?
Well, first, I think we have to recognize that Donald Trump is a man who has no core set of principles. He is willing to say one thing and do another. And so, it's very hard to tell what he truly believes in. But if he truly does believe in reforming and upgrading our country's transportation and infrastructure networks, then I think we can work with him. But if what he means by that is just corporate tax breaks and no real investments from the federal government, then I don't see us being able to work with him on that. If he is sincere about campaign finance reform and repealing Citizens United and taking outside money out of politics, we can work with him on that, and we should work with him on that.
All right. Congressman Swalwell, thank you for coming on the show, making your first appearance, and doing a pretty nice job. Up next, more on that man named Munchkin, or Mnuchin, whichever. We'll talk to a reporter whose profile of Donald Trump's pick for Treasury Secretary goes all the way back to Munchkin's college days, or Mnuchin's. And if you happen to be watching us in Washington, D.C., you can also listen to us on the radio at Bloomberg 99.1 FM. We'll be right back.
Back in August, Bloomberg Business Week published a story titled Trump's Top Fundraiser Eyes the Deal of a Lifetime. And almost exactly 3 months later, that top fundraiser, Steve Mnuchin, did get a really big deal for payoff for his deal. He was nominated for Treasury Secretary. Joining us now is one of the writers in that Business Week profile, Bloomberg News reporter Max Abelson. Max, welcome. What kind of guy is Mnuchin? Is he funny? Is he stuffy? What's he like?
I think if you're going to, like, make up a book, write a novel about a guy who just had, like, the perfect elite career where just everything went his way, it would be Steve Mnuchin. At Yale, he was a publisher of the YDN, the Yale Daily News. He was in Skull and Bones. Then he joined Goldman Sachs, where his dad had been a partner, and also a partner who was, like, so beloved that everyone called him Coach. He made partner at Goldman Sachs himself. Then Stephen went and ran hedge fund money, including, by the way, for George Soros. Then once he was done with that, he became a Hollywood producer. Then, of course, if you remember, he bought a bank with a bunch of billionaires, sold that, and now he's going to be apparently the next Secretary of the Treasury.
Is he ideological in any way?
You know, I think the question about what Stephen Mnuchin believes in is something that honestly nobody knows. I think the thing that people really associate him with, and what's so astounding, is that he was sort of at the top of Goldman Sachs. And now he's going to be joining, by the way, Steve Bannon, his former Goldman Sachs colleague, Gary Cohn, the current president of Goldman Sachs, was at Trump Tower yesterday. And Trump transition team member Anthony Scaramucci, apparently he's going to have a Trump job as well.
Yeah, so... you know, Hillary Clinton, who Donald Trump excoriated for palling around with Goldman Sachs, for giving speeches in secret to Goldman Sachs, getting paid a lot of money to give speeches to Goldman Sachs. Does this not reek of the most kind of rank hypocrisy?
I think that if you were to list the reasons why Hillary Clinton lost, the fact that people sort of just assumed that she was really close, if not socially, but also ideologically, with Wall Street, that's got to be one of the top reasons. People were really suspicious that if she made it to the White House, she would bring along all of her Wall Street friends. And by the way, Hillary Clinton does have Wall Street friends. People in finance.
Turns out Donald Trump has a lot of Wall Street friends, too.
Donald Trump does, too.
Not a big distinction.
But this morning, I made some calls, and I said to hedge fund managers and bank executives, do you think Trump supporters who loved it when he attacked Wall Street, do you think they're going to be disappointed? Do you think they're going to be angry? They might be angry. Their attitude was like,
yeah, but the hedge fund people have no clue what Trump supporters think or feel. So here's my question. I want to ask about Mnuchin, because that's why you're here. One West. Let's talk about the One West ownership I mentioned earlier in the show. This is a bank, a mortgage lender out in California that's been accused of foreclosing in a rapacious kind of pernicious way on homeowners. It's been accused of redlining. There are a lot of housing activists who are up in arms about his ownership of that. What can you tell us about his ownership of One West?
You hit it on the head. I think that's going to be one of the most important questions of the next few months. All right, so listen to this. Stephen Mnuchin told Zach Miter and I that he was sitting in his office in New York in 2008, watching TV. I actually got this story confirmed by someone who was in the room with him at the time. It was summer 2008. He's watching TV, I said, the news, and he sees people lined up to pull their money out of a bank called IndyMac. And he says to himself, I have seen this game before. We're going to make money on this. We are going to buy this bank. And he bought that bank. It was IndyMac. And IndyMac was, it was a failed bank. In fact, I think it was one of the biggest bank failures in like the history of the United States up until that point. Steve Mnuchin bought it with John Paulson, hedge fund manager, big Trump friend. He bought it with George Soros, as I mentioned. And he rebranded it. So what you just mentioned, One West, is exactly what it's called now. And I think it was profitable within a few months. The FDIC, by the way, guaranteed that after a certain point, they weren't going to have to eat up any of the losses. So they got a great deal on it. To be fair to Stephen Mnuchin, in the same way that you kind of have to sort of just admire the fact that he made this bet on Donald Trump when everyone else just assumed he was going to lose, you also have to admire the bet he made on his bank. I mean, he bought this bank just at the bottom. Things were terrible. So he had a good instinct. But on the other hand, he sold it to CIT for, I think, more than $3 billion. They made a ton of money. And there are nonprofits that say that One West really stands out for sort of awful foreclosure practices. There's a group, a nonprofit, that accused them of foreclosing, I think, on something like 36,000 homes. Somewhere, I'm pretty sure it's more than 30,000. And more important than that, yeah, they accuse them of basically not going into neighborhoods that are predominantly black and predominantly Latino. One West CIT denies that, but he's going to be facing some pretty serious questions, I think, over the next couple weeks.
Okay, Max, thanks very much. Appreciate it.
My pleasure.
We will be right back to talk nominations and Mike Pence's trip to Washington, and more right after this.
Welcome back. We're joined now by two of Bloomberg's finest. Up in Boston, senior national political reporter Jennifer Jacobs, and in our nation's capital, we have the senior White House correspondent Margaret Talev. And man, there's the level of quality, the star power in this block, staggering. Jacobs, my question to you, I just got an email from Donald J. Trump, which announces the Donald J. Trump USA Thank You Tour 2016. Which basically just gives the timing and the venue for the event in Cincinnati that we already knew about. What more do you know about the Thank You Tour?
Yeah, we broke the news a couple days ago that they were going to start this tour on Thursday night. What we know is it's not just going to go to swing states. It's going to go to places that, mean something to Donald Trump and to his campaign. We know the schedule, we were told, is for planning purposes only. I don't know that they've released it publicly yet. But I do know that one place that they're going to go is Mobile, Alabama, which is a place that's really special for Trump and his campaign. They attracted about 30,000 people there last summer in August of 15. It was a symbolic moment for them when they really realized that they had a movement going on and that they could take this somewhere.
I remember that event well. Anybody who wants to read about it should go back and look at Will Leach's great piece about that Mobile, Alabama rally. Margaret, you're in Washington, D.C., where Mike Pence was today. Tell us about the role Pence is playing in this transition, and particularly in the Capitol.
Yeah, I mean, it's been really interesting to watch so far. Look at where Mike Pence has been in some really important places and deals, really just within the last 24 hours. All over that carrier deal, Indiana's role, the Heartland's role, the Midwest's role, meeting with Condoleezza Rice, a meeting that you can imagine would have been more difficult with Donald Trump. We were looking at two Twitter feeds. Mike Pence's, where he was talking about his meeting with his good friend Condi Rice, and Condi Rice's, her last tweet, October 8th, says enough. And if you click the link, it's a link to a Facebook page saying that Donald Trump should not be president of the United States. So there you have it, Jeb Henterling. In many ways, Mike Pence offers for Trump some version of what Joe Biden offered to President Obama, and but with sort of an added twist, which is that he's got the governor experience as well as the congressional experience. The reaching across the aisle part is maybe a little more difficult for Mike Pence, given his legislative record, his ideological record. But in terms of persona, in terms of countenance, how he carries himself, and longstanding alliances with policy thinkers as well as elected officials. He is a real asset to Trump in these early days of this transition so far.
Jennifer, all this focus on personnel, what do we know about the policy development that's going on? Is it the case, for instance, that they're locked in on trying to start with the big things of tax reform and infrastructure?
Well, we got some hints today from Steve Mnuchin. He talked about how he wants to do this middle-class tax cut and not give a tax cut to the upper class, which is a reversal from what Trump's plan during the campaign trail had said. And we're also hearing other things like Anthony Scaramucci, who is one of Trump's transition advisors, gave an interview to Bloomberg Radio today talking about how tariffs are not going to be imposed only as a last-ditch measure, whereas, during the campaign trail, Trump talked about as much as a 45% tariff on China. So we're getting little bits and pieces from Trump advisors now showing that they are coming together, creating ideas. I also happen to know that the transition team has a plan written up for building the wall, just using fees and not tapping money from Mexico or forcing Mexico to pay for it. Whether Trump actually goes with that plan or not is still up in the air. But they are doing the subterranean effort of really plotting policy, getting ready to go, getting executive orders, a tsunami of executive orders ready to go for those first couple days.
Margaret, we keep hearing about how the President Obama is still talking to Donald Trump, still very much on track to help with the transition. The White House was in a little bit of shock after Election Day. What's the sort of modus operandi for the administration here in their final 2 months in office?
I mean, look, there's a few things going on. For President Obama himself, this was happening beforehand anyway. It would have happened to some degree had Hillary Clinton been the president-elect right now. But President Obama is trying to figure out how much time he can rest and how much time he has left before he has to reemerge as some kind of a public figure, or at least slightly behind-the-scenes figure, how to tip the scales on that. I think the situation with Carrier is really instructive for the Obama White House. You saw a little bit of irritation today in the White House briefing when Josh Earnest was asked about it, and he said, I'm going to paraphrase here, so he said if he does that 804 more times, he will have matched the standard set by Obama. So President Obama, of course, spent a lot of time going around to manufacturing plants trying to highlight policies that he thought worked and took over during this massive financial crisis. I think partly frustrating, partly bewildering, and partly instructive for the Obama White House to watch Trump's early moves and to try to guess how long will it take before we see whether they succeed or fail or a little bit of both. So a tremendous amount of calibration inside the White House as far as President Obama himself and some of his key policy advisors. For the White House staff, I'd say there's still a tremendous amount of sadness and frustration and attempt by a lot of Democrats in this town to figure out what they are going to go on to do, what jobs will be available for them in these coming weeks and months.
We have very few seconds left. Margaret, yes or no? Tom Perez running for DNC chair, yes or no?
I'd say yes. Sure, why not?
Okay, fantastic. Jennifer Jacobs, next big appointment to be announced by Trump in the cabinet is?
Defense. Hopefully defense.
Defense. All right. Margaret Tlaib, Jennifer Jacobs, you guys were as awesome as I said you would be. Thanks for making me look good. And thank you for coming back. We'll be right back.
Find out what Wall Street is saying about Donald Trump's latest cabinet picks right now. It's on BloombergPolitics.com. Bloomberg Technology is next. Until tomorrow, thanks for watching. We'll see you then. Same bad time, same bad channel. Sayonara.
I'm Christine Harvey, and you're watching Bloomberg Technology. Let's start with a check of your first word news. U.S. President-elect Donald Trump's cabinet continues to take shape with more announcements today from the transition team. Former Goldman Sachs banker and Hollywood financier Steve Mnuchin has been chosen as Secretary of the Treasury. Trump also selected billionaire investor Wilbur Ross to be Secretary of Commerce. Meantime, the president-elect has narrowed his choices for Secretary of State down to 4. Spokesman Jason Miller says Mitt Romney and former New York City Mayor Rudy Giuliani are on the short list. A transition official says Trump is also considering former CIA Director David Petraeus and Tennessee Senator Bob Corker for the job. Sarah Palin could also soon land a job in the new administration. The former VP candidate is under consideration for the position of Secretary of Veteran Affairs, according to ABC News. And U.S. federal prosecutor Preet Bharara keeps his job. He tells reporters he's staying on. Trump is said to have offered him the job during a meeting today. On the Democratic side, Nancy Pelosi also gets to keep her job. The House Minority Leader survived a challenge from Congressman Tim Ryan of Ohio to remain the top Democrat in the U.S. House for the 115th Congress. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. From Hong Kong, I'm Christine Harvey. This is Bloomberg, and Bloomberg Technology is next.
And this is Bloomberg Technology. Coming up, GoPro slashes its workforce looking to turn a profit. We'll put the action camera company in focus ahead. Plus, Nutanix aces its first earnings test, but investors may have missed the call. We'll ask the CEO why shares are down at the cloud company. And after a series of roadblocks from regulators, one of the most famous hackers in the world shares the secrets of driverless car tech with the masses. He'll tell us why ahead. Now to our top story. GoPro announces restructuring plans and narrows its focus. It is cutting its workforce by 15% and shutting down its entertainment division with the goal to turn a profit still in its sights. Just a few months back, the company was singing a different tune. I spoke to CEO Nick Woodman in September. He was optimistic and ambitious about the future.
We've got a terrific vision for the company. If there was an opportunity that dramatically helped us accelerate our vision and realize GoPro on some massively larger scale than we were able to alone, that might be something that's interesting, but we're doing such a great job of executing against our vision ourselves. We're very excited about the future as a standalone company.
Joining me now to discuss GoPro's latest moves, Brad Erickson, analyst at Pacific Crest Securities. Brad, you've been neutral on the stock. You said you wanted to wait to see reception to the new cameras, the drone. Now with this news today, how does that impact your outlook?
You know, it's interesting. You know, obviously, a pre-announcement generally drives somewhat of a change. And from our perspective, the news out this morning from GoPro really wasn't that much of a change. The 35% sales growth relative to the year-ago quarter, which saw sell-through only of about 1.2 or 1.3 million units, we think the number may need to even be higher than that. Getting out of the entertainment business, you know, that business really wasn't driving that much revenue, so really no impact there. And then the workforce reduction, you know, they had already really guided to the OPEX target for 2017, the lower operating expenses. And so telling the market today that they're going to let 15% of the company go is really just the mechanism by which they'll achieve those targets. So from our perspective, there wasn't a ton incremental there today.
They had to recall 2,500 drones after some of them lost power mid-air. Now they're facing a class action lawsuit over this. I mean, how concerning is that to you when, you know, these are products that are supposed to be the future of the company?
Certainly it's a concern if you're an investor. I would say around the drone at this point, there just isn't all that much expectation built in. Investors aren't really giving them much credit there. So, you know, if they can come out with a product, I don't think it's looking great for this holiday, but if they can get something out next year and drive at least a little bit of traction in that market, that could certainly help. But I think in the near term, you know, the company's message seemed to be a prudent one this morning, which is they're really narrowing their focus, really concentrating on capture device sales, which I think is the best course of action here at this point.
So let's talk about the cameras. What's your outlook for the holiday quarter? You've got some new competition out there, different competition, Snap Spectacles, for example. You know, how do you think the new cameras will actually do this holiday?
Yeah, we've done a lot of our own research to date, and what we're finding is we think the Hero 5 Black is doing fairly well at this point. I would say about in line with expectations. We think the Hero 5 Session is probably lagging expectations somewhat. Our estimate, a Q4 estimate, is a bit below the street. I think we're looking for about 1.9 million units, and the street's probably closer to like 2.1 or 2.2, somewhere in there. So, you know, we think things are likely to come up a little bit soft here in the holiday quarter at this point.
Now, about 40% of GoPro stock is currently sold short. That is a huge position. It causes a lot of volatility. Do you see the company shaking off that short interest?
You know, it's difficult with these types of hardware-based models. You know, if the company goes out and sells a ton of cameras in the holiday quarter, that's awesome. The problem is then we got to turn around and do the same thing all over again in the March quarter and the June quarter, and thus the sort of ongoing struggle with these hardware-type models. We do think there is a sustainable market here for action cameras going forward, but the issue becomes that, you know, if they continue to see sort of price erosion looking out to 2017 and they face further unit declines, I wouldn't expect that short interest to decline meaningfully on an ongoing basis.
How optimistic are you about the company returning to profitability next year?
You know, I think they're selling a good product at a 40, call it 40-something plus percentage gross margin percentage. So, you know, if they cut their operating expenses enough, sure, you can run this company at a profitable level. The issue then just becomes is that if you're running profitability on a sort of stagnant revenue level, there's really no growth for the future, and tough to find the incremental buyer of the stock there.
All right, we'll continue to follow. Brad Erickson, analyst at Pacific Crest Securities. Thanks, Brad, so much for stopping by.
Thanks for having me.
Another story we are watching, Netflix is appealing to those binge watchers who don't have Wi-Fi. The company, which currently boasts more than 87 million customers globally, says it's making some TV shows and movies available to watch offline. This appeals to customers in emerging markets where internet service is sometimes unreliable. Netflix has been stepping up its push for more customers internationally and fighting off rising competition from other streaming services like Amazon. Coming up, he is known as the hacking boy genius who cracked the iPhone and turned down a job from Elon Musk. George Hotz gives us an update on his regulation-defying self-driving car technology. This is Bloomberg.
Here we go. Woo! Woo!
Don't hit the van! Don't hit the van!
Oh, nice. Very nice.
Whoa! That's closer than I should have gone.
On today's funding board, Uber rival Get just got a $100 million venture loan from Russia's largest bank. Get will use that money to further expand in Russia, where this month it doubled the number of cities it operates in. Sberbank said the 7-year loan gives it an option for an undisclosed number of Get shares. Get now operates in more Russian cities than Uber or local rival Yandex Taxi. Well, hacker George Hotz shocked the auto industry last year when he showed off a working autonomous car jury-rigged in his own garage. He went on to reportedly turn down a job from Elon Musk, instead founding his own company, AI, that promised to sell self-driving software kits for $999. That plan came to a screeching halt last month when U.S. regulators sent Hotz a warning over One's safety concerns. He scrapped the plan and tweeted, would much rather spend my life building amazing tech than dealing with regulators and lawyers. It isn't worth it. AI will be exploring other markets and products. Hello from Shenzhen, China. But not so fast. Hotz came back today announcing a plan to open source his self-driving software, giving it away for free. He's here with me now in the studio to explain. So you're giving away the software for free, and you have with you the hardware. You're giving away the plans for the hardware for free. That will turn any car into a self-driving car.
Well, okay, let's qualify both of those statements. It supports right now select Hondas and Acuras, and self-driving cars, so you still have to pay attention at all times. but there's certain scenarios that you can take your hands off the wheel and not touch either pedal, and the car will drive by itself.
Okay, so regulators weren't too happy about your original plan. How do they feel about this one?
Well, I don't know. I haven't heard from them. The real thing, the regulators' response, I thought was very reasonable. The problem was when it came. We were not selling a product. We were not even taking pre-orders for a product, and they were already asking me for things like a user manual under oath. Easier to just cancel and pivot.
So haven't you just really upped the ante here, and do you expect to get more than just a warning?
No, I mean, we're not selling a product. NHTSA regulates the sales of products using the Interstate Commerce Clause. We are just making plans available for free on the internet. That's a whole lot more like free speech.
Isn't it a little like opening Pandora's box, though, telling everyone, hey, here's how you can make a self-driving car? You're basically allowing them to do something that's illegal.
Well, okay, so first off, it's not illegal. You are responsible for complying with local laws and regulations. My understanding is if somebody in California went and built one of these, again, I'm not a lawyer, but I think that would be legal because technically it's only an adaptive cruise control and lane keep assist, which are explicitly exempt under California law from being an autonomous vehicle. And California has the most restrictive laws. Somewhere like Texas, you know, that's why Google and Uber are testing down there.
Have you made any commitment to NHTSA not to test yourself?
No, NHTSA does not regulate testing. The only thing I told NHTSA was that we would notify them before we were making a product available for sale in the U.S., and we're not doing that.
So what kind of interest have you gotten?
We just open sourced it this morning.
I mean, are people excited? I mean, what's
Absolutely.
been the response?
Yeah, I mean, already we have some people on our forums talking about building them, porting them to the old Tesla that didn't have autopilot. That's the really great thing about it being open. Those other cars that we don't support, people can download our code and add support for them.
So when you said hello from Shenzhen, China, what did you mean? What were you doing there?
I was in Shenzhen, China.
And more. I mean, were you working on self-driving car tech there? Were you looking into regulations there?
We were looking for manufacturing partners. I did meet with a few companies there as well. I'm not going to say who, but, you know, the other thing about open sourcing this is there's so many more jurisdictions than the U.S. You know, the U.S. government may not like what I am doing, but some other government may, and, hey, we'd love to work with you.
Is China more open to it?
I don't know. To be honest, I do not believe that it would be easier to navigate the regulatory environment in China, where I don't speak Chinese, versus the U.S., where I speak English. But I don't know.
So, you know, folks like you have been willing to challenge regulators, but more broadly, you know, people don't want to take that kind of risk. And I wonder, how do you think regulations are potentially holding back self-driving car technology?
I mean, again, I can really only comment on my specific case. On my specific case, they tried to regulate a product that was not even available for sale. They actually gave me 10 days to, under oath, provide them the user manual for a product I'm not even taking orders for. So if I make a mistake in the user manual, they're going to Martha Stewart me, you know? So yeah, premature. I think that was the problem.
You have said that Elon Musk offered you a job to build self-driving car software for Tesla with a multi-million-dollar bonus. You turned it down. You've also said that your software is just as good as the latest Tesla autopilot.
I haven't said the latest, the previous Tesla autopilot.
So how does it compare to the latest?
Autopilot's a bit better. Autopilot's a bit better because one of the key things they're doing is fleet learning. All of their autopilot cars are helping to train the other autopilot cars. Once a bunch of people start building these, they communicate with our network. We train, we improve, we ship out. We'll be able to beat autopilot.
So what's your relationship with Musk and Tesla today?
I don't know. I haven't heard from him.
No new offers?
No.
Now, interestingly, President-elect Trump has nominated Elaine Chao to to run the Department of Transportation. Do you have any inkling of what she might mean for this industry?
I looked into her policy positions a little bit. I couldn't find that much. The woman who he chose to lead the Transition Committee on Transportation, she came from a libertarian think tank who criticized California's steering wheel and pedal policy for being overly restrictive, which I agree with. There has not been a single death in autonomous vehicles to date. You can talk about the autopilot one, but that's a lot more of a cruise control system than, you know, a true autonomous vehicle. So to try to regulate something that has not only never caused a public safety problem, but also could potentially solve a huge public safety problem, to me seems very premature, and I think that's the key word.
Let's talk about the Tesla autopilot death that you just referred to. There's a debate about semi-autonomous versus fully autonomous. What's safer? What do you think is safer? What do you think most cars of the future will be? Fully or semi-autonomous?
Well, there's a long path to get to fully autonomous, and I do not believe that there is a path to fully autonomous cars without first going through semi-autonomous. I think Tesla's plan for attacking the whole problem is brilliant and going to succeed. If Tesla is the iOS, we want to be the Android. You know what? We'll be the ones getting the 80%. We'll be a little bit worse for a bit, but I mean, that's kind of the plan.
All right. George Hotz, AI, one of the most famous hackers in the world. George, great to have you here on the show. Thanks so much for stopping by. Coming up, Nutanix, one of 2016's elite tech IPOs, turns in its first quarterly report. CEO Dheeraj Pandey joins me next. This is Bloomberg.
Hi, my name's Ashley.
Hello, Ashley. I am a socially intelligent robot.
Ashley Vance is going to the farthest corners of Earth.
This is the UFO. What am I going to find inside? You get Wi-Fi out here?
To find the mad scientists, the tech geniuses, and the dreamers of tomorrow.
It's about high-tech innovation and doing really, really clever things.
Hello, world. Friday on Bloomberg.
Microsoft held its annual meeting Wednesday, and one of the biggest topics covered was its cloud services. The company is on course to pull in $20 billion in annual sales from its corporate cloud business by 2018. Speaking at the meeting, CEO Satya Nadella described the massive scope of the plans.
By 2025, our society will produce 180 zettabytes of data. In fact, we're running out of words to describe the number of bytes we're gathering. Our role is to ensure that the data is not just an exhaust, but is converted into actionable, helpful insights and intelligence.
And sticking with cloud computing, Nutanix is out with its first quarterly report as a public company. Investors sent shares lower in Wednesday trade after the company posted a wider loss. Joining us now from Scottsdale, Arizona for an exclusive interview, Nutanix CEO Dheeraj Pandey. Dheeraj, thank you so much for joining us today on the show. So a strong report, but investors didn't love it. What's going on?
Well, I think it's just been 24 hours since the results. We look at things on a kind of longer term, so next 3 months, 6 months, 12 months. That's the way stocks should be looked at as opposed to 24 hours.
So Nutanix shares soared post-IPO, but they are down from the peak. In fact, they rose so much it surprised a lot of people in the market, and there was talk that perhaps shares were initially mispriced. Talk to us about your vision for the hybrid cloud and how it plays out in the realm of Microsoft and Amazon and Google, which are at war for territory here.
I mean, if you think about it, right now there's one real leader in cloud, and that's AWS. Microsoft has done a lot of work with O365, which is their Office application cloud, and then they have Dynamic CRM, but Azure is still supposed to be tested at scale, which it hasn't, and Google is still in the very early days of thinking about what products, what services is going to build in the cloud itself. So at scale, there's only one cloud, that's Amazon, and even that has not been tested for the global 5,000. I mean, they have some really large customers, 10, 15, 20 of those, that probably drive majority of the revenue from. So what is going to look for the global 2,000, the global 5,000, which spends, probably 80% of the IT spend comes from these 5,000 companies. And they have complexity of different kinds, which is not what the long tail of SMB customers of Amazon see, or these internet companies that Amazon actually has. I think that's where the real frontier of cloud really is going to be. What do you do about legacy? What do you do about operating in 100 countries? What do you do about hybrid networking, hybrid security? Everything has to become hybrid, and the operating system has to straddle the two sides of the aisle itself. And this is a massive computer science problem, a massive user interface design problem that nobody's really scratched the surface of yet.
So how do you see the cloud and the hybrid cloud evolving? Where are we in 5 to 10 years when it comes to the cloud?
It's very similar to in your last guest that you had on your program, talking about how you go from current cars to semi-autonomous to autonomous. I think there's a very similar journey here. It's not like all of computing that used to be on-prem is going to all of a sudden become rented, because there's value in owning and renting. Things that people want to own because they're predictable. It's like you don't want to go and rent a hotel for 3-5 years if you know you're going to live at a place, or you're not going to rent a car for 3-5 years if you know you need a car for the next 3-5 years. So I think there's going to be this yin-yang between owning and renting that will basically shake itself up in the next 3 to 5 years.
And do you think owning will go away at some point?
I don't think so, because if you think of, again, going back to, you own a house, you own a car. It's not like these things are going to go away simply because there's Uber and Airbnb. I think computing is very similar. When you know that you're going to spend this much and your workloads are this predictable, it's much cheaper to own than to rent, because renting has this sort of extra premium that's attached to it in terms of pricing and the cost, that you might just pull the plug tomorrow and somebody needs to make money off of that optionality, which is what happens with hotel rooms and rental cars and so on.
Now, you went public just ahead of the election, and I'm curious what advice you would have for companies and CEOs who are considering doing this right now, especially enterprise companies. What might you do differently, and what might you recommend in this political environment?
Well, I think the new political environment probably doesn't change much in terms of IPOs, but obviously there's some policy decisions that will actually happen in the coming, probably year or two, around immigration, around manufacturing more in the U.S., things of that nature. Maybe what happens when U.S. and Russia become friends as opposed to enemies that they are today. I think there's a lot of things that are up in the air right now about business in Russia and in CIS states and so on. But all in all, I think the IPO experience actually taught me that you want to have a win-win relationship with investors as opposed to trying to squeeze it all. And you want to really understand that your employees and customers and partners are still as important as stakeholders as they were when you're a private company, so that you don't over-rotate on this new stakeholder and try to just maximize the shareholder value, when you know that it's actually a second-order benefit, and the first order is employees, customers, and partners.
All right. Dheeraj Pandey, CEO of Nutanix, an exclusive interview. Thanks so much for joining us. Coming up, Malik of True Ventures talking about Trump and Silicon Valley. This is Bloomberg.
I'm Christine Harvey, and you're watching Bloomberg Technology. Let's begin with a check of your first word news. The pilot of a chartered plane that went down with 77 people aboard, including a Brazilian soccer team, told air traffic controllers he'd run out of fuel moments before crashing into the Andes. A recording from the air traffic tower leaked to a Colombian radio station said the pilot repeatedly requested permission to land due to a total electrical failure and lack of fuel. Only 6 people survived. Fidel Castro's ashes have begun a 4-day journey across the country to a final resting place in the city of Santiago. Crowds waved Cuban flags and chanted Fidel as the convoy passed by. The route traces the victory tour Castro and his rebels took after overthrowing the Batista government in 1959. Zimbabwean police resorted to tear gas and water cannons to break up scores of activists protesting the new local currency. The so-called bond notes introduced Monday is the first time the country has managed its own currency since 2009, when entire savings and pensions were wiped out because of hyperinflation the IMF pegged at 500 billion%. A Saudi prince has issued a public call for women to be allowed to drive in the conservative kingdom. Prince Al-Walid bin Talal tweeted the demand, "Stop the debate, time for women to drive." He said that in Arabic and English. Saudi Arabia is the only country in the world that does not allow women to drive. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Christine Harvey. This is Bloomberg. And it's just after 7:30 Thursday morning here in Hong Kong, 10:30 in Sydney, where I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Good morning, Christine. Well, the ASX off to a very bright start after 35 minutes of trading, up 2/3%. And as you'd expect, it's a roll call of the energy stocks leading the gains. Beach Energy and Santos both are better than 10% right now. Fortescue Metals also doing reasonably well. That's despite the price of iron ore slumping almost 7% overnight. That's iron ore's steepest decline since March. Rio Tinto also showing some gains, up nearly 2%. This is after announcing they plan to charge a premium for Pilbara Blend fines. This is the world's most traded iron ore product, and that's to stamp out what Rio sees as a growing trend of Chinese steel mills marking up and selling on that product. Also waiting on data out of China today, manufacturing and non-manufacturing PMI expected to pull back a little but still show signs of growth. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
Technology, I'm Emily Chang. In Silicon Valley, technologies like AI and robotics are seen as innovative, but in other parts of the country, they're job killers. In the tech industries, is the tech industry's lack of empathy a real issue? If so, how much will that miscalculation cost the industry? Joining me now, True Ventures partner Om Malik, who recently wrote a piece for The New Yorker titled "Silicon Valley Has an Empathy Vacuum." Great to have you back here on the show. So you opened the piece talking about the quiet and depression that has swept Silicon Valley since the election. And I'm curious, what do you mean by an empathy vacuum? Explain.
I feel that, you know, in the aftermath of the election, the response from Silicon Valley was as if we could have done more, or as if we could have given more money. And there was a lot of sense of self-righteousness about as if we didn't do enough from the point of election. And there was a lot of debate on Facebook and Twitter, and people who have called friends.
It's still happening.
And for me, it was like I took a week to kind of step back and say, wait, why are we not talking about what is the actual cause of why a large portion of our society voted a certain way? And the more you realize it, it is coming from the place of people have very little hope, they have no jobs, the economic prospects are dark, and people are fearful. And to kind of make it all about Silicon Valley is the wrong way to think about it. I actually think that we are contributing to the big changes in the society, so it behooves us as this industry of change to take a step back and perhaps have a sense of understanding and empathy towards people who are, you know, who we tend to impact.
Mark Cuban, who is a huge Hillary supporter, tweeted, "We all need to give President-elect Trump a chance, support the good, lobby against what we disagree on. No one is bigger than us all." I wonder, empathy to what extent? If, you know, some of these folks are in jobs and industries that are outdated, you know, do we do this to the extent of holding back progress and holding back innovation?
I have never said that we should hold back progress. We are, and I'm a big believer in disruption on an ongoing basis. It's not, I've made a life and a career out of it. But when I say empathy, we need to actually understand what are the changes which are happening, where they are happening, and are there any things we can do in order to ease some of the pain. I'm not talking about handouts or any of those things. I'm talking about, can companies like Google and Facebook and Microsoft think about setting up smaller development units in, you know, middle part of the country or in south of the, you know, southern part of the country, sort of like how Chattanooga is trying to do, you know, innovative tech startups there. Because even in smaller places, even 2,000 jobs have a knock-on impact on rest of the economy. It has an impact on restaurants and other services, construction. So it's not going to replace every single job, but it does give some direction of hope to people. And similarly, we need to kind of think about retrenchment of a large, a couple of generations of Americans, right? Like, I understand that there are certain people who will not be part of the digital shift, right? But there is a lot of people who are in their late 30s to mid 40s who also need to transition, right? And I think we need to be thinking about, can we redeploy them in a different part of the workforce? But before we do that, we actually have to understand them. We actually have to understand what are their fears. And that's what I mean by empathy.
On that note, you close the piece by saying, let's start by not raging on our Facebook feeds, but instead taking a trip to parts of America where $5 lattes and freshly pressed juices are not perks, but a reminder of haves and have-nots. Otherwise, come 2020, Silicon Valley will become an even bigger villain in the popular imagination, much like its East Coast counterpart, Wall Street. I want to talk to you a little bit about Facebook because I wonder, do you think Facebook should be doing more to monitor fake or inaccurate news? Should they be doing more to make sure we're not living in our own little bubble? Or are they a technology company and not a media company?
I think fake news, from my standpoint, is more like spam in email. I have consistently maintained that it is platforms' job to make sure that misinformation and disinformation does not spread, especially if it is from dubious sources. And that's up to them and how they implement it. If this is a company which can implement censorship in China, I think it can do a lot more from spreading of misinformation in this country. That said, the filter bubbles and all, we create our own filter bubbles. Facebook didn't create that. Rich people always hang out with rich people. That has been going on for thousands of years. The Roman senators always used to hang out with Roman senators. And it's the same thing. The technocrats are hanging out with the technocrats. And that's, and I'm one of those people. It's like, I can't be self-righteous about that. But I do think, forget the Facebook, as an individual, we need to learn to listen to other people.
Right.
I think listen better should be the hashtag we should be talking about.
What about Twitter? Deb Lee, the CEO of BET, who's also on the board of Twitter, told BuzzFeed that she believes it helped him win the election. I talked to Ev Williams, the co-founder of Twitter, who said he watched Trump use Twitter with a mixture of bewilderment and fear. You have some people saying Trump's tweets are hateful and abusive, and therefore he should be kicked off Twitter. Should Twitter kick Trump off Twitter?
I think if you think about what Twitter and Facebook, the role they played in the election of the current president-elect, I think they were built for this kind of, sources go direct. I mean, this is what the technology was built for. And the social platforms of distribution of news at network speed.
So should Twitter take a stand against Trump?
Why should they?
If what he is saying violates their rules.
Has it?
I don't know. I mean, it depends
on
whether you characterize what he said as abusive and hateful, which supposedly they're trying to cut down on.
Well, I think which is very different than what they've been trying to cut down on. I think, and look, I'm not trying to get into the whole political debate of this, but my view is both Facebook and Twitter proved their true value as platforms for sources go direct in this election. I think, we forgot that in 2008, same Facebook was hailed for electing President Obama, right? So I think we cannot pick and choose as to what the results and the outcomes are, whether we like them or we don't. And I think, bewilderment over, is bewildered by Trump using Twitter. I think he doesn't understand his own platform or what he built, or maybe he just didn't build it. I mean, that's what I look at it, it's just like, okay, we can't get too self-righteous about this.
All right. Oh, Malik, a great read in The New Yorker, partner at True Ventures. Always great to have you here on the show. Well, more spending stats are coming out as the holiday shopping season gets into full swing. ComScore reporting Amazon is once again ranked as the most visited online retail site on Cyber Monday, followed by eBay, Walmart, Kohl's, Target. As we've been reporting, mobile won out as the preferred method of shopping. 89 million people shopped on their device versus 78 million on a desktop. Overall, we're entering a strong holiday shopping season. ComScore reporting $29.7 billion has been spent online to date, up 12% compared to last year. Coming up, co-working spaces are taking off in Asia for small companies and entrepreneurs. Singapore-based Space Mob is looking to expand its business across the Pacific. We'll catch up with the CEO next. This is Bloomberg. In recent months, co-working spaces have become a booming business in Asia. Singapore-based Space Mob just announced a $5.5 million seed round, which is quite a large round for the region. The company plans to use the funds to expand its reach beyond Singapore and across Asia-Pacific. Joining me now from Singapore, Space Mob CEO T. Fuwa. T, thank you so much for joining us. So this is the third business you founded. Why co-working space and why Singapore? How much demand is there?
Oh, it is. Oh, thanks for having me, Emily. It is definitely an exciting time for co-working. I think lines are blurring, especially when co-working is being offered to traditionally more entrepreneurs, more SMEs. But even the corporates are looking at co-working as well right now. This is a way for them, essentially, to save capex, a way for them to be flexible, a way for them to basically learn how to be nimble as small companies. So we are helping companies small to become big and big companies to remain small and nimble at the same time.
So WeWork has expanded from the U.S. into China. Is that competition?
Well, you know, it is definitely a competition. I think we are very much focused in Southeast Asia initially, but we have the ambition to go beyond Southeast Asia towards Asia-Pacific. But it is a very Asia-Pacific play. The products and the technology and the value-added services that we provide are very much catered toward Asian companies expanding regionally. And I'm talking about freelancers, SMEs and large corporations across different industries as well.
Describe the state of the startup landscape in Singapore and Southeast Asia.
Well, it's definitely a good time to be in Southeast Asia, especially in Singapore right now. You know, when I first started at my company 3 years ago, it was very difficult to raise funds. But nowadays, I think, you know, the funding amount that's available to startups across this region has raised from $500 million to more than $1 billion right now in just the last 12 months. So you see a lot of startups coming in, and you see a lot of startups getting more mature right now, and we've been seeing a few unicorns that has been come out of Southeast Asia alone.
So the new funding, what do you intend to use it for?
Well, the funding is to allow us to expand aggressively and quickly across Asia Pacific, right? But more importantly, it is for us to invest back into our members and businesses who are with us. And these companies are expanding quickly throughout the region as well. So we have one now in Singapore. We have another one being built in Singapore, and then a first office in Jakarta. And we plan to have another 30 offices in the next 3 years. So it is going to be fun. It's going to be quite exciting to achieve all of that in this short amount of time.
Now, you also founded a company prior called Travel Mob that was acquired by HomeAway, and I'm curious what you see in the home sharing space with the rise of Airbnb and their own, you know, global ambitions trying to get into China as well. Do you think Airbnb can succeed in China?
Well, I think everyone's trying to be successful in China. I think it's especially complicated for a non-Chinese company to do business there. But there are definitely ways. There have been success stories. I think one of the biggest things about Airbnb is definitely on the regulation side in China. But I think all these companies are trying to solve that. And I think the trend is definitely here to stay. So I don't see that to be an issue. I see that to be an opportunity for these companies to take on.
And we asked this question when it comes to Uber and ride sharing. Do you see one player rising to the top? Will this be multiple players, or is it a winner-take-all market? How do you see it in home sharing when it comes to Airbnb versus HomeAway versus the other global players out there? Do you think one of them, that a winner will take all, or do you think that there will always be multiple players? If so, how many?
You know, I think Airbnb is definitely getting a very strong brand here in Asia Pacific, but there are various players that are really fighting it out. I mean, back then, Travel Mob was really competing really hard with them as well. But I think what's really exciting is, you know, the whole concept and principle of sharing economy has sort of migrated towards the working economy as well. And I think that's why I'm super excited to talk about, you know, Space Mob, where it is about allowing the sharing economy principles to be applied to entrepreneurs, to freelancers, SMEs, and even large corporates here across Asia Pacific.
All right. Space Mob CEO T. Fuad joining us today. Thank you so much for stopping by.
Thank you, Emily. Thanks for having us.
All right, President-elect Trump and Vice President-elect Mike Pence will travel to Indiana tomorrow to make a jobs announcement regarding Carrier, the manufacturer of air conditioning and refrigeration products that became such a hot-button topic during the campaign. That is expected 11 a.m. Eastern Thursday. Bloomberg Television will be there live. And coming up, we take an exclusive look into Massachusetts-based drone maker SiffyWorks and how they've signed deals with the U.S. Army and UPS. This is Bloomberg. A story we are watching. The maker of Angry Birds, Rovio, is spinning out a new company called Hatch. It is an app that aims to be the Netflix of mobile gaming. Hatch will team up with China's Huawei to give users a wide range of mobile games from different developers. The idea is to create a new subscription revenue model for mobile games. The hope that developers will one day no longer need to worry about monetizing their games with ads or in-app purchases. Drones are swiftly buzzing into new and unfamiliar territory, from military operations to food delivery. But there is one type of commercial drone you may not have seen yet. It is designed by Massachusetts-based drone maker Sci-Fi Works, which already works with the Air Force and UPS. Bloomberg's Ann Mostu visited the company's FAA-approved test facility for an exclusive look.
Hovering among the trees at peak foliage in this Massachusetts town is an unfamiliar object, a high-powered commercial drone.
So what you're seeing here is our park system. And what the park is it's Persistence Aerial Reconnaissance and Communications Platform.
These drones aren't moving much. In fact, if you look closely, you'll see that they're tethered to the ground. That's because they're designed for surveillance and communication.
And the tether allows us to do a couple of things. It allows us to keep the bird in the air indefinitely. It's powering the system. It's also allowing us to move data up and down the tether.
Lance Vandenbroek is CEO of Sci-Fi Works, which makes these drones, which can fly at 400 feet for up to 220 hours. Sci-Fi is partnering with state police, the U.S. Army, and big events such as concerts and marathons.
The screen you're seeing here is actually coming off of that camera. Yeah, we can lock it in a car. This is our payload. This is a CM100 camera. It gives you 30 times optical zoom.
The Danvers, Massachusetts-based Sci-Fi is the latest startup by Helen Grainer.
From a technology point of view, we're rolling right along, or flying right along.
Grainer is an MIT graduate and co-founder of iRobot, the company behind the Roomba and the Packbot used in Iraq and Afghanistan. Sci-Fi has raised $36 million to date from investors and strategic partners such as Motorola and UPS. The drone maker successfully flew its first delivery with UPS this year, medicine to a hard-to-reach island.
I think initially, going to inaccessible areas, emergency relief, rural areas, that's the right place to start. But no, I do envision drones bringing you your Starbucks coffee in the morning, or bringing you your pizza at night, and maybe even bringing you milk that you forgot at the store.
The FAA cleared small commercial drones for takeoff last summer, but the promise of delivery drones has been limited by short battery lives, 45 minutes max. Tethered drones present a new set of challenges, but for Sci-Fi, it's a bigger picture play.
The tethered drones, the persistent drones, they're making our drones really much more rugged, much more reliable. We get much more testing in, and that will lead to much better, safer, more reliable delivery drones.
Big players like Amazon, Alibaba, and other startups are competing in a global market for commercial applications of drone technology that's valued at $127 billion by PricewaterhouseCoopers.
We do work with a number of government agencies, public safety. We're starting to move into the private sector, so we're starting to work with customers in the oil and gas space, telecoms, utilities.
Sci-Fi currently employs 50 people and plans to double the size of the company in 2017.
You know, it's an exciting time for drones, and the sky's the limit.
Ann Mostu, Bloomberg, Danvers, Massachusetts.
Ann Mostu there at the Sci-Fi Drone Test Facility in Danvers, Massachusetts. And that does it for this edition of Bloomberg Technology. We've got a great lineup of guests tomorrow. Ryan Hoover, CEO of Product Hunt, will be joining us. Be sure to tune in. Also, we get our hands on the Snap Spectacles without having to stand in line for 6 hours. Jeremy Liu of Lightspeed, one of the earliest investors in Snapchat, stopped by, gave us a little turn. It was Snaptastic. Really, actually, it was pretty fun. Excited to share that one with you tomorrow. And remember, all episodes of Bloomberg Tech are live streaming on Twitter. We are at Bloomberg Tech TV, 6 p.m. Eastern, 3 p.m. Pacific. That is all today from San Francisco. We'll see you tomorrow. This is Bloomberg.
New York City. This is Charlie Rose.
Good evening. I'm Jeff Glor of CBS News, filling in for Charlie Rose, who is traveling. We begin this evening with the economy. President-elect Trump has outlined an ambitious economic agenda to kickstart his presidency. He has proposed a massive public spending initiative on roads, bridges, and other infrastructure. He's also expected to roll back regulations and introduce tax cuts not seen since the George W. Bush era. Meanwhile, today, Trump announced 2 cabinet appointments. Tom Price, a staunch critic of Obamacare, to lead the Department of Health and Human Services. And Trump will also said he'll nominate Elaine Chao, the former Labor Secretary, to head the Department of Transportation. Joining me now is Dennis Berman. He is financial editor of the Wall Street Journal. And Jill Schlesinger. She's a CBS News business analyst and host of Jill on the Money. I am pleased to have both of them here right now. Dennis, let's start with transportation and this Chao pick today. If the president-elect wants to indeed get this massive infrastructure project done, she would seemingly be the person with Washington connections.
Well, she does have a lot of experience in the government, serving 8 years under George W. Bush, married, not perhaps incidentally, to Mitch McConnell, leader of the Senate majority there.
The only one who served the full 8 years under George W. Bush.
That's correct. So obviously, a creature of Washington, knows how it works. But I think for me, Jeff, the really interesting thing about infrastructure is there's so much work that has to go into actually spending the money. We talked about this at the end of the financial crisis with shovel-ready projects, and there's a lot of work to be done.
A lot has been made of infrastructure. I wonder, has it gotten better at all since the end of the financial crisis, or no?
I don't think that's the case at all. If you look at funding from state level and city level for much of the infrastructure around this country, so many states and municipalities have been pinched so deeply that they're just putting off maintenance projects. So Trump is right and Congress is right that the spending has to take place, but it's just not going to happen in the way, perhaps, that the politicians want it to materialize.
Jill, how might we imagine that this all happens? If it did, like $1 trillion they're talking about?
Yeah, I think there's a real question, though. Is this a jobs program or an infrastructure program? Because if the genesis of this is really we need to put more people back to work, or we need to take people who were maybe disenfranchised from globalization and technology and try to get them involved and actually working, it's a very different question than what is the best way to rebuild the infrastructure of this country. Right now, when I talk to a lot of analysts, they'll say to me, you know what? We don't even have enough people today to do projects that are already funded. We're not sure we have the skilled labor necessary to do all these projects. I think the reality is that we are going to see money that is spent. Will the government be doing it on its own? No, it's going to be some sort of private-public partnership. And sometimes when the private sector is involved, they'll want to concentrate on projects that have high yield. And many of those high-yielding projects may be in places where the governments and the localities could do it themselves but are choosing not to. So I think that the devil's going to be in the details of this process.
Or they may want to do it at lower cost, which means oftentimes, I mean, in a few cases, even in New York City, they've hired Chinese construction companies to redo some of the bridges here.
Well, I mean, the space program has become the public-private partnership as well, and there's many promising possibilities, but also challenges as well. You say, can it be a jobs or infrastructure? I mean, can it be both at the same time?
Well, it can be, but I think that sometimes these projects may be drifting towards the types of labor that really needs to be skilled labor. And, you know, it's one thing to do some kind of big, huge infrastructure spend when you've got 10% unemployment in the economy. But right now, with unemployment rate under 5%, finding the right people could be actually pretty difficult in this process. So I think, look, we do all want this. This is actually a bipartisan issue. But trying to find the right people to get these projects done is not as easy as that blurb of let's do infrastructure spending, because that is a much more long-term project that requires a lot of thoughtfulness around it, and it's more than a slogan.
Let's talk about possible tax cuts, if we could, Dennis. These, if they happen, they are not insignificant.
Not insignificant. We're talking huge numbers, both at the corporate tax level and at the individual tax level. The hope, of course, is that money will be spent. as far as the corporate level goes, this idea that there might be hundreds of billions, perhaps even trillions of dollars that are taken offshore where they are today, taken back to the U.S. where they're put to productive purposes, say giving people jobs, building a new business infrastructure. Again, I think the devil is in the details there. We want companies to spend money for business investment, but they have been so reticent to do that. I just don't know if they're really going to do that, even if the incentives are for them.
Look at companies like Apple still sitting in how many billions of dollars right now and not spending that. We ask if it'll happen. Will the cuts happen?
There is going to be some tax cut plan because between Speaker Ryan and President-elect Trump, they are close enough where a deal can be made here. I think the real fascinating part of what the deal ends up being is who makes money on this. And I think that if you look at it and you say, okay, Tax Policy Center scores the Trump plan and says that, you know, the average household in the United States will get $800-900 in tax savings. That seems awesome, right? You know, 2% sounds great. But if you find out that the top 1% got much more at the end of the day, 10, 12, 14% of their gross income, then that's going to make a big difference. And the other part of this is what we know from economists is that when you give a tax cut to someone really wealthy, okay, you know, they might buy a new car, right? But what they're going to generally do is invest it, right? And whereas a middle class or a working class person will take that tax money and potentially maybe pay down some debt, but probably go out and spend it. So it's considered more stimulative if you go to the middle where there are more people and give the money there. If it goes to the higher end, I am not sure how much it's going to actually boost the economy. It's going to be good for rich people, no doubt. It's going to be less good for the middle and the bottom.
But stimulus remains a controversial word, even more so maybe than it was just a few years ago, right?
Very controversial word. I get back to business investment, to Jill's point. When you think about, say, the rich people who are investing more in companies, where's the company money going? Oftentimes it's going to share buybacks, it's going to dividends, it's not necessarily going to productive use. So when we, again, talk about stimulus, it's great on the election trail and it's great in Congress, but again, actual dollars in the people's pockets who want it and need it, or perhaps who voted the way they did, I think we've got a long way till we get there.
Have you been surprised at what the market has done since the election?
Well, I was teased mercilessly because people said to me, you said that the stock market was going to crash if Trump won. And I said I was right for 3 hours. You know, on election night, it really did look like a crash. Yeah, exactly. It looked like that. You know, I think it's fascinating because the story's yet to be told. We know that the initial market reaction has been pretty amazing. We've seen stocks rise pretty dramatically, I think because of these ideas of some stimulative effect of tax cuts as well as some spending going on in infrastructure. And we see that the Dow is doing better than the S&P because it has more industrial companies. Small companies have been on a tear. It's been phenomenal. But let's get back to, put my old CFP hat on for a second. The average American, about, say half of the Americans have 401ks or IRAs or any investment account. That person has stocks and bonds. And the bond market has gotten hammered since. Absolutely hammered. Now, that doesn't mean that we are going crazy. We're not going to face double-digit inflation anytime. But what that does tell you is those two markets see the world quite differently. Stock market's sort of the more optimistic, the bond market a bit more pessimistic, a bit worried that all this spending could come home to roost, could blow out the government's debt problem in a major and dramatic way, and I think a little fearful about what do the next 4 years mean for the economy, for people, and for inflation.
What do the next 4 years or the next couple of months mean for rates?
Well, rates moving up. I think you guys are overstating a little bit. Those rates were down to 1.35% on a 10-year Treasury. I mean, that was a historic low of all time. So we're now up about 2.35% on a 10-year Treasury. By any historic measure, it is still incredibly low. So on a relative basis, the rates have moved a lot, and that will affect people's ability and want to get a mortgage, finance a car, and education, and all those things. That matters. But we have to keep in mind that the Fed as well wanted inflation in our economy. We were sort of standing on the abyss of potential deflation. Now we're looking at some possible inflation, and that's not necessarily bad.
Some possible inflation? Or...
Yeah, so right now the Fed's expectation is below 2%.
It could pick up real fast.
It could pick up fast. Again, this is on a relative basis. It could pick up, but right now I would say the Fed, like when they're at home at night having private conversations, they're probably saying, those guys on the Federal Reserve, they're probably saying, you know what, it's not too bad. I'll take this. I'll take this. Maybe Jill has a different view, but little inflation is not terrible at this point in the cycle.
No, I agree with that. I think that what I'm talking about is the pace of change, which has been pretty dramatic. So to go from 1.3 to 2.3, it seems like, yes, of course, rates are still low in the 10-year, but you just lost 8% on your bond positions in a pretty short period of time. That said, I agree, the Fed would like a little inflation. Janet Yellen, who came under great pressure during the Trump campaign, he said she kept rates and the Fed kept rates too low for too long. Right. She may become the President-elect Trump's good friend, because if things start to accelerate, they're going to raise rates faster next year.
And my point is that sometimes they just tend to accelerate a little faster than maybe you think, and then you have to be reactive, and sometimes you can't react fast enough.
Well, I think that that's the real tough position of being a central banker, is that, you are taking in information. Information can change, and obviously that if the Fed has to accelerate rates because things are moving a little bit faster than expected, that's fine. I think what's more intriguing to me around the movement in the bond market is that it feels quite extreme relative to what is going on the ground. Because what we don't know, again, is we don't know exact details of the spending plans, and we also don't know whether congressional Republicans are going to push back against mounting debt in the United States. We have a whole slew of legislators who were elected based on the premise that they did not want too much spending, right? These were the people who were willing to blow through the debt ceiling to keep spending in check. Are these the same people just going to rubber stamp a deal that adds so much money to the national debt? I don't know.
And they also have very specific thoughts about trade as well. Well, everybody here involved. The president-elect said some very strong things.
I know. This, to me, is the most interesting part of everything that's going to be happening in Washington. Whether there are trade barriers erected in one form or the other, that, of course, raises the possibility of more inflation, to your point. So the dollar is getting stronger as interest rates are rising. If we erect trade barriers as well, the prices of things that are going to be coming into this country are going to be hit quite hard. So we might be embarking on an incredible experiment on trade barriers in the modern world, and we have no idea what the effects might be.
We're embarking on a whole bunch of experiments. It seems like. Jill, what else are you watching out for right now?
I think what's kind of fascinating is coming into the new administration is to just see what kind of collaboration will take place with strange bedfellows. I was always struck by the fact that when we talked about trade, for example, during the campaign, you had the Sanders people and the Trump people kind of coming together, right? There was like a populist sentiment. So I'm very intrigued to see what kind of conversations are going to happen across the aisles from one another. I'm interested in seeing details of all of these plans. I'm interested to see what the electorate believes is what's happening to them, because sometimes what's actually happening to them is not evident until some time passes. And I wonder if many times what we do as a population is we kind of say, I'm voting for the guy who seems like the guy who's going to just shake it up. And if it goes back to something that feels kind of like a throwback, what are those people then going to do at the midterm elections? I think that's going to be kind of an interesting thing. And, of course, we want to see what all these other countries are going to do. I'm still worried about Brexit. You know me. I'm a nervous Nelly. So let's see how that, we're supposed to get Theresa May, the Prime Minister, to come out and say something. So I'll keep an eye on that. But there's so many different pieces moving in the world right now. And as you said, it's unprecedented, uncharted. But it's uncharted on so many different areas. And to some extent, I think the economics of all of this is interesting. But actually, the fabric of society is even more interesting.
It's always unsettled to a certain extent, though, right?
Not this much.
Absolutely. Oh, come on. I mean, we can look back at any point in history, 1914, 1939.
Oh, you have to give me world wars?
Pre-World War I.
But if I could take your question for a bit, the relationship between the executive branch and the Federal Reserve, we fought this war 200 years ago, right? So Andrew Jackson, Second Bank of the United States, we eventually kind of abolished that. We start the Federal Reserve about 80, 90 years later. it's going to be really interesting to see if he really appoints people who are going to be very aggressive on what the Fed's role is in the government and the economy at large. He's said a lot of things. Whether he appoints someone like Jeff Hensarling to Treasury Secretary, who's been very vocal about his reservations about the Reserve, if I may use that term of language, that could be a very important thing for markets. The markets have become dependent on the Fed. You could say that's a bad thing, that the Fed is going to bail them out, and that relationship might change, which in the end, depending how it's done, might have some positive effects, but certainly there'll be some volatility in what the end result is.
But that link is tighter than ever, is
Oh,
it not?
yeah. You know what's fascinating, though? I mean, Janet Yellen, the Fed chief, had said a year ago that she believed that there had to be fiscal solutions, not monetary ones, right? So basically she's saying, hey, Congress, you want growth, you do it. Now we're going to have that, and now the Fed can actually retreat and normalize policy. And I think that that's going to be an important. It's almost like a post-crisis natural occurrence that you thought was going to happen a few years ago. Well, now it's going to be on a fast track to happening. But that said, you know, we've been talking about stimulus measures, what's shovel ready, what's this, what's that, and again. It has to be the efficiency of getting these dollars to work. And my concern about some of the rhetoric that we've heard is that it sounds like a panacea. And we've seen other countries try to do this. Japan has a gorgeous rail system. You know, it's amazing. The economy's still mired in a low growth period and maybe deflation. So if we spend all this money and we add to our national debt, is this actually going to move the needle or not?
Well, okay, I can paint a more positive scenario for you than that. I share all your concerns, Jill. I really do. And you know, the details, shovel ready, you're totally right. But let's just say that for a moment that there's a collective belief that somehow the attitude and the sentiment in the business community specifically has changed, and people are willing, like I said, business investment-wise, to spend money. Consumers are willing to spend money. Whether you agree with Trump's politics or not, it at least, hypothetically, presents an opportunity for us collectively to reset the mindset, which was really one thing prior to this, and that was stuck. It was stuck. Yeah. Productivity was poor. Growth was poor.
For a long time.
Yeah. So whether in the end there's substantive changes to those things, I don't know. But if we collectively believe ourselves that they are going to happen, it's really kind of a fake it to make it thing, which might be the ultimate Trump creation, perhaps, that might create some positive benefits.
We have economic crossfire.
Oh, no, but I would agree with that. But I think that was starting to happen already. We were already seeing wage gains coming into this period. We were already seeing some consumer spending. We just got the revision to third quarter GDP consumer spending stronger than expected. So all of this is somewhat has been happening organically. And you're right. If it's a jumpstart, great. I'm all in. I want that to happen. I am generally a somewhat nervous person when I look at the promises. That's my number one thing. And I just want people to be clear that promises and campaigns are different than governing. And when we see the results, I'll be psyched. I want everyone to have a job, but I want people to actually be clear that what we're doing is going to have a good short, intermediate, and long-term effect, and we'll have to see.
Well, and business cycles are different than governing, too. And
Absolutely.
One is not dictated by the other. But it is pretty amazing to think that we are almost now 10 years removed from the financial crisis.
Yes, we are scarred.
And you're almost a decade out. Dennis Berman, Jill Schlesinger, thank you both very much.
Thank you.
Hey, I'm Ty Pennington.
The great Jimmy Johnson is here. He is the 2016 NASCAR Sprint Cup champion. He made sports history on Sunday in Miami, where he captured a record-tying 7th year-end title. That feat equals him with Richard Petty and Dale Earnhardt Sr. The win was Johnson's 5th of the season and the 80th in his career. I'm pleased to have him back at this table. Welcome.
Thank you. Glad to be
when
here.
you think of that with Petty and with Earnhardt Sr., I mean, that's pretty cool place to be.
It is such a cool place to be. Those legends, what they've done for our sport, just honored to be joining them.
Yeah. How did you do it? Was this a difficult year?
It was a difficult year. We won a couple times early in the season, then the summer kind of hit. As a group at Hendrick Motorsports, we realized our 4 cars weren't performing as they needed to. All of our department heads and everybody in general. We have 650 people that work at Hendrick Motorsports to build race cars for us, and everybody.
This is all out of Charlotte.
All out of Charlotte. Everybody locked arms, and we knew we had a mountain to climb. And through working together, we did it. And just in time, just as the chase started, our playoffs started, we were getting hot again. Won 2 events in the postseason, and then that led for our opportunity at the championship in Miami, and won the race, won the championship.
Well, I mean, interesting because I follow Formula One. They got a big, sort of climactic race coming up this weekend in Abu Dhabi because, and the idea is that one was the same team, one was winning for a while, and the other was winning. Now they're essentially, it'll be decided by, a final Sunday.
Final race.
Yeah. Which says interesting things to me about, the nature of the engine, the nature of the driver, the nature of the team, and all of that.
Luck. I mean, you think of the stress we put on these vehicles, and sometimes a 5-cent part breaks, or it can be something much more elaborate with the engine, a puncture with the tire running over some debris on track. I mean, there's so many variables. That's what makes it. That's what makes this championship so special. And over the course of the year, all the opportunities you have to have it go away, and it doesn't, and it's there for you.
How have your skills changed?
I feel like I'm taking great care of myself physically, so I'm able to stay sharp mentally and physically. But experience...
People don't know how much driving is a physical
without a doubt.
challenge.
Yeah, without a doubt. Huge part of it. And then to sustain the energy and the hydration over the course of a race, the things that I've learned through endurance sports have carried right over to help me with my day job.
But in terms of, do you see it differently? Does the experience give you a sense of how you see the challenge of where you, and the challenge of the race itself from the driver's
Without
perspective?
a doubt. Yeah,
beyond the fact that you're physically better, beyond the fact that you have incrementally added new experiences.
Absolutely. I mean, these tracks change each and every year. So like a golfer to a golf course, the more times you come to a course, you know where the breaks are, you know how to play it. And I know how to drive these tracks, and I can watch them evolve and know where the line goes and how to set up my car and the direction to lead my team. Plus, life experiences and learn how to manage stress, manage pressure, manage your schedule, manage life. That stuff's all very, very important, especially when you race as often as we do.
Yeah, the track is one thing, but beyond the track, the difference in the track in terms of Formula One, in terms of Indy 500, in terms of NASCAR, what's the difference for a driver?
In NASCAR especially, we're not allowed to have telemetry on the cars.
Yeah.
IndyCar, Formula One, they have streaming data coming off the cars, and they can tell you what's wrong.
Exactly.
I'm the computer in NASCAR.
Yeah.
The 40 drivers in their cars in a NASCAR race are the computers. So the relationship with the team
I didn't know that.
and
That's
driver
really interesting.
is key. Yeah.
So all the data that's pouring into a Formula One command central, you don't have that.
We have everything away from the data at the track. So we have all the same tools outside of, so we prepare and debrief and use all those tools. But when the car is on track,
in the car.
No, it's me. So trying to connect me to those tools and validate those tools and know how to use those tools is a big part of our job.
When you didn't win for, 24 races?
Yes.
Were you beginning to doubt yourself?
No. 24 races isn't long, especially when we have 36 a year that we run in. It wasn't fun by any stretch. We weren't even leading laps and looking at a win. So that part was tough. But one thing that was helpful, Dale Earnhardt Jr. had a concussion. That is not the helpful part at all.
Yeah.
But it allowed Jeff Gordon to come back in the car. Jeff retired last year, and to have his expert opinion, and one, he was watching from afar, and then he was able to get in the car and feel what we had been talking about. That was a big moment for us and helped us find the right direction to get Hendrick Motorsports back on top.
Okay, but explain to me what he did.
It was just really validated what us drivers were talking about.
Because he had driving experience, he he could confirm and validate and
validate.
In some cases, interpret too.
Exactly, and I mean, he's taken on a very strong role in managing the company. So to know, drivers are going to complain about everything. That's my job.
Yeah.
So we're complaining about all kinds of stuff.
Yeah.
So when Jeff experienced it, he was able to help Mr. Hendrick understand where we needed to infuse some money in which departments, and aerodynamics, mechanical grip, the engine development, and really kind of fine-tune those areas.
Do you ever want to own it?
Absolutely not. There's no chance.
You don't want to be in it.
I like to show up with my helmet and go racing.
Do the race and,
yes,
and go do the rest of your life.
Yep.
Yeah. But no sense. And no sense to go to any other kind of racing?
Yeah, I've always wanted to experience other cars. I thought I'd race Indy cars when I was a kid. That was my dream.
Right.
So I've never been in an open-wheel style vehicle, which I'd love the chance to drive one. But when NASCAR's
So what's
done,
stopping you?
One, I'm just so busy. Two, I have a family. Open-wheel cars are far more dangerous than closed-bodied cars. And I had to deal with my wife prior to having kids. I could drive an open-wheel car or a car without a roof on it. Now I have a family, so I've got to honor that deal I have with my wife. But endurance sports car racing is something that interests me, especially as I would retire from NASCAR. And then going back to my roots and racing some of those off-road trucks.
You've always been in amazing physical shape. You used to do, John Soteris, who you and I both know.
Absolutely.
A good guy who understands a lot about, how the human body works. He had a gym, and you would come there and you'd work out, and you had a gym in your house. And but you have gradually evolved towards simply doing marathons and
triathlons
triathlons. And how is your body different then because of that?
Definitely a lot lighter, which is fun and a benefit being in the race car. John Soteris gave me great discipline and structure for doing the crazy schedule and trying to fit it in and being productive and making the most of the little bit of time I have.
It has to be routine.
It has to be routine and effective. Just wasting time doing things isn't going to cut it.
But it's better and easier for you because it's now performance stuff. I mean, in other words, you're out there, it's not just a workout.
Yep. Absolutely.
It's a measurement.
The endurance side has been really good for me because our car races, our shortest race is 3.5 hours. So hydration, nutrition is very, very important. And I've learned a lot about those aspects and have been able to carry over to my day job.
Here's what your crew chief said, Chet Knaus.
Knaus.
He's probably the most underrated champion in this sport. Most people in this situation, we were just in would crumble, meaning not winning every Sunday. And he didn't ever waver. He knew what he needed to do. He knew what the demands were at that point, and he made it happen. The real spark in this whole thing is Jimmy. I mean, you felt like you were carrying the future of the team on your back.
Yeah, this year's been a special year for me. I mean, I've always been focused on being successful, but I made a pledge to myself and my team and the company that I was going to be more significant in the company. And I've taken on a different role with Jeff Gordon retiring. He kind of passed the torch to me and sat me down and had dinner and said, look, you can have whatever you want out of this company, and you can be as vocal and involved as you want, or you can just continue to be the driver that you've been, which is totally fine. But I felt like there was something pulling me to be a leader for the company, be more involved, and then help the young drivers that a driver, Chase Elliott, that came in to fill Jeff's spot.
Right.
Casey Kane and his team have been falling on some hard times to help those guys be more competitive, to be there for Dale Earnhardt Jr. and help him through these times. So the process has been a lot different this year, and I've just been more vested in the overall company itself. So it's been a fun experience.
But here's what people say. Dale Earnhardt Jr. said that you willed yourself to the front. You willed yourself from here.
I've always been all in. I mean, since I was a kid in Southern California, my parents, my dad ran heavy equipment. My mom was a school bus driver. And I've had a passion and a desire to race and try to make my way to the big time. And through a lot of love and support on their behalf and a lot of belief in others, from others in me, because they've seen that passion. They've seen the will that I've had to succeed. They've given me a chance. And it's just all I know. I'm all in, and I love to grind it out.
What is life beyond the track?
Father of two daughters right now.
Endorsements and all that.
I've backed a lot of that down.
Really?
When my wife and I just wanted to start our family, we really dialed some things down. I wanted to be around during the week. My job takes a lot out of me just to fulfill the sponsorship obligations with the 48 car. And I've really been selective on the endorsement deals I have so I can be home.
Does Jeff own part of the car?
He does. He owns half of the 48 car.
And Hendricks owns the other half? Or?
He does, yes.
Yeah. Well, why wouldn't you own part of your own car?
Well, now it looks like it would be a pretty easy situation to have, but when I first came on, it was a 3-car company. Jeff was eager to start a 4th car, and Mr. Hendricks said, okay, if you want to start a 4th car, put some money up. Let's do this.
Yeah.
So,
so that's how the 4th car
That's how the 4th car started.
Yeah.
Yeah.
What does he contribute? What does Hendricks contribute to it? Is it leadership? Is it vision?
Yeah.
Is it...
He's a very successful businessman. So, yes, there's all those things. But the man operates from the heart, and everybody that works for us, it's a family environment. And to have such a successful man with 100 auto dealerships across the country, tens of thousands of people that work for him, then the auto racing side that we have, everybody feels like they're working for their dad. I mean, it's really an amazing attribute that he has, and we're all in this family environment.
If you had it to do over, would you do anything different?
I don't. You know, I had the dream to race Indy cars, but when I look at my strengths as a driver and what's really propelled my career in a NASCAR vehicle, my upbringing, my background in racing off-road trucks and racing on the dirt and slipping and sliding around, really polished up a great skill set for NASCAR-style vehicles. Open-wheel vehicles, you don't drive the same way. If they bobble, slide a spit, you spin around and you're gone. And it's a NASCAR vehicle, you slide around a lot.
I sort of ask you about this. I mean, you're 41 now, and and 10 years ago, how you might have changed and skills that might have affected your performance on the track. When you look at the competition, is it bigger, younger, tougher?
Yeah.
Than it has been ever?
It is. Younger for sure.
Younger for sure.
Tougher for sure. It is so competitive. I was just having a conversation a few minutes ago with someone about how there used to be a flow on the track. And at lap 50 of 500 laps, why are you going to overly challenge somebody for position? Well, now it's so competitive, you can't even give somebody a break a quarter of the way through the race. I mean, it's literally you go for blood each and every lap.
What does that mean, go for blood? You
just have to fight for every position.
Yeah.
Pit stops are so important where you're running on the track because of the aerodynamics that are involved. The closer to the front of the field, the more competitive your car will be. Nobody cuts you a break anymore. Everybody's taking, nobody's giving.
Yeah. It's great to have you here.
Great to be here.
Congratulations.
Thank you.
Back in a moment. Stay with us.
Will your business...
Good evening. I'm Jeff Glor of CBS News, in for Charlie Rose, who is traveling. Mildred and Richard Loving were an interracial married couple who were arrested in 1958 for violating Virginia's anti-miscegenation laws. Their historic fight for equality is now the inspiration for the new film Loving, from writer-director Jeff Nichols. Peter Travers of Rolling Stone calls Loving a quietly devastating film that resonates for the here and now. Here's a look.
I'm gonna build you a house. Right here. Our house. I wanna take Mildred up to D.C. and get married. Are you sure about that?
By the power vested in me by the District of Columbia, I now pronounce you husband and wife.
In here? Richard! What you doing in bed with that woman?
I'm his wife.
That's no good here.
Richard Perry Loving being a white person and Mildred Jeter being a colored person did unlawfully cohabitate as man and wife.
Richard?
That ain't right!
I believe this is a battle that could go all the way to the Supreme Court.
I mean, we ain't hurt anybody.
The state of Virginia will argue that it is unfair to bring children of mixed race into the world.
Tell that woman to come over here.
I'm gonna raise my family here. I don't care what they do to us.
Get Peggy inside! I can take care of you.
I know that.
I can take care of you.
I know we have some enemies, but we have some friends too.
You realize this case could alter the Constitution of the United States.
You think you'll lose?
We may lose the small battles, but win the big war.
Is there anything you'd like me to say to the Supreme Court Justices of the United States?
Yeah. Tell the judge I love my wife.
Joining me now is the writer and director of the film, Jeff Nichols, and two of its stars, Ruth Negga, who plays Mildred Loving, and Nick Kroll, who plays attorney Bernie Cohen, who successfully argued on the Lovings' behalf in front of the Supreme Court in that historic 1967 case, Loving versus Virginia. I am pleased to have them all at this table today. Jeff, I want to start with you. The trailer dealt with the court case, obviously. The film does as well, but the film overall, I think what strikes people who see it is that it is a more personal story than it is the public story. When you were approaching the script, which you wrote, why did you decide to focus on this marriage in particular, as opposed to the bigger case?
Well, the first thing I was approached with was Nancy Bursky's documentary, The Loving Story, which came out on HBO, I believe, in 2011. I was approached.
Peabody.
Yes, and I was approached in 2012. And when you sit down to watch Nancy's documentary, you're just immediately struck by this archival footage of these two people. It's filled with it. It's filled with these photographs from Gray Vallette for Life magazine. And it's very clear that these two people sincerely loved one another. And by the end of watching that documentary, I felt like I was witnessing one of the greatest love stories in American history. And it made very much sense. It made a lot of sense to me to focus on that, to focus on those two people.
Despite how reticent they are in the documentary and overall in their lives, how quiet they were, you sense that the love. Because these were not outspoken people by any stretch.
Not at all, and they weren't political people. And I think it's really important when you're, we all know that this film is a representation of the Lovings. This is my interpretation of what I could find out about them. But you want to try to find out their essence, and you want to try and represent that truthfully. And I do not think they had an agenda. I think it's very important to the way the story plays out in the film, and I think it's really important to their story overall, which is
the act of them getting married was not an act of defiance. It wasn't a symbol or a statement that they were trying to make. They just truly loved one another. And that's important because I think that sincerity, it can draw more people into their story. This isn't propaganda. This isn't two people trying to make you think one way or another. They just loved one another. And I think that's an important thing to focus on.
It's hard to find archival video of Richard Loving actually saying something.
Right.
Right?
Mm-hmm. It's tricky. There are a handful of interviews. Hope Ryden was a documentary filmmaker who we represent in the film, and there's a little bit of footage from the mid-'60s, but we kind of had to cobble together several different interviews to get about a paragraph for Joel to research to build the voice out of.
And so he was relying on the facial expressions, on hands, whatever else, his impressive bricklaying skills, by the way.
Yes.
Which he did go to school for.
Well, yeah, when we landed in Virginia, because we shot this out in and around Richmond and Bowling Green and Central Point, where the Lovings were from, the first thing we did when Joel landed was we got him in masonry school. And
he's good at it.
He's really good. He said he wanted to go back to Australia and build a pizza oven. I'm not sure if that ever happened. But, yeah.
Ruth, so Richard Loving was not all that talkative. Mildred wasn't necessarily either, but a little bit more.
Yeah, she was, I suppose, the mouthpiece of the couple. I think that it landed on her to be the one to be the communicator. And I think she might have been quiet and reticent, but I think she had a very dignified way of communicating what she needed to. And I think that her manner was also one which people responded to. You know, the lawyers, Bernie and Phil, when they talk about her, they talk about a woman who radiated dignity and charisma that I think was vital to getting their voice heard and what she needed to say heard. But I don't think she was enamored of the spotlight. I think that she pursued this case because it was her way of getting home. And that was what was the motivating factor for her. I don't think she relished the idea of having to go to lawyers and have to go to court at all. But it was a necessary avenue to take to raise her family where she wanted to raise them, which was in her home.
Because one of the lawyers she dealt with, Bernie Cohen, played by Nick Kroll, could not have been much different from her personality-wise. I mean, this is an outspoken guy. He was a loud guy. I mean, he was very committed to the case, but I wonder for you, Nick, what that was like, dealing with such a sparse script for Mildred and Richard, and you being the voluble guy.
Yeah, I think we shot my first scene and realized that in one scene Bernie had more lines than Richard has in the entire film, and it was, you know, it was very interesting to play a character who is a much more talkative and as Jeff's script I think very beautifully lays out, Bernie's job is to sort of, and my job in the movie is to sort of walk the audience through what's happening in the court case or what's happening in the proceedings as it's spanning like a 9-year period. So there was I had to cover some ground in that, but it's also amazing to work with people like Ruth and Joel who don't say much but are saying so much, that their performances are so subtle and nuanced and are communicating so much without having to say a ton of lines.
Because the Lovings were given the option of actually being there for the court case in person, and they didn't want to be.
Yeah, I think I think it belies what Jeff was saying and what Ruth was saying is they were not political people. These were not people who had set out with an agenda to change the way America worked. They were just two people who wanted to be married and couldn't understand why they wouldn't be able to. And, you know, the idea that Mildred wrote to Attorney General Kennedy, and then that letter was then passed along to the ACLU, at which point Bernie gets his hands on the case and gets involved and is in a way a bit over his head. He just didn't have a ton of experience at the time, and then brings in Phil Hirschkopf to help with more the constitutional aspects of the case. They were able to sort of make some progress, but they weren't political people, and so they didn't, or at least Richard. What do you think? Do you think Mildred would have gone?
I think they didn't want to hear their family being disparaged by people who didn't know them. I didn't think they wanted to. And I think, you know, it plays beautifully in our film that it disgusted them that their kids would have been used as some sort of stick to beat them with, you know. And I think that was a final straw, I think, for them. I don't think that they wanted to hear that. I think that's when you watch the film, and certainly when I watched it, I feel that, you know, and you can see that with Nick and John's characters, they're really reluctant to tell them because it's such a shameful thing to use against people, their children.
So they were first arrested in Virginia and then ended up moving away to D.C. To live for 5 years, but then went back and they were arrested again, and that was the spur for what became the Supreme Court case.
Kind of. They were arrested a second time, and we take a little bit of creative license with the scenario around their second arrest. They were arrested in real life when they returned for an Easter vacation. I collapsed that with the return of to give birth to their first child. Because Richard's mother was a midwife. So I took a little bit of creative license there. What really happened was that Judge Bazile, the first trial judge, sentenced them to exile for 25 years. Exile from the state of Virginia. So the closest place they could go and be in exile was D.C. And for a lot of people, you would say, well, what's the big deal? You know, it's 2 hours away from their home. But for Richard and Mildred, that was a very big deal.
You see the dread on Mildred's face as she's pulling into D.C. for the first time, and how different that neighborhood is for them in that environment.
And, you know, it is certainly city versus country, but you also have to look at Mildred as a character over the arc of the story, which she begins as a 19-year-old who's pregnant and really has never been away from home. And to not only have the change of being married, having a baby, but then also being completely removed from your home and your family. I believe, and it's represented this way in the film, that Mildred went into a depression in D.C. She speaks about it in the documentary, and we use some of those lines in the film. I think it broke her heart, and I think she had a connection to that place that was certainly built out of family, but also just built out of the dirt. I think she was connected to the nature of that place.
There's a lot of the names. I think Joel has talked about this before. That the names, even though this case is so famous, the names may still not be as well known to many Americans as one might think they should be.
Right. Well, you know, it's very telling that the event that sparked all of this was in their bedroom. It was in the privacy of their home. It wasn't something done in public. It wasn't a march or an explosion. The violence here was, by definition, in the privacy of their bedroom. And it was done that way on purpose because I believe the sheriff at the time wanted to literally catch them in bed together. And
he did.
And he did. And I think when you have something that is literally prosecuted inside the bedroom and then drawn out over a period of 9 years, it's not necessarily the thing that stays in the headlines.
It's interesting that the documentary didn't get made before it did, in some ways, right?
Well, yeah, I think Nancy's spoken about it and Ruth's spoken about it. They both, they read Mildred's obituary in 2008 when she passed away, because it wasn't something that was on the lips of many people.
And it wasn't on her lips because she swore off all publicity for decades, right before she actually died. She did one interview right before she passed.
Yeah, that just wasn't who she was, you know, which again kind of validates the approach, you know, to the whole story. This is not who these people are. I think the same stands for her daughter, Peggy, who's the only surviving child. These people, they just, they don't like drawing attention to themselves necessarily.
And sadly, Richard, as we know, was killed by a drunk driver at the age of 42, at a young age.
Yeah.
I know the other two children have passed as well. Nick, you've done plenty of comedy. You say that people always want you to, you know, make them laugh, do the big smile. This is obviously a little bit different.
Yeah, it was. I was very excited to get the call from Jeff because I was a big fan of his films. And
how did you find him?
I saw his show, and I was a fan of his show on Comedy Central, The Kroll Show, which is extraordinary.
Thank you, very kind. Thank you for saying that, Jeff. Finally, no. But it was kind of one of those dreams. It's one of those things as an actor, and I don't know if you feel this way, but you're like you do all this work and you hope that someday you're going to get a call out of the blue from someone you respect to be like, hey, come do this thing with us, and I got that call from Jeff, and it was really exciting, and then just without even knowing anything about the film or the story, and then I read the script, and it was so beautiful, and I knew a little bit about the story itself. A friend of mine had written a song called "Loving in Virginia," which I had years before, and I was just excited to be a part of it, and you know, to be able to. I think we all have the desire to be able to do different things, and it took someone like Jeff to sort of take I wouldn't say even a chance on me, but to be able to give me the opportunity to do something. And it didn't pay off, and unfortunately it did not work out, but it was...
Nick has a tremendous resemblance to Bernie, you know, and that can't be overlooked.
Well, and it's interesting seeing Bernie in the documentary as well. I mean, again, like we called him voluble. I mean, he was not afraid to talk.
No, and I think... And it's an important thing to note about Nick's performance, which I think is really smart. It's kind of a performance within a performance. If you watch the documentary, we all change when we get on camera. Our bodies change and our voices change. That certainly was true for Bernie. It felt like sometimes you're watching episodes of The Office or something. He's always catching the camera, and he's very aware that someone is watching him speak. And I applied that in the first scene where he meets Richard and Mildred, this idea that he is putting on a presentation of himself, partly because of his age and experience, but also I think that's just kind of who he was.
Because he had to sell them. I mean, and this is one of the great scenes from the film, is when each of the phone conversation, I think, is quite good, because you see Mildred's reluctance. Your character wrote a letter to Robert Kennedy, who then referred it to the ACLU. Can you just, I wonder how that is as an actor talking to the phone in that particular scene when he's trying to convince you to meet with him and to take up your cause.
Didn't we ring Nick? And you were
I wonder. So was he on the other line?
I called in from.
We recorded it.
You were recording.
And
yeah.
So we had a couple different takes, and we had those queued up so that they would be timed based off of Ruth's performance. And so she was listening. And that's the first time we ever heard you do the voice and everything, and it was uncanny.
I was in L.A., and I pulled over on Fountain and called from my car. You know, I pulled over on the side of the road. I was like, I got to call.
I've got to perform in this dramatic.
I got to call the 1950s. And for me, hearing Ruth's voice, because I don't know how we did it, because I remember hearing her voice at some point in a couple of takes, and I knew of Ruth's work, but I knew her as an Irish woman, and to then hear her voice as Mildred was like, it gave me the chills to hear it. It was really it was immediately, it was weird to be 3,000 miles away and then immediately feel like sucked into that world, and just hearing her voice, like. And so when I went to set, I had heard her, but then to sit across the desk from Ruth and Joel was was surreal, because it's not mimicry, but both of them so beautifully embody the essence of these two people that you felt like I was talking to them in some way, and it was quite surreal.
I think you have to make a film that, as simplistic as it sounds, reminds people of the humanity at the center of this much bigger debate. Because there are so many relevant connections to social issues, political issues. We knew the audience would bring those into the theater with them. And Richard and Mildred weren't talking about those things, even though they were representing a lot of those things. So we just had to stay focused on this relationship.
Thank you all very much.
Thanks for having us.
So what did your family think? Did they say there's something wrong with this young man? He wants to just do computers?
That was kind of considered a little strange.
Have you ever thought how your life could be better off if you had gotten your Harvard degree?
I'm a weird dropout because I take college courses all the time.
What about Steve Jobs in those days? What was your relationship with him?
We were both there at the very beginning.
You're the wealthiest man in the world for 20 years or more. Is that more of a burden than a pleasure to be the wealthiest man in the world?
Would you fix your tie, please?
Well, people wouldn't recognize me if my tie was fixed, but okay. Just leave it this way. All right. I don't consider myself a journalist, and nobody else would consider myself a journalist. I began to take on the life of being an interviewer, even though I have a day job of running a private equity firm. How do you define leadership? What is it that makes somebody tick? You built one of the great technology companies in the world and one of the great companies in the world, and now you're building and operating one of the great foundations in the world. How do you compare the challenge of building Microsoft to the challenge of now running the Bill and Melinda Gates Foundation?
Well, I think they have more in common than people might expect. You know, the idea that you find what an innovation is going to be, really stick to it, build a team behind that, have some setbacks and successes, kind of a theory of change. Now, my Microsoft work was when I was very young. I started when I was 17, and that was my primary focus until I was 53 when I made the transition. And for the early part of that, I was kind of maniacal. I wasn't married, no kids, I didn't believe in weekends. Until I was about 30, I didn't believe in vacations at all. So it was incredibly fulfilling to write the code and be hands-on, stay up all night. So for my 20s and 30s, I think the Microsoft thing was perfect. I didn't have the breadth of knowledge that would let me play my role at the foundation. I think it was good preparation. And then after I met Melinda, got married, started having kids, I was looking at the world more broadly, thinking about where the wealth should go. And I'd say they're equally difficult. You always know you could be doing better, that you should learn more, that building the team and thinking about things in a better way. So you see the positive results, but you always want to do even better.
And so let's talk about Microsoft for a moment. So you started that when you were in high school, and you were driven to be involved with computers. Were you alone? Were that many people knew about computers in those days?
It was a fairly special time because computers, when I was young, were super expensive. And my friend Paul Allen and I actually snuck into places at the University of Washington where they had computers that weren't being used at night. And so we were fascinated by what the computer could do, but very few people were getting exposure. We had to go out of our way, and we were lucky that we did it all. And so then when the idea of moving the computer onto a chip that Intel would make, and that would make the computer literally millions of times cheaper than the ones we were using, so both more powerful and available to people on a personal level, then the idea of, okay, it would be very different. The software you needed, the way the industry would work. We were super lucky to be there when that was happening.
So what did your family think? Did they say there's something wrong with this young man? He wants to just do computers?
They knew I was obsessed with computers, that I would skip athletics, that I'd go in overnight, that I'd leave the house sometimes when they prefer I wouldn't go work at night on these things. And so it was kind of considered a little strange. And the big moment was when I said, instead of going to part of my senior year, that I wanted to go work for a company writing software. So they were great about allowing that to be my hobby.
So you went to Harvard and you dropped out. Have you ever thought how your life could be better off if you had gotten your Harvard degree?
Well, I'm a weird dropout because I take college courses all the time. I love learning company courses and things, so I loved being a student. And there were smart people around, and they fed you, and they gave you these nice grades that made you feel smart. So I feel it was unfortunate that I didn't get to stay there, but I don't think I missed any knowledge because whatever I needed to learn, I was still in a learning mode.
So in the early days, you were just a college dropout. You were very young looking. Did you get taken seriously by businessmen who were much older?
For some people, that youth and geekiness was like, hey, should we trust them? That's so weird. We've never seen something like that before. So yes, we had to fight for acceptance. I couldn't rent cars. So I had to take cabs around because I was too young, and probably some people were a little tough. But then as we got a little bit of success, people were fascinated by this deep belief we had in software.
Okay. So when Microsoft is moving forward, you decided to take the company public in 1986. And at that point, you are a billionaire.
Yeah,
close to it?
Pretty close to it. within a year of going public, I think. There's some Fortune cover that says the deal that made Bill Gates $360 million or some weird thing like that.
All right. How did it change your life, or it didn't change your life at all?
Well, that whole period of time was amazing because I was hiring people as fast as I could. I had brought in Steve Ballmer, who was very good at that, and he was helping out. You know, we had a sense of urgency that we wanted to lead the way. There was this graphics interface thing with Windows that we wanted to do. So I was super busy, and the idea that I could hire so quickly and invest and build this worldwide company was fascinating to me, but I was really busy. So, you know, if some friend had tried to call me, you know, I wouldn't have had too much time for that. I was really into building this company, and I was going out and telling people about the magic of software, which was good for Microsoft, but also helping them understand the opportunities and the huge change agent that software and eventually software plus the internet would become. So I was having fun. It was amazing. But I always thought, hey, you know, we're one step away from not, you know, leading here. We gotta keep doing better.
When you had the famous IBM contract, you won the contract to produce their operating system. Why did they let you, in effect, own it, and they had to license it? Was that a mistake on their part?
Yeah, this is before graphics interface, when you still just have text on the screen. And so the software MS-DOS was a key thing. So it got to be more of a high-end machine, including this MS-DOS. They didn't see how big this machine would be, and their legal department didn't want to take responsibility for the source code. They had a fairly limited license.
Right.
And that we understood that this was a seminal machine and other people would do similar machines, so that was fairly advantageous to us. They didn't see the value as being in the software.
Right.
They thought that the hardware was the key and software was just a sort of necessary thing. So they had realized the vision we had, which was that software over time would be way more important than hardware. They would have negotiated probably a different deal.
You have a fair amount of money for anybody your age at that time, certainly. Did you say, I'll go splurge and buy a nice car, I'll buy an airplane, I'll buy a boat, or you just didn't really care about that?
I bought one thing that was a tiny bit of a splurge, was that my first car that I owned was a Porsche 911. It was used, but it was an incredible car. And that was actually when I was down in Albuquerque, and sometimes when I would want to think at night, I'd just go out and drive around at high speed. And fortunately, I didn't kill myself doing that.
And what about Steve Jobs in those days? What was your relationship with him in the early days, and how did it change?
Well, we were both there at the very beginning. The Apple I was a kit computer that Steve Wozniak designed, and he worked with Steve. And they came and offered it at various of these computer club meetings, and we went to lots of computer club meetings. So we were sort of colleagues in pitching the gospel of personal computing. We were kind of competitors. The time we worked together most intensely was after the IBM PC came out. Steve had a group, actually a small group at Apple, that was doing the Macintosh. And he came to us early on and asked us if we'd commit resources. We actually put more people on the project than Apple did, and did the early application software that used that mouse graphics interface. And so it was a huge win both for Microsoft and for Apple when the Macintosh became so successful.
When your mother first said, I'd like you to come and have dinner with me and Warren Buffett will be here, you should meet him, you didn't seem that interested. Why was that?
Well, Warren, I thought of as somebody who bought and sold securities, which is a very zero-sum thing. That's not curing disease or a cool piece of software. And the idea of, you know, kind of looking at volume curves, and that's why it was so shocking when I met him.
The day
So your company grows, it becomes successful, becomes the most valuable company in the world at one point. At what point do you say, I've made a fair amount of money, I don't need to do this anymore, I want to do something else with my life?
1995 is a big year where we ship a product conveniently called Windows 95, and our software's doing well. And we emerge, we had always had the greatest depth of engineering, and we were slightly the biggest, but we really emerge as the successful company. And so I started thinking about, wow, you know, there's a lot of value here at Microsoft. What have other philanthropists done historically? So during the 90s, I'm thinking about that. My mom tragically passes away in the same year as I get married in 1994. My dad is volunteering to help out, think about the philanthropy piece. So it was in the year 2000 that I put $20 billion into the foundation, and you know, then it became the biggest foundation at that point.
You mentioned you got married in 1994. You married a Duke graduate. How did you have time to woo somebody when you're running your company, and how much time did that take?
Well, she was an employee of Microsoft, and we had run into each other actually in New York City. We ended up sitting together in a dinner, and you know, she's an amazing person, and you know, it kind of caught me by surprise how much that engaged my attention, even versus all this exciting Microsoft stuff I was doing. So we, you know, dated on and off for about 5 years, and then decided to get married.
So you have decided that your foundation would focus principally, but other things as well, but principally on health in Africa and K-12 education in the United States. Is that right?
Yeah, health of all the poorest, but okay. Africa's paradigmatic.
So how did you come to those conclusions, that those were the two things you wanted to work on as opposed to everything else?
We talked about it a lot, so that's the decision that Melinda and I made. We wanted to take the greatest injustice in the world, something that we could make a huge difference in, and that's health. Now, we broadened that a bit by doing agriculture and sanitation and some other things. And then we wanted to take a cause that would help the U.S. Be as strong as it could, and in that case, trying to help improve educational opportunity is our big thing.
You and Melinda go into the field. Why do you feel you need to go into the field in Africa or Latin America, any part of the world where you're giving away money, and actually meet people that you're giving money to and learn?
Well, I've chosen to spend my time, and Melinda spends her time, building the foundation as an institution that really has an impact. And I get a lot of enjoyment. This is, you know, how I've taken everything I've learned from Microsoft and the position I'm in, and helping to drive the strategy and go out and see what's going on with this work. That's my full-time job, and it's a wonderful job.
Your foundation has a certain life. It's not a perpetual foundation. Is it, I think it's 20 years after either you or your wife, the last one to live, dies, that it would end? Is that how it works?
That's right. The way that we're managing the institution and keeping it excellent and designing it to solve problems that can be totally solved. So we work on malaria. This foundation should be able to participate in getting rid of that. All these infectious diseases that so disproportionately hurt the poor and really explain most of the difference between why a poor child has a 50 times greater chance of dying than a child in a wealthy country. In 30 or 40 years, those problems should have been brought to an end. And whatever the new problems philanthropy should go after, the people who were alive then and picking great executives and building institutions to go solve, they'll do a much better job than we can just writing down a little guidance. So it is a limited time foundation. It's so different the way he lets there be a dialogue.
When your mother first said, I'd like you to come and have dinner with me and Warren Buffett will be here, you should meet him, you didn't seem that interested. Why was that?
Well, Warren, I thought of as somebody who bought and sold securities, which is a very zero-sum thing. That's not curing disease or a cool piece of software. And the idea of, you know, kind of looking at volume curves, and it doesn't invent anything. And so I thought my way of looking at the world what I wanted to figure out and do, and what he looked at, that there wouldn't be much intersection. And that's why it was so shocking when I met him. He was the first person to really ask me about software and software pricing, and why wasn't IBM, with all of their strength, able to overwhelm Microsoft, and what was going to happen in terms of how software would change the world. And he let me ask him about, okay, well, why do you invest in certain industries, and why are some banks more profitable than others? And he was clearly a broad systems thinker, and so it started a conversation that has been fun and enriching, and an incredible friendship that was completely unexpected.
And he taught you how to play bridge, or did you already know?
I knew how to play bridge, but I had done it our family had done it. And then because Warren, it was a chance to spend time with Warren, I renewed my bridge skill, at first very poorly, but both golf and bridge were things that we did in our hours that we got to goof off together.
You given up on golf?
Well, Warren gave up on golf a few years ago, and so my primary excuse to play golf has gone away. So I'm golfing not much now. Tennis is become my primary sport.
Warren Buffett called you one day and said, by the way, I'm going to give you most of my money. Were you surprised when he said he wanted to give you all this money from his wealth to your foundation?
That was a complete surprise, because Warren is the best investor, and he's built this unbelievable company. And he was giving me advice about all the things I was doing. I was learning so much from him. But his wealth was devoted to a foundation that his wife was in charge of. And so tragically, she passed away. And so then he had to think that his initial plan wouldn't make sense. And much to my surprise, he decided that a part of the wealth, a little over 80% of it, would come to our foundation. So it was a huge honor, a huge responsibility, an incredible thing, because it let us raise our level of ambition even beyond what we would have done without that by most definitions, the most generous gift of all time.
And you started with Warren and Melinda, the Giving Pledge. What is that about, and how has that worked?
Well, Warren was brainstorming with us about how did philanthropists figure out what to do, and how could they kind of help share with each other without giving up the diversity of what they did. And so he got us to do some dinners with people who are already doing amazing philanthropy, and talk about how they built staff and picked causes, and not that they would give to the same things, but that they would the quality and even the how early people get engaged would be enhanced by the people getting together and making a public commitment to give the majority of their wealth away. And so that's become the Giving Pledge group.
You're the wealthiest man in the world for 20 years or more. How does it affect your life daily? People come up to you all the time and ask for money, or they expect you to buy them things. You've gotten tired of it? When you were doing Microsoft at the beginning, you were doing the coding yourself, and you would presumably know more about coding than just about anybody. But now that you have so many other responsibilities, when Microsoft develops a new piece of software, are you able to really talk to the software engineers in the same level that you could 20 years ago?
Well, I'm certainly nowhere near as hands-on as I was when I would either write the code or look it over and hire all the programmers. And in my career, this evolution of being an individual performer, then a manager of managers, and then setting broad strategy, you have to get used to the fact you don't have as much control. But I try and understand enough about software that the trade-offs we're making about what features should we put in, what the basic design should be, I still enjoy those discussions. And even today over at Microsoft, we get to talk about, okay, what should the next Office do? How can Windows be better? How's the user interface going to change when we have speech and handwriting and those things? So I'm able to participate, but it is a way more complex field, and I couldn't actually write all the code myself anymore.
When somebody turns on their computer today, they have to have 3 fingers usually, and they put a finger on Control, Alt, and Delete. And it seems a little awkward to do that. Why did you do that, and why did people have to have that mechanism to turn on the computer?
Well, fortunately, most machines nowadays have moved away from that. But the idea that we knew that there was logic in the keyboard that could detect a truly unique signal that would bypass the software that was running so you could know it was really starting over. Clearly, that ended up being an awkward piece of user interface. If we had to do it over again, we wouldn't do it. It sort of was in the chasm between Microsoft and IBM that it ended up being that way. And, it's kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
We love Bill! We love Bill!
So you're the wealthiest man in the world for 20 years or more. How does it affect your life daily? People come up to you all the time and ask for money, or they expect you to buy them things.
Fortunately, people know that wealth is dedicated to the foundation. And so if they have ideas that are in the foundation's area, infectious disease, improving education, then it's super interesting to have them talk to me or talk to those people. I have the benefit of being well known, so I can go out and meet interesting people and share my views and get a lot of attention. I'd say net that's a benefit. When I'm out with the kids, then it can be a tiny bit of a drawback that you may not get as much privacy as you'd like. But overall, my success has allowed me to get more done, build partnerships, meet great people.
How do you deal with it when you want to go shopping, or you don't go to shopping?
Oh, I go shop. I go out to the theater.
And people don't come up to you all the time for selfies or something?
They can, yeah, but that's pretty quick. And people are usually very nice about it.
What about your children? Everybody who's wealthy, who has children, has to deal with how do you train your children to live with the wealth? How much do you give them? And how do you get them involved in philanthropies?
Well, our kids are young enough that the key focus is helping them, enjoy learning, get a great education. All of them will pick careers that aren't related to software philanthropy. They will strike out in their own direction and be great, in their own way, whatever it is they pick to do. So we've chosen that they'll have enough wealth that they'll never be poor or anything, but we're not going to take billions of dollars and have that define their life. The vast majority of the wealth is dedicated to the foundation, and so far, they're great kids, and they enjoy learning about what we're doing in Africa, and that may shape where they go with their lives, but it'll be up to them.
When people look back on what you've done 20 years from now, 30 years from now, what would you like to have people say Bill Gates achieved?
Well, I don't think it's important for me to be remembered specifically. I do hope that infectious disease is largely eliminated as a problem so that nobody's having to talk about it and people can focus on other issues. That would be a huge, great thing. If our work has helped improve U.S. education, that would be a huge, great thing. You know, most importantly are the people who really know me, my kids, that, you know, they feel I was a good father, gave them an opportunity to go create their own life.
He's known for shunning convention, taking massive risks that could win or lose billions, and investing in, quote, black swans, companies with a near complete chance of failure. But if they succeed, the world will be changed forever. Vinod Khosla grew up in Delhi, India, son of an officer in the Indian Army. His parents agreed he could explore his boyhood curiosities with no limits, as long as his grades didn't suffer. He went on to start Sun Microsystems, then become a venture capitalist. He says to help entrepreneurs take the same risks he has no fear of taking. Joining me today on Bloomberg Studio 1.0, Khosla Ventures founder, Vinod Khosla. Vinod, thank you so much for being here. It's really great to have you.
It's great to be here.
So you are known for being an investor who not only challenges conventional wisdom, you explode it. How early did that start?
You know, one of the privileges and the indulgences you get if you're successful early, and luck counts a lot in success, is the ability to do things others may not have the freedom to do. So I used it to my advantage very early. I was always interested in radical change, big ideas, and I got the opportunity to do that.
So you were raised in Delhi, in India. What might we find a young Vinod doing?
You know, I didn't have anybody around me interested in either business or technology. I grew up in an Indian Army household. And then I read the story about Andy Grove, a Hungarian immigrant, coming to this country to start a company. I was 15, and the technologies, which was Intel, sounded very cool. And I fell in love with the idea, and I've stayed with the idea since. I wanted to start a soy milk company and realized how hard it is to start a company in most parts of the world.
You now say technology is your religion. Were you raised religious?
My parents were sort of normal religious people, but I very early realized, at least priests in India were a scam. I was probably 12. And I decided that if the purpose of religion was to do the most societal good, technology was the most powerful tool to do it. And so I adapted science and technology almost as a religion very, very early in life.
You're best known for co-founding Sun Microsystems. You were chairman and CEO, but you founded a number of companies before that.
We started another company called The Data Dump. About 3 months before we started Sun, Scott McNeely and me were founders of both companies. And I love this story for the following reason. Nobody remembers your failures, even though the probability of success was low on either. This is great about entrepreneurship. Failure doesn't matter, but one's willingness to fail gives one the ability to succeed. If you're not willing to take risks, if you're not willing to fail, you're not going to do anything interesting, because most interesting things are new, and new things involve risk, and risk involves failure.
Why did you leave when you did, and what was your biggest takeaway?
Before Sun and before Data Dump, I'd started a company called Daisy Systems. And Daisy was quite successful. In '86, it went public. And frankly, Daisy made more money for me than I thought I needed ever in my life. And so I then wanted the freedom. And I looked at careers like, what else should I do? So I joined Kleiner Perkins, which was one of my lead investors, to essentially mentor and help entrepreneurs.
How does the venture industry back then compare to today?
There's many more venture capitalists now, many bad ones, a few good ones, and entrepreneurs should understand that. I get in trouble for saying that, but I think it is much more dynamic. Entrepreneurs have many more options, and that's really great for entrepreneurs, and I love that.
You got multiple degrees, an engineering degree at the India Institute of Technology, biomedical engineering at Carnegie Mellon, an MBA at Stanford. And you wrote this Medium post called, "Is Majoring in Liberal Arts a Mistake for Students?" where you indicated it doesn't necessarily set you up for success. This caused some controversy, which I know you're not shy about. One commenter wrote, "The real assertion here is that the purpose of human existence is fundamentally tied to the accumulation of wealth." What is your response?
That's a nonsensical response. And what liberal arts has become is an excuse to do less work. That's not everybody. And I speak to the 80% of students who actually do it for the wrong reason. But bottom line, if liberal arts goals are the goal, then liberal arts as taught today and taken today is the wrong curriculum.
So what should they be studying?
Logic and philosophy should be an absolute part of any liberal arts curriculum, because otherwise you don't learn how to think. Linguistics, economics, learning how computers work, because we live in a computer age. Why require a second language that's French or some esoteric language when the most important second language is computing? Not that most people ever need to code, but because it's a style of thinking. The critique is all from people who I feel failed to understand what I was saying, which is exactly the point I was making. So their comments, like the one you mentioned, reinforce the notion they didn't get a good education.
Do you think college is important at all? Should kids go to college? I mean, Peter Thiel is paying them not to.
So I disagree with Peter. I think college, curriculum, even high school are very important. There are people who will do well without an education, and people who will do well no matter what subject they take. Leaving aside those people, the top 10 or 20%, I think college gives you a grounding to be able to do things that adapt over time.
What do you think sets Khosla Ventures apart from the other top-tier venture capitalists, Andreessen Horowitz, Sequoia, Benchmark, Kleiner? So you went on to found your own fund. What do you think sets Khosla Ventures apart from the other top-tier venture capitalists, Andreessen Horowitz, Sequoia, Benchmark, Kleiner?
We tend to be much, much broader. Nutanix is an enterprise software company, but then we'll do burgers like Impossible Foods. We'll do rocketry like Rocket Lab, and we'll do very, very hard science stuff. We want to invent new medicine. So we'll do very unusual things, robotics, semiconductor stuff. We've even done a nuclear project.
So you believe that most VCs actually hurt companies, not help them. What do you mean by that?
You know, applying traditional business school and business metrics to innovative startups is the wrong thing. And when people focus on IRRs and rates of return on boards, they actually hurt a company. I don't believe just because you're an investor, you earn the right to advise an entrepreneur by being a board member. If you're going to advise entrepreneurs, you should have started companies, known how hard and painful it is, how difficult the trade-offs are. It is painful being an entrepreneur. Life is not easy. And unless you have empathy for an entrepreneur by having done it yourself, you don't have the right to advise an entrepreneur, in my view. So one rule I have, in 30 years, I've never, ever voted against an entrepreneur. They don't need hypocritical politeness from board members trying to be popular and be their friends and not help them think through all the risks they're going to face and challenge them. And then these same board members want to vote on things as if they know enough to vote. They don't.
You also don't go to board meetings if you can help it.
Mostly I don't go to board meetings because I can't stand to listen to other VCs talk about things that I actually think hurt an entrepreneur.
So what's your advice to CEOs and entrepreneurs about how to be a CEO and how to not be a CEO?
So first, don't take advice because it's from the board. Just ignore the board to the maximum extent you can. But consider the input of people who have real experience as input to your thinking.
So, and this is interesting because we've talked about the lack of women in the venture capital industry. I know you're looking hard for a woman partner, but what do you think it takes to be a successful VC? Do you need to have a STEM degree? I know some of your top partners don't. Do you need to have been a founder? Do you need to have been a CEO?
You don't need to have a STEM degree. It helps because you're dealing with technologists and speaking their language makes it easier. So it does help. But probably, and this is not even essential, but the most important requirement is having been an entrepreneur.
Is that why it's so hard to find women to fill these roles?
I think there's fewer women who've been entrepreneurs. So I think as women play more of an entrepreneurial role, and that's increasing, and we have many, many entrepreneurs who are women, even in very deeply technical areas. They, when they get enough experience, will be great partners. But you need the flow at the bottom to increase. And we need to encourage more women to be entrepreneurs.
You mentioned you have a broad range of investments: rockets, food, AI, health, finance, energy, companies with a usually high failure rate. And you say every 4 to 5 years you go deep into an area you know nothing about. What's worked? What hasn't worked?
First, all of them have worked in the sense I've really enjoyed learning a new area. Now, it'll be 5 years before I know I'm right or wrong. But independent of whether the companies are successful or not, I think I will have learned a lot. I think the two most important things that can happen in technology that would really change humanity for the better is artificial intelligence and nuclear power, unlimited energy. I can't think of any two things that would impact humanity more than those two things.
You recently tweeted, if AI scenario happens, we'll have abundant GDP to take care of everyone, but great disparity. Only people who want to work may need to work. Paint the picture for us.
If AI does what humans can do, or most of it, I think it's pretty likely in 40 years of all the jobs that exist today, the majority, more than 50%, will be done by machines. And it doesn't matter whether it's a farm worker, a hamburger flipper, a legal researcher, a radiologist, a pathologist, or an oncologist. So it's not just the low-skill works. If that happens, we'll have dramatic GDP growth, dramatic productivity growth, all the traditional economic metrics, and because more people are out of work, more income disparity. That's hard to say whether it'll happen in 30 years or 50 years, but it will, I'm pretty sure, happen.
But what happens to all those people who don't have a job?
Critical question is, how do we fairly address the people who are left out of this? And it'll be most of the people. The good news is we will have enough GDP to provide basic income to everybody. I know it sounds horrific, but we will have the resources. If per capita income is $150,000, $200,000, $300,000, I think some sort of basic income as per capita income climbs above $100,000 will become very, very important, and that'll be a social and political issue we have to address.
Hampton Creek is a company that so many people have been excited about, and now they're facing some serious allegations. When do you say it's time for new leadership? Hampton Creek is a company that so many people have been excited about, and now they're facing some serious allegations. The SEC is involved, the DOJ is involved. They're accused of buying their own product off the shelves. When do you say it's time for new leadership?
Let me flip this question around. There was a Bloomberg article recently. The reporter believed Oli Pertovi, an ex-employee, who bought some stock, then accused the company of giving false information. I would have bought Oli's stock. The company offered to buy his stock. If he thought he was defrauded, why didn't he sell the stock back and not lose a penny? He could have gotten his money back and gone away. Mark Benioff is an investor. He didn't feel defrauded. His wife's on the board. Lynn's on the board. She looked at the details. Now, maybe there's other stuff and we'll discover, and I can't say what else I'll discover. I personally went and talked to Ali. He didn't have one credible allegation. He suggested talk to these 3 other people. I went and talked to those 3 other people.
So do the allegations bother you? Do they concern you?
Look, first, every company, anytime they have employees who leave, have allegations. Sometimes, probably 20, 30% of the time, they're right. 70, 80% of the time, they're just bitterness. We look into them whenever it's serious. I won't comment on the specifics, but suffice to say, we are always looking. Entrepreneurs push the edges. Is the buyback relevant? The $77,000 reported, completely irrelevant to our investment decision. Why is somebody investigating? Ask the question. Do you know, under a Freedom of Information request, the American Egg Board was plotting to destroy Hampton Creek because the egg industry hated them. Unilever sued Hampton Creek for calling their mayor, and then withdraw the lawsuit when they realized how bad it was. So there are many, many enemies the company has, including using federal funds in the Department of Agriculture to target a company. There's emails that were discovered by a reporter in Washington that said, how can we prevent them from getting distribution at Whole Foods? Now, why would a federal agency be trying? Why? Because there's interests involved here. People, again, who are being disrupted and will get hurt. So I'll tell you it's a complex story, but I can't go into specifics.
How would you describe your faith in the CEO, Josh Tetrick, and your faith in Hampton Creek as a company? Do you still think this will be a winner in your portfolio? Do you still think this company can transform the food chain as we know it?
Hampton Creek has already done a lot to change the food chain. They brought sensitivity to the fact that all male chicks, when they're born, are crushed live in hoppers. It's just horrific. He's changing that practice, bringing visibility to it. Caged hens, he's bringing visibility to it. Are they making a difference? Absolutely. Even if they're not successful, they will have made a difference by bringing visibility to these real issues that the egg industry is trying to distract from. As far as the CEO is concerned, we normally talk to his team and see, do the team support the CEO? When they don't, we have to have a conversation with the CEO. Do CEOs make mistakes? Absolutely. Do we make mistakes? Absolutely. It's a constant evaluation process.
You're very passionate about clean tech. You've made a lot of investments here. Some people would say that, investors like you and John Doerr made a mistake by going too far into this field. What have you learned from it, and what is your response to that?
Clean tech is an important area. Climate change is an important risk. Now, I view climate change no different than I view homeland security, nuclear proliferation, terrorism. They're all risks society faces, and we should insure against them. Now, how much of our GDP do we spend insuring against foreign attack, national defense, homeland security? We should treat climate change the same way. It's a business decision on how much insurance to buy. We should encourage new competitive technologies to come up and then stop supporting them when they get to a certain size. It's time to stop supporting wind. Maybe even solar should be, the subsidies should start to decline.
Really?
We've done okay in clean tech. We probably have 6 companies that could be worth $1 billion still. But I'd rather try and fail than fail to try, something that's really important.
It's clear you care deeply about the environment. You are incredibly philanthropic. You've pledged to give away half of your wealth. Yet one of the stories that gets written about you most is about a lawsuit that you're involved in around public access to your beach. Some people would say that's at odds.
I normally don't like to talk about things under litigation, but, giving up half your wealth, it won't affect my lifestyle. So it's not a huge sacrifice to sign up for the Giving Pledge. What I find is I can spend more of my time working on technology. I'll probably have way more impact than from my giving. The other half of that is having principles, having a point of view, having a belief system. It's amazing to me how many Fortune 500 CEOs read the press, read Wall Street Journal, and respond to it instead of saying, here's what we believe in as a company. Passionate entrepreneurs like Elon Musk or Larry Page or Mark Zuckerberg, they have a passion that far exceeds their sort of desire for short-term profit. And because of that, they make more wealth and more profit over the long haul. In fact, wealth is just a tool to give you freedom to do what you want to do. And many people, especially people like Trump, get trapped into this cycle of making more. That's not that interesting. Right? And doing all the deals, he thinks it's smart to avoid taxes. It just blows my mind. I'm religious about my belief systems. So when I have a battle on the beach, back to your question, it's about property rights and about a set of people who want to use coercion. In fact, they told me they'd like to embarrass me into giving up my rights. Well, if you have a belief system, even though it's unpopular, even though the press all knocks you for it, you want to live by your principles. Whether it's that or protecting private property rights and fighting for what the law is, and when it's not clear, and there's clearly some things that are not clear in the law, it's important to get them legally resolved. The courts are the way you resolve things, not somebody's opinion, not the press, not hyperbole.
What are the dangers of technology?
You know, the way I look at it, maybe 700 million people on the planet have a rich lifestyle. Energy rich, resource rich, healthcare services rich, education rich. 7 billion people want it. Technology can be used for good or bad. I can use nuclear technology to make a nuclear bomb, or I can use it for nuclear power that provides great services and saves hundreds of millions of lives because of the power, the extra energy we have. And energy use correlates to less mortality.
Do you worry about the dangers of technology?
You know, every time you have a powerful technology, I think we as a society should worry about it. It has negative uses often, AI being one. There are things to worry about. The greater the role technology plays in society, I think the more we will have to use it to service the people at the bottom of the pyramid.
You talk about the value of failure, the value of making mistakes. Do you ever worry about overusing failure as a tool or being too willing to fail?
Everything's a matter of gradation. When's failure good? Depends on who you are. America as a society can't afford to fail. The world depends too much on us. If I'm a mature company, if I'm 100 people or 1,000 people or 100,000 people, I shouldn't fail. That doesn't mean I shouldn't encourage failure. I always say encourage 10 experiments that might fail, where if they fail, you lose 5% or 10% of your assets, resources, your cash, your market cap. But if you succeed, if any of these 10 succeeds, you double your market cap. I do think failure is key to innovation because risk is key to innovation. If you discourage failure or don't reward intelligent failure, then you're not innovating and not allowing yourself to succeed in the long run.
Vinod Khosla, founder of Khosla Ventures, thank you so much for joining us today. It's been great to have you.
It's been fun to be here.
Hey, I'm Ty Pennington, and I've got a simple question for you. Are you paying too much for your mortgage? Well, you won't know for sure until you check with Guaranteed Rate. You can do it right now. It's that easy. With Guaranteed Rate's digital mortgage, you can choose from today's lowest rates, check your free credit scores, and even get approved online. Anytime, anywhere. All in just minutes, at no cost to you. Lowering your mortgage payment could save you thousands of dollars. Just take a few minutes right now to see how much you could save.
We were going to rent. That was the going-in plan, but the rate was so low at Guaranteed Rate that we ended up buying.
Whether you're buying a new home or refinancing your current home, get a low, low rate from Guaranteed Rate. Visit rate.com right now to find out how much you could save. Call 1-888-557-1555 or visit rate.com.
Kong. This is Bloomberg Markets Asia. China's official factory gauge climbs to its highest since 2014, but it is the old economy that's in the driving seat.
OPEC bridges its differences and agrees to reduce output by more than 1 million barrels a day.
And that deal gives markets a lift. We've got Aussie energy stocks seeing their best day in 9 years.
However, the dollar's recent surge handing the yen its worst November since 1995.
All right, let's get back to our top story. We've got more signs of strength in China. The official factory gauge climbing to its highest since July 2014. We had manufacturing PMI coming in at 51.7. We were expecting just 51.
Yeah, also the private Caixin survey also showing growth, although it was fractionally below, actually, what the thinking was out there. China correspondent is Tom McKenzie. He is in Beijing. Tom, take it away.
Yes, Rish, so surprising. Again, the official number, 51.7, as you said. It surprised last month as well, at 51.2. We've been looking into some of the details of this number. There were, again, strong new orders from the manufacturing sector. We saw that again in October as well. Interesting as well, export demand has picked up as well. Consumers are still playing a role. There's still demand for manufactured goods from consumers. And that's some of the breakdown that we're getting. Of course, factory gate prices, we've seen those pick up for the first time in 4 years earlier this year. So that is proving some positivity as well. That inflation in factory gate prices, that is helping the manufacturing sector as well. We're seeing expansion in the steel sector and the steel industry. On the non-manufacturing side of the equation, we saw strength there as well. The official number coming in at, well, for October it's 54, and again it strengthened again this month, back around 53.7. And then we've got, you know, question marks over the old growth drivers, really, when it comes to what we're seeing in the manufacturing sector. An analyst saying that this is further evidence that this continues to be cheap credit going to the manufacturers, and that the SOEs are really benefiting from this, the large companies, because we've seen a bit of pain for the smaller firms here. They have expanded at a less quick pace than they have in previous months. Consumption, though, helping to some degree. So there's divergence between the large companies here and how quickly they're expanding, and the smaller firms. That will be something of a red flag, but this does give an element of strength for policymakers going forward as they look to rein in credit and tackle some of the corporate debt problems that we have here in China.
Yeah, Tom, you know, much of this recovery, credit fueled, as you say, have been driven by looser monetary policy and turning on the leverage taps. What's a likely response from policymakers to this fresh data?
Well, from the analysts and economists that my colleagues behind me have been speaking to this morning, the consensus seems to be that there is certainly no need for any tightening at this stage, any loosening of monetary policy at this stage, that there will be further steps towards gradual, moderate tightening, because they very much want to keep this balanced, whereas, of course, they want to rein in this credit but ensure that growth continues. It is a very tricky balance to get, but they are now on very firmly on target to hit their growth numbers, of course. This gives them a stronger platform in which to continue to tackle, for example, the house price lending, the credit to home lending, and try to rein in some of those prices, and also try to tackle some of the excess credit in some of the older sectors, the steel and coal industries, though that we have seen strength in the steel industry and manufacturing numbers from this November PMI data. So it's a question of how quickly they push through those reforms and try to tackle that question of credit, and in what kind of time frame, because of course this window won't stay open for forever.
Yep, certainly. Tom McKenzie, our Beijing correspondent there for us. Well, let's talk about oil.
Yep, front and centre today after that OPEC deal. The deal also, well, was broader than many people had expected here. The first output cuts in 8 years is what we got, and, well, let's find out more.
Yeah, that's right. I guess the interesting thing is that it extended beyond just the cartel members. Let's get some analysis from Bloomberg News energy reporter Dan Murtaugh, who joins us now from Singapore. Dan, we were talking about this yesterday. I think, you know, I guess we were managing expectations. How did this actually manage to come together in the end?
Well, Heidi, as you said, we were walking up to this meeting, and it looked like Saudi Arabia, Iran, and Iraq were sort of had these big gaps that they were going to have to divide, and divided they did. Saudi Arabia and Iraq made the two biggest cuts of any members in OPEC. Saudi Arabia by about 500,000 barrels a day, Iraq by about 200,000 barrels a day. That allowed Iran to sort of get what it wanted out of this, which Iran wants to keep increasing production, but it agreed to increase it to a smaller level than it wanted to. And so once you got all three of those members on board, everyone else sort of fell in line. And as you were saying, it's not just the members of OPEC. It's also Russia, which isn't a member of OPEC, but is the world's biggest producer of oil. It's agreeing to cut its production by about 300,000 barrels a day after saying, leading up to the meeting, that it would prefer to freeze as opposed to cut. So everyone's sort of coming together to try to stem this overflow of inventory we have in the world. And it seems to have worked for one day at least, with oil prices shooting up almost 10% yesterday.
Well, Diane, outside of OPEC, who does the market see as being the winners and indeed the losers here?
Rish, you're seeing it in the equity markets all over the world. Producers of energy are the big winners. The U.S., the S&P 500 sub-index for producers went up the most since 2008. Australia's producers like Oil Search, Woodside, their stocks are benefiting. CNOOC in China, PetroChina. So you're seeing these guys as the big winners. Big fuel users like airlines have been hurt by this. Refiners who like low oil prices because they buy oil and they want to sell gasoline cheaply, they're being hurt by this. The long run, though, there's a big question about the oil market. Morgan Stanley put out a report saying that while these higher oil prices are good now, it's going to lead to more investment, which down the road might lead to further instability in oil prices, maybe this time next year.
And Dan, while OPEC was putting the finishing touches on this deal, Indonesia actually suspended its membership in the group. This is not the first time we've seen this sort of thing happen. I mean, what happened this time?
Yeah, Indonesia was a longtime member of OPEC, and then in 2008 it suspended its membership, saying, we're no longer a big oil exporter. In fact, with our growing economy, we're an oil importer. We don't really fit. Then last year, after President Joko Widodo came into office, they decided they wanted a seat at the table again. They came back, and then they got to this meeting, and they saw again, they realized like a higher, oil production cuts, higher oil prices don't benefit them. The oil that they do produce, they didn't want to cut as much as OPEC wanted them to cut, so they just decided to bow out again. So a long time coming for the reunion to only last a year, but yeah, Indonesia back at the net importers table instead of the exporters table now.
All right, Dan, thank you so much for that. Dan Motok for us there in Singapore.
Well, of course, as the oil price has gone up so much because of this deal, we're seeing energy producers, energy companies on an absolute tear. Let's get the latest. Here's Juliet.
Rish, as Dan said, it was the first cut in 8 years. You are seeing Australia's energy sector have its biggest rise in 8 years, up by over 7% in the oil and gas sector. That's the best gain we've seen in this sector since October 2008. You can see out of the 5 major players we're watching in that space, 0 are falling, 5 are rising, really led by Woodside Petroleum. It is up by over 6%. This is in terms of market cap. You're seeing Santos up by almost 13%, Beach Energy also incredibly strong there, and then Oil Search up by over 10.5%. Where we have seen the negative effect, I guess, is in terms of those airlines. Also, as Dan was mentioning, this is going to weigh a little on their profits, so you are seeing some of these air players in the region coming under pressure. Singapore Air down almost 1%, Japan Airlines off by about 2%, and All Nippon Air is also weaker by 1.5%. But certainly this surprise deal did catch the market by surprise, so to speak, and you are seeing very solid gains right across the region. Also, of course, the fact that we have seen the dollar rise, sending the yen weaker, a very solid move coming through on Japan's Nikkei index, up over 2%. Again, INPEX, an oil producer, one of the best performers there, up by more than 11%, in fact, the best performer on the Nikkei. And similarly in Hong Kong, you are seeing those energy producers lifting the Hang Seng index, CNOOC up by over 7%, PetroChina, Sinopec. So all of this of course, having a massive positive effect in terms of equities, but you are seeing bonds completely sold off on this. This is, of course, on renewed expectations of high inflation. You're seeing the Australian yield on the 10-year note up by 7 basis points, 2.8%, so bonds absolutely sinking there, and also similarly in Japan, a little bit of movement coming through in the yield as well, but certainly a very impressive day for equities, particularly in that energy space. Heidi and Rish.
Thanks, Jules. Janet Sardi there with the latest. The energy company's on a bit of a tear there.
Yeah, great day for oil producers. Let's get the latest First Word News with Sophie Cameron. Sophie.
Heidi. Donald Trump's nominee for Treasury Secretary says there will be no absolute tax cut for what he calls the upper class. Former Goldman Sachs executive Steve Mnuchin told CNBC high-income tax reductions would be offset by fewer deductions. He also criticized the Dodd-Frank Act and said he'll label China a currency manipulator if warranted. But Mnuchin says tax reform is his overriding priority. Korea's embattled president may have bought herself some time after offering to resign. Part of the president's ruling party that supports impeachment says it will accept her resignation at the end of April. It gave her 9 days to produce a timetable for leaving. The group of about 40 lawmakers is seen holding the balance of power in an impeachment debate, which is due in Parliament on Friday. Credit Suisse is said to have frozen accounts to determine whether American clients are hiding money from the IRS. Sources say it's investigating phone numbers or powers of attorney to identify the owners of certain undeclared accounts. The Justice Department wants to know why the bank failed to mention $200 million in assets held by U.S. citizens who have admitted conspiring to defraud the IRS. Valiant Pharmaceutical shares plunged after talks about the sale of its gastrointestinal drugs division to Takeda broke down. Sources say the discussions fell apart mainly over the price. Valiant will now keep and invest in its Salix unit, but could pursue interest in a future sale. Failure to sell Salix would increase pressure on the company to find ways of reducing its near $30 billion of debt. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Sophie Kamarudin. This is Bloomberg.
All right, Sophie, thank you for that. Well, coming up next on Bloomberg Markets Asia, we speak to BMW's Asia head, ask how the region's sluggish growth is affecting sales. That's later this hour.
But next, finding out what China's better than expected PMI numbers really say about the economy. A quick check of the latest business flash headlines with former hedge fund manager Steve Cohen and SAC Capital agreeing to pay $135 million to a group of investors. It settles the last major legal claim against the firm. SAC was the target of the biggest insider trading investigation in U.S. history. The deal means that Cohen avoids having to testify about interactions with Matthew Martoma. He's a former SAC manager serving a 9-year sentence for insider trading.
Well, China may have added new restrictions to contain the wave of capital outflows. Sources say Beijing won't approve requests to transfer cash abroad unless there is a valid business reason. China is introducing fresh measures ahead of the expected rate hike this month in the US.
A former Bank of Korea policymaker says he sees worrying echoes of the Asian financial crisis 2 decades ago. Choi Woon-yul warns that Korea's household debt could spark a similar crisis, and also says that the President Park influence scandal is adding to the risk. Current policymakers have said the record $1.2 trillion of household debt does not pose a serious threat. Well, at least yet.
All right, let's get back to our top story now, because these gauges coming out from China really showing surprising strength, maintaining that improvement since the middle of last year. However, it really just reinforces the picture that it is the old economy that is driving the recovery.
Yeah, so just how solid is this stabilisation? Getting over to Singapore, we join market economist Bernard Au. Bernard, thanks for joining us. Well, you know, as Heidi was just mentioning, it shows that we've got the old economy doing the heavy lifting. That's good news at the end of the day. I mean, perhaps it's also bad news because it shows that the rebalancing hasn't really gained traction.
Well, I think that it's also good news that because according to our surveys, the Caixin PMI, it does show that a lot of the demand coming through is from domestic demand. So I would say that it's probably not just the traditional traditional industries driving the growth. It also is the smaller companies or the medium-sized companies as well as the large companies driving overall improvement in the Chinese manufacturing economy.
Yeah, Bernard, I wanted to show you this chart, which I guess looks at, you know, the last couple of years when it comes to this PMI gauge. We haven't seen the official manufacturing PMI at these levels since midway through 2014. But, you know, as you say, as we've been talking about this sort of divergence picture when it comes to the old and new economies, the larger state-owned companies versus the private SMEs, how would policymakers be reacting to this? Because clearly this leverage-driven recovery is not sustainable forever.
Well, I think in terms of policy-wise, the government is probably still going to stay on the course of rebalancing the economy. As again, the survey shows that we have seen improvement in the manufacturing economy, so there is some form of growth coming in through the Chinese market, and I think that going forward,